is hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both. Jamal, thank you so much for coming on, filling in for Nick, who's traveling to San Diego. I hope everybody's going out there. But right now, thank you, Jamal, for coming on. Really appreciate it.
Oh, it's good to be here, man. Good to hang out with you guys for a few hours. Good to hang out with you.
I didn't know the last time I did the morning show with you, Jamal.
I know, it's been a minute. It's been a while. It's been a couple of years. Yeah.
Jamal's a night owl. We put him in the afternoon and stuff like that. He the sunshine like a vampire. Which happy Halloween, everyone.
Hey, how about it? You're right, I am. I kind of like the afternoons more, but it's good to switch it up every now and again. You know what I mean?
Yeah, but you're an early bird. You're asleep by 2 p.m. So
That's kind of true. Hey, does anybody dress up as vampires anymore? Is it the vampire, Frankenstein, that kind of thing anymore? Or we don't do that anymore?
I don't know.
No, I would say no by the end.
Look, real talk. I kind of feel like on this day we start to see like who people really are. I don't know if I'm serious.
I'm
dude.
a cat. I have cat ears on.
See, those are the cute ones. I mean, like, there's a lot of people who dress how they really feel on this day.
Mm-hmm.
So if you see any vampires today,
Enough said.
Jamal, what is your Halloween situation? Do you get trick-or-treaters?
This is a really good question. We do get a couple. We do get a few. We live on a pretty busy street, so we get a few. But then we move. This is a good question because this year we're not. Things are changing. I mean, as you guys know, my oldest two are in college. My youngest is 13. This is probably the last year. And we...
Oh, that someone in your household will be trick-or-treating.
Exactly, yeah. So, we're I'm not sure what we're going to... I really have no idea what we're going to do tonight. I know we've been invited to one party. We may roll over to that. But we're not going to be walking around with him. We didn't last year, and we're definitely probably not this year. We actually were discussing how we want to do it. Like, we and you know what? This is how you mature, like as his parents. Like we're discussing ahead of time. Okay, what can we allow him to do? What are we not? We're going to tell him not to do because what time is he going to be home? Like because he's really self-sufficient, and we want to make sure that he gets home early because it gets a little crazy after a while. It gets a little dark. So we actually were discussing ahead of time how we want to handle it, but I don't know what our night is. I think we're going to set it up like this. We're going to be like, look, you can stay out as long as you want if you're with us. Otherwise, you got to be home by XYZ time. So we're going to force him to hang out with us at some point.
That's a terrible choice.
This is a responsible choice, Vanetta.
I know. So, but if you and your wife go to a party, are you dressing up?
Now, no. I don't know. I don't know.
You're just going to roll up to the party in what you wore to work? Man,
Damn
that's
right.
weak. That's
Damn
weak,
right.
Jamal.
Yeah. Damn right. I'm a traitor.
I'll save you. I'll save you here, Jamal. We have a party on Saturday, but I got a hockey game on Saturday, so we probably won't make it. And my wife was going to make me the Fonz. but nobody will know what the Fonz is. That's what
Yeah.
Yes, that's what I told her.
You could go as Andy Garcia in like Ocean's 11. Like you just like.
What do you want me to put a suit on? That's what I look like.
Yeah.
Costume or makeup for that.
Your wife wouldn't be mad.
She almost took a job working for him, doing his hair and makeup and traveling with him back in the day. So
that would have been a step up for her.
Miami dude. He's another Miami dude like me.
Yeah. Yeah. Yes. He is. Yes. Yeah.
I mean, if he did, who knows where things would have wound up, Tom? You know what I mean?
Jamal,
he has a thing for handsome Italian gentlemen.
Jamal, you could wear your new trading jacket as your costume.
I know I could do that. You see the new trading jacket, a little shine, tastylive, all that. Yeah. I like it. Yeah, it's cool. Hey, Mikey, you're gonna be sporting those.
Yeah.
They look good.
They do look good. I don't know if you saw it. I did text you guys and say you weren't worthy, right? You know that, right?
I know. Listen, I know that feeling, okay? Because before, when I was working at SIBO, I used to go on the floor, do these little hits, Volatility 411 things, and I used to wear somebody else's jacket. So trust me, I know the feel. I actually feel more worthy now than I did before. I'm wearing somebody else's jacket on the floor. I feel like such a fraud, dude.
When's your first day on the floor?
Next week, November 6th, Thursday, November 6th, we are doing
Awesome.
OTCL on the floor.
Awesome. That's great, man. That's
Yeah,
great. That's great.
Yeah, it's good stuff. Should be fun.
Have you been able to take your kid down there to see the whole operation? It's really cool.
Trading floor?
Yeah.
Last time I did, my youngest was too little. It was when I was at SIBO. I brought the kids in for a bringing kids to work day. It must have been like 2018, 2019, maybe 2019.
Aww.
Yeah. I got pictures of them in the office, pictures of them on the floor and whatnot. Yeah, it was a long time ago. Feels like a long time ago.
Oh, it's a long time ago. We did. You remember when Vanetta, you were around? Remember when we did that? What was that show? It was supposed to be on Oh no, you weren't. That was Think or Swim back in the day. Wall Street Warriors, it was called.
Oh yeah, no, that was before my time.
Yeah. Wall Street Warriors is supposed to be a show that was going to be on TV. The first 2 seasons were. The third season, which was a season I was in, never made it to the prime time. It played in Europe. I think Oprah's kid bought it, and then Oprah got bought out. Anyway, they sent it to Europe. It never aired here. But
I saw it. I actually saw that season.
I think it's on YouTube. I think you can watch clips on YouTube.
But I remember that season. That was like 2008, right?
I believe so. Yeah.
I was watching it on some I don't know. It was an off-brand channel, but I was watching it.
Yeah, I'm the Ocho channel. I'm the flip side of a 45
You are the trading version of David Hasselhoff. You're big in Germany.
I mean, and it's crazy because I watched that season. I remember that season when I went back and watched it after I worked here. I went back and watched it. I was like, oh damn, I didn't realize that was you at the time.
Yeah,
and I remember seeing that season for sure. I used to like that show.
Yeah, it was fun. It was fun. It was fun to make. It was fun to do. But I brought Nick down to the old floor, and that was just when they, just a couple of years later, they got rid of the old floor. So now he's been on the old floor. He's been on the new floor. Not too many traders got to do that, which was kind of fun. So he got to see the difference between the two different floors, which was nice. So it was good. Anyway, it's just a fun little story. My career went nowhere.
That was the best ending. That was pretty good.
Vanetta, what about you? What's up with Halloween? What are you doing?
So because it is going to be decent enough, me and my motorcycle peeps are gonna do a costume ride tonight. We're gonna start in Rosemont and then ride into the city, and then we're gonna whip candy at people going like 30 miles an hour.
one more time, you get another week. One more time.
Yeah,
right?
Yeah. I like costume rides because you can't help but smile at a bunch of bikers like in goofy costumes. Like there's a guy, he's just dressed as Elmo. He has like the fur cover for his helmet. It's a whole thing. But
if I see a dude dressed as Elmo on a bike, I'm running. I am scared. I heard you rode through my neighborhood. Bill told me you rode through our neighborhood like a week or two ago or something like that.
Yeah, we rode through you live in Oak Park, like River Forest?
I'm in that. The exact location of where I live is undisclosed, but in the general vicinity.
Yeah. So you might hear us, but yeah, if you see a bunch of bikers, just wave and we'll throw you candy.
How do I know it's you? There's no other group of bikers in the general area?
Nope.
I mean, there's a lot of us. So
yeah.
But it's fun. I love Halloween. Like it's one of my favorite holidays. I don't know. Did you guys see the Office pumpkin contest? Did you not see the winners or the contestants?
No, who won?
I actually don't know who the winners are, but I took some video and I'll post it to our social so you can vote for your own favorite. People are talented. When's the last time you carved a pumpkin?
Maybe last year. I mean, my wife is like in the holidays, so dude, you have no idea. So,
oh, really? Oh, is she?
Yeah. Every holiday, bro. Like, yeah.
She's from Wisconsin.
Nah, I've gotten better about it. I used to hate that kind of thing. I wasn't really. I didn't grow. We didn't do holidays like that.
No man loves pumpkin spice.
We didn't do holidays like that in my house growing up, and she's been really good about it. Matter of fact, came to a head maybe about 15 years ago, and she's like, "Do it for the kids. Do it for the children." And I was like, "All right." And
Open up your heart, Jamal.
I've been
Open up
leaning
your
in.
heart for crying out loud.
I know.
Black heart. It's no good. It never will be. Get some holiday spirit in you.
Whatever. You understand me more than anybody. I know you're the same way. There's no way you caught. When's the last time you caught me?
You have a black heart and you know good never will be. It was what my mom used to say to my dad. That's the only reason why it came off my tongue so frequently and so easily. I do it for the kids, Jamal. You know what I mean? I got 5 of them. You got 3 of them. You know, it just, you do it for the kids. You do it for the kids. But it's over. Like, Vinny did it this year. It's done. I don't think I'll have to put any stuff out anymore. Although now you got grandkids.
You have grandkids, you boomer.
Yeah, you're right. He's not mobile yet, but another couple of years he'll be mobile. He'll want to.
Yeah, but then you have another one on the way. Like it's a never-ending cycle until you're in the diaper.
Right. Right. And then, I have to become a snowbird first, and then I go get my diaper, and then I come back full time to torture all the kids. So they have to take care of me. So that's what I'll do. That's my plan. That's my plan. I'm sticking to it.
All right. Well, that is fine. How about some overnight action? What was the market doing overnight? Nice little reversal from the all red day that we had yesterday. Then overnight, everything's fine.
Yeah, what a difference a day makes, right? I mean, all the earnings, I know you'll get to them in a moment, but all the earnings are higher today. But here we are, right, Jamal? 6,900. I mean, I know we're 69.12 right now. We just rallied 10 handles. We've been sitting up 45 all night. But we really haven't gone anywhere. Again, it's much like 2 weeks ago where we had some violent moves back and forth, outside the expected move, ending pretty much inside the expected move for each week. And now here we're doing the same thing. I mean, what did we start the week at? I mean, I think we started the week right around here, 6,900 or so. I mean, I know you'll get to it in when we get to this week in stocks, but kind of a weird little market here.
Yeah, it's really been all about the earnings, right? And I mean, we know some of them didn't necessarily go so great. Some of them obviously last night went great, and so I think that kind of lends us to sort of stay in the same general vicinity, while the names, on the other hand, are moving wildly to some degree.
Do you both remember what was your year-end target for the S&P?
Oh man,
way lower than here.
You're like, not here.
Way lower.
I remember I was significantly higher than Sosnoff, better than that. That's all I remembered. It was a personal thing just to beat him, 3 out of the 4 quarters was all I needed to do. And I think I did that. So
I just wasn't sure if you guys remember, because I mean, nobody knows, but it's crazy how we have people who are gonna, each quarter, who have guesses that are within $1 or $2. I don't know how people do that, but.
Well, they're a lot luckier than us. That's what it comes down to. I mean.
Yeah, whatever. Yeah, exactly. It's a lot. I do got to. You mentioned beating Sosna. I gotta say, and to both of you, first of all, Vanetta, you're incredible with the way you put together these social posts. They really are incredible. And the ones where you and him, I mean, you actually. I'm not just saying this to butter up. I'm watching them. You beat him in a lot of these trivias. You beat the one with Charlotte was particularly good because again, my mom lives in Charlotte. I know a lot of it. I actually didn't even get the Bojangles one. I'm surprised I didn't get
it.
That.
Was a tour de force performance. Gus and I are recording it, and I was there. He didn't have anything on him. He didn't know the questions, and I cut it out of the video. But at one point, I just yell, "How are you doing this?"
It's true. It really is true.
It was good. It was good.
It was good. Back to the market for just a quick second. The one interesting thing is volatility nowhere near its lows, under 18. I know it's only 18 and a half, but it's only down 10 cents today. So volatility, I think we've seen the floor in there for a little while, even if we get a rally in the market above new highs. So we'll see what happens there.
It's still around 16 and change, right?
VIX. I'm talking about /VX. Yeah.
Oh, that's probably 18 and change?
Yep.
Even
18.
still, both of those, right? The index being at 16 and change and the futures being at 18 and change. I feel like that's been the case for the better part of 3-4 months, maybe longer.
Yes.
It's kind of, I think it's indicative of how much this, first of all, I think this is one of the greatest markets we've traded in a while. Seriously. I mean, it's so enjoyable.
Two-sided action yesterday also. Bulls and Bears both had time to make money. I mean, I know Nick was slinging futures back and forth yesterday. He caught himself in a little rhythm. If you catch yourself in a rhythm with futures, which is not my forte, but if you catch yourself in a rhythm with futures, it's a wonderful day. He was real puffy chested when he called me.
Yeah, maybe gold trading ability skips a generation.
Possibly. I hope the never mind. I'm not going to say it.
Hey, we got a great show for you today. Thank you so much to Mr. Jamal Chandler for stepping in. Mike, Nick, and Katie are on the road. They are headed to San Diego. If you're anywhere on the West Coast, see if you could travel on down to see them, tastylive.com/events. But for this moment, first, happy Halloween to everybody. Please be safe. Make good choices. But we got a good show for you today. At 8 o'clock, the man's already in the seat, but we got the weekend stocks with Jamal himself this week. Why don't you say what you're going to talk about this week? I don't need to say it.
This week was mostly about the earnings, right? And the meeting between Trump and Xi. I mean, that was really the big thing. And we saw a lot of different movement around those things. So it's going to encapsulate a lot of that.
Okay. Jamal breaking it down in his own unique way, as he always does. That's going to be at around the 8 o'clock, the top of the 8 o'clock hour. Then 8:40, it's Fast Market. This is where we have viewer-submitted trades. So Jamal and the Bat are going to do as many viewer-submitted trades as possible. It's always so interesting to see what people come up with because they're, looking at symbols and underlyings that may not be on, our radar, but it's always a good time. And then 9 o'clock for our market measures, shift signals and surprises, a market deep dive. It's a Baby Shark production right there.
Yeah, he's going to come on the show and enlighten us, Jamal.
And this just made me laugh. I'm trying to keep it professional, but it just says live from the trade desk, and it just says Marty.
Oh, we got Marty today. Good. Yeah,
he's one name. He's like Cher. He's like Gaga. He's like Beyonce. It's just Marty.
Yeah, who are the if I say Leo, who do you think of?
DiCaprio.
Right? Yeah, you do. I mean, I was thinking about that the other day. I mean, there are some one-name people out there. I mean, there's a lot.
Yeah, I mean, you could just say Taylor, and you know who I'm talking about.
I know, but nobody. But everybody says her first and last, of course, right?
Yeah, of course. Yeah, that is right. I say Dr. Taylor Allison.
You're one name, Vanetta. One name. I don't know the last time I heard your last name.
Bat, you're two names. You're the Bat.
I'm the Bat. Yeah, I was not special enough for one word.
You're like Ohio State. You're the Bat, the Ohio State.
Yeah, that's what I'm going to run with this weekend when I talk to the wife. I'm the Bat. Yeah, like the Ohio State.
That's fine. But Marty's going to come in from the trade desk. It's always a good time when Marty comes in. That guy is hilarious. And then I'm going to take some phone calls. Bat and Jamal are going to take your calls. If you've got questions, you just want to chat and give us a shout out, we'd be more than happy to talk to you. It's going to be around 9:30. So grab yourself a piece of candy from your stash, and you want your daily dose?
Yeah, sure.
Yeah.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire. Our leading story, top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It is October the 31st. I love it when all these things align. It's a holiday. I like when the end of the month ends on a Friday, and just all the things are thinging. I am a cat, by the way, if you cannot tell. I'm trying my best. But this is the part of the show,
right? When we end at the end of the month on a Friday. I mean, what could be?
I know, it's just nice. It tickles something in my brain that I'm like, ooh, I really like that. Anyway, this is the part of the show I like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Bullish options plays are set to boost the S&P 500 gyrations around the 7,000 level. What does that mean? The S&P's rally of 17% this year to record highs has brought the index close to that 7,000 mark. Strong demand for call options this month pushed the 1 month rolling calls to put traded ratio to its most bullish level in 4 years. Does this mean anything?
Remember, for every buyer, there's a seller. So we don't know which ones of these are opening and closing. And I guess you could look at open interest if open interest has grown on that strike. But you all know that that means absolutely nothing.
But it feels different, though. But like, I know that that's true, and you are dropping facts, but
Sure.
market feels different, right?
Yeah, if it felt like the S&P had kind of stalled at like that 6950 area, like we might not see the 7,000. I remember Nick a few days ago on the show was talking about 7,000, as a given. We had an expected move of around 100 handles on the E-mini S&Ps, which brought us right to about 7,000 on the E-mini S&Ps, a little bit lower on the SPX. And then, with yesterday, it was like, well, there goes 7,000 this week, maybe next week. And now all of a sudden it's on again. I don't know if we're going to get there today on the E-mini S&Ps. I mean, that would be a move of biblical proportions, be another 70 handles or 150 handles total on the E-mini S&Ps. But it seems like that big round number is a given kind of prophecy. You know what I mean? Like
Sure. What are your thoughts, Jamal?
Actually, he was getting to what I was about to say. I mean, I feel like at round numbers, we see these things. There's a lot of activity around numbers. I mean, whether it's S&P at 7,000 when it happens, or whether it's gold at around 4,000, you see it's been hanging around here. I think it does create this area where a lot of people get interested in a multitude of ways. To Tone's point, like just because it's 7,000 doesn't mean everybody's buying calls, but There's a lot that happens at these levels. I will say that.
I love how traders and like the crystal girlies are basically the same. Like it's all about numerology. It's all about the vibes. It's all about patterns, signs.
There's something to it. I mean, I believe in the things about sun signs. Not everything. Just because somebody's an Aquarius doesn't mean you know everything about them. But there are similar traits.
I'm an Aquarius.
Oh. Forget what I
said. Tony is a true Cancer, though.
Yeah.
Really? Actually, you think so? My wife says the same thing.
You are emotional.
Yeah. Well, I was going to say, he's a nice dude underneath. You don't see it, but yes, true. Actually, Cancers, it's actually kind of true.
Yeah.
You two girls, man, you guys are nuts.
Hey, moving on here, let's talk about oil. An oil supply glut could sink prices to as low as $35 a barrel next year. I'm going to buy a Hummer. The U.S.-China trade truce probably won't change that. What is your outlook for oil, and what are the opportunities?
I love this idea. I know Tony does too. Tony has a truck. I just got a Bronco a month ago, so this is great. It's 15 miles to the gallon. It's terrible. But as far as actual oil, I don't know. I thought it was going to be a lower range. Honestly, a couple of weeks back when we were heading down to that 50-something range, I thought 55 was going to be the new normal, and that changed. So I don't know. Geopolitics can always change it.
Oil's been low, but really even lower than that have been some of the oil-related stocks like ExxonMobil and Chevron. They've really gone nowhere all year long. Matter of fact, ExxonMobil's gone sideways. I mean, so oil-related stocks, maybe that's the next kind of if you're looking to play something that's kind of lagged the market a little bit here. I think it's where good traders go to die, but you can go there if you want.
Anything in like a USO?
No, but he just reminded me. Exxon and Chevron have earnings this morning, I think.
Yeah, they did, and this is another example of like the numbers were good, and the stocks don't do anything. It's just all about like forward-looking numbers. Exxon is down $2 or something like that on decent.
Another commodity in the spotlight, soybeans extended their rally as traders factor in Chinese buying. Soybeans had back and forth sessions centered around the China-U.S. meeting on Wednesday night, but it looks like China's agreed to buy, I think, 25 million barrels, or what they had previously agreed to, of soybeans, which is, of course, great for American farmers. So let's talk beans.
This looks like a buy the rumor, sell the news event. I mean, for the last 2 weeks, soybeans, and I'm not a commodity trader. I don't claim to be. I claim to be the world's worst commodity trader. But if it ever looked like buy the rumor, sell the news, this is it. For the last 2 weeks, soybeans have gone up in biblical proportions. Today they're actually down small, 525. I guess that's a half a percentage point, but they've gone from, I don't know, around 1,000 to 1,100, which is like a year move in 2 weeks. So I would be very careful here with soybeans.
It's another one of those things that makes it such a fascinating year. I've never seen politics interact so much with the stock market, like directly, and so many different instruments. And it hasn't even been a full year yet. It's kind of wild, but yeah, this has definitely been one of them. And like Tony said, I don't really trade soybeans a whole lot, but definitely been watching the move, and it kind of does feel exactly like Tony said.
Yeah.
Yeah, we made a dumb video for social about like a trader haunted house, like the things that haunt traders. Is one is just like, oh, well, the president tweeted, so good luck with that. Like, because it could move your position good or bad. Like, you just don't, but you can't factor in for that because you just don't know, when.
Nope. And maybe that's one of the reasons why volatility's been staying bid this week. So, you've got all kinds of news related events, which leads you to how do you take advantage of that? And that's what this whole show is all about.
Go ahead.
Yeah, that's a good point. You're right, Vanetta. I mean, you can't factor it in. A lot of times the things that we think are coming show up in volatility, right? Like they show up in the volatility numbers. There's no volatility calculation for like a tweet that's going to come out when nobody knows it's going to happen. It's crazy.
Right. Let's get to all the earnings from last night. Start first with Amazon. Amazon raises its spending forecast to $125 billion. Yay for CapEx this week. CapEx is just doing numbers this week. But third quarter results topped estimates. Amazon's cloud revenue accelerated 20% to $33 billion, which CEO Andy Jassy said wasn't a pace the company had seen since 2022. Amazon's overall revenue came in at $180 billion versus 177 estimated. What'd you do in Amazon?
Amazon, we actually have a decent trade in. This might be the one that goes a little bit too far. He's got a little bit of a crab trade on here. So we're long the D30 calls. We're short 2 of the 240 calls that expire today. So we'll probably have to take those and roll them up and out possibly. But we're also short the 210 puts. So he's gonna have a little bit of a profit in Amazon, but some of the other ones are going to be monsters.
I think it's incredible and admirable that you two can trade an account together. I don't know how you do it.
It ain't easy.
I know it ain't. I'm hearing you talk about crab trades. I had to ask Mike the other day on the show. I'm like, what the hell is a crab trade again? I hear you guys talk about this over the years, but I really don't know what it is.
It's a synthetic long where for everybody, so that everybody knows, because it's not something we talked a lot about on this show previously. Nick and Mike would do it all the time. It uses a lot less buying power. It's just a creative way. You still have upside risk, similar to a strangle, but a lot less upside risk, because what you do is you're buying a further dated, closer to the money call, and then you're selling one time, and you're selling 2 further out of the money calls in the 0-day or weekly options that are inflated for earnings or something like that at the expected move. So you're hoping that the stock still stays inside the expected move, much like a strangle. And if it does, you get a lot more bang for your buck than a strangle. Like a strangle, you might be able to make, $1, $2, or $3 on a crab trade. You can make significantly more than that because you've got that deeper in the money call if you get the direction right. And then if you want to add a naked put to it, which gets a little bit more buying, a little bit more premium to it, you can do that because you're already using the buying power because you're doing 2 front month calls. So it doesn't use any more buying power to sell the put, but it does give you more delta. It's kind of like a add-on delta. It's a negative delta trade when you put it on. Inside the expected move, it quickly turns to a real positive, like 60, 70, 80 delta positive trade if it stays inside the expected move. Amazon looks like it's up around 23, is just outside the expected move.
It's a creative trade for sure. I just did a calendar call at the 250 strike, in which it got up there fairly. I wasn't sure, but I figured if it was going to get crazy, it would get up to 250, and well, it kind of did.
250, 253, that's right where it is. That'll be perfect for a calendar. You might have to wait. What months did you use?
I think I originally, I originally had the first 2. I originally had this week versus next week, but I ended up changing it. I liked Mike's idea of just using. It was actually cheap enough to do D-Snow, so I just did D-Snow.
Got it.
Hey, in other earnings news, Apple sees a big December quarter driven by strong iPhone 17 demand. Apple reported fiscal fourth quarter earnings on Thursday that beat analyst expectations, and the company provided a strong forecast for the December quarter. I guess everyone's getting an iPhone for Christmas. Apple's revenue came in at 102 billion, 102.47 versus 102.24. iPhone revenue came in at 49 billion, just under what was estimated, but other products revenue outperformed. What did you do in Apple?
Apple looks like it's up around $7-ish, $5 to $7 so far this morning, higher end of it right now. He did a classic crab trade here. He's long the November 275 calls. So the stock is at 278 now. It was 271 yesterday. So he's buying the just at the money, just outside the money, to go to those people who don't know what crab trade is. And then he sold the October 0 days, the 282 calls. That was just outside the expected move. The stock is 278. So those out of the money calls should have very little premium to them. And that 275 call, it gets some gamma to it, gets a little bit of premium to it. It's in the money, so it's going to have $3 of intrinsic value to it. So that holds some value and gets real meaty, and those out of the money options deflate. And hopefully you have a nice profit. That's what we're looking for. It was an upside play.
Those weekly 282 calls you said?
Yeah, the ones that expire today.
How much were you able to get for those?
I could tell you.
Maybe. No, probably not the dollar, huh?
No, I can tell you.
Curious. Right. I was curious. I didn't do anything. This was one I didn't really. I like to play earnings for moves. I mean, that's just kind of what it is for me. I like big moves, and I didn't really think this one was going to move super big, and it didn't.
You like big moves, and you cannot lie.
The 282 and a halves were just under $1 or so. And,
okay, nice, yeah.
And the Nov ones were around. Well, he did the whole thing for 365. So he got about the calls he bought were around $5. The ones he sold were about 90 cents or something like that.
Nice.
Coinbase earnings topped estimates, was helped by robust crypto trading volume. Revenue tied to transactions rose to $1 billion. That's up 37% from the second quarter. Hachi machi. Consumer trading activity on Coinbase jumped to 59 billion. That's also up 37% from the previous quarter. All your Coinbase are belong to us. What are you doing in Coinbase?
Coinbase is one that I get a little freaked with it, like Bitcoin and a lot of the offshoots like that SUI that Ryan's been talking about, Ethereum. They've been kind of weak here. Nick sold a put in December, the 250 put. So with coin up around I don't know, let's call it $15 or so. That should work. We'll probably look to manage a winner, although it is 49 days out. But I think you got to manage these pretty quickly. Talking about cryptocurrency for just a quick moment, Bitcoin up $3,800 back over 110.7 on Bitcoin, still at the lower end of its range.
Well, it's the last day of October. Jamal, do you trade Coinbase?
I do not, but that's exactly the point I was going to make about October. Obviously, this kind of hadn't materialized much, but when you think about over the past quarter, I mean, I believe in this quarter it had all-time highs, right? Like 127, 128. Talk about Bitcoin.
Yeah, September was a great month. Yeah.
Yeah, so I mean, it makes sense that their earnings ended up going well because I'm sure there was a lot of trading activity.
Yeah,
markets aren't as good in coin as you would expect either. So
that's why I'm trading.
You got to be a little bit careful. A popular name would be a fringe player for me if I was looking at on the option side.
Reddit shares also rose on an earnings beat and that company's strong forecast. Reddit said sales jumped 68% year over year in the third quarter, while net income was $163 million, which was $133 million more than they'd logged the previous year during the same period. So that's quite the improvement. Reddit's revenue came in $585 million versus $546 million expected. What'd you do in Reddit?
Markets are horrible in Reddit too. I mean, if you another popular name that I wish was which was a lot better. Nick had on a leftover 1x2 put ratio spread, which is omnidirectional but slightly bullish here, and the stock being over. Yesterday was around 195. Today it's going to be closer to 220, 215, 220. So he has a 1/2 put ratio spread that he put on that will be a full winner. But he's had that on for a couple of days. No, he actually just put on the other day. So small winner, no real consequences there.
First of all, wow. I mean, look at this. This is opening day, right? Stock was trading 51 then. Wow, we've come a long way. I mean,
it's been one of the better IPOs to trade and for, sustainability.
It's definitely been a performer. There's no doubt about it. But option markets are $1-ish wide.
Yeah, they can be a little wide. I did the 250 calendar, decent in that one. So I'm hoping it just like it opens up and keeps going, baby.
You play any upside.
Always.
I don't know if you guys traded it, but I will just mention it briefly. Roku had their earnings and they see deceleration in quarterly revenue growth. Those shares did fall. The company expects revenue growth of 12% for the current quarter. That's below the 14% that was expected. Shares were down around 5% after the bell. The streaming platform, though, is up 34% so far for the year.
Where's Roku trading right now?
Roku is closer to $96. It was
it's over, bro.
Close at around 100.
It's over in that stock, dude. Who do you know has a Roku that uses a Roku anymore?
Exactly. Not a lot.
Exactly. We had one like a few years ago on my youngest's TV when he was like 6, 7. We used to.
We all had them because they were on the tastytrade. They gave a bunch to Tasty.
No, they didn't give them. We bought them. We were one of their largest orders. Going back when we started.
It was like 2010, 2011. Yeah.
Yeah, it's about 15. Yeah, about 15 years ago. We bought like a couple of thousand. Roku. We carried them all up. We had that video where
we have a video somewhere. I don't know where it
is. Yeah. And the CEO still wouldn't take our a call. We tried to contact him quite a few times, try to get him on the show or something like that. He would never return our emails, even though we were one of the largest individual buyers of Rokus, because we handed them out. Anybody that signed up for our show, we gave you a free Roku kind of thing. Anyway, Nick played the downside on here. The kid's on fire. Stock's down around $4. He bought the Nove with 21 days, 95 put, and he sold the October 88 put. He did that for around 360. It had about 10 or 15 short deltas to it. Stock down $5. Maybe you make a buck and a half on this.
Nice.
All right.
How do I subscribe to Nikki's newsletter?
Yeah. Well, you didn't want it yesterday. You want it today. You want it today. You didn't want it yesterday. But it's all about preparation, right? There you go.
I don't know if you traded First Solar, but First Solar sales top estimates, and the company's going to open another U.S. factory. The biggest U.S.-based solar panel maker beat expectations for third quarter sales. Shares were up around 5% in extended trading. The whole solar panel industry kind of got rocked when the subsidies for that whole sector kind of got taken away, and that's a whole other separate thing. But glad to know that the stock was doing well, at least after their earnings for solar.
Yeah, I haven't traded. Do you?
Is it down?
I think it was up last night. I don't know if it's down this morning.
No, I'm smiling because I have an affinity for First Solar. It's it was like my first big trade when I was trading at a prop firm. It had just come like an IPO. Yeah, I made like 50K on it. The whole firm knew that I did it, and I got in trouble. I got in trouble because we had the guy who was my manager at the time. We were supposed to tell them about every trade we did, but at the time the firm was mostly selling stuff, and I knew he wasn't going to like the fact that I was buying this and staying longer for earnings.
Ask for forgiveness.
Exactly. And so it was me and like 3 other people. I'll never forget the day I made it. Everybody knew about it after it closed and they saw it. And then he pulled me in a room. He's like, okay, tell me why you didn't tell me about the trade, because I'm going to have to answer to my boss.
Such a bad boy, Jamal.
I know.
I mean,
but I didn't trade it for earnings.
Yeah, I didn't either. First Solar has some funky markets in there too, a little bit wide. Be careful.
I put this story in just for me. It's my segment. I can do what I want. UMG, Universal Music Group, topped revenue forecast because Taylor Swift's album, The Life of a Sugar. This is true. It boosted sales so much. Every time UMG has a bad quarter, it's because Tay has not put out an album. On the earnings call, they're like, want to give a shout out to my girl Vanetta. She ordered 15 copies of this album.
So I have a couple questions. One, UMG, is it a new? I mean, there's no way it's new, right? Like, what did it use?
No, it's the most established. No, Universal Music Group. Yeah, it's the world's biggest music label.
Like, is it like, you remember like BMG and all these other ones back in the day? I'm just wondering.
Sure, yeah.
Is it formally that?
Bertelsmann Group. Yeah, but that was based in Germany. But yeah, now UMG. But I think there's been a lot of consolidation. It's not my area of expertise, but
the hell it isn't. I didn't even know that's what BMG stood for.
Oh, Bertelsmann Music. Yeah. Well, I know weird German facts.
You do, yeah, you do.
And you're fluent in German, which is
weird. Anyway, I don't know if you can trade UMG, but good job to UMG. They're also doing a partnership with an AI company to make ethically responsible AI music. So that's cool. Whatever.
The other question I have is she going to
UMG? I think it's just UMG.
UMG?
I've actually never seen the ticker neither. The other question I have is she going to remake the 1995 classic Showgirls?
No one. That is a tour de force performance by Elizabeth Berkley as Nomi.
Yeah, that's what I just watched it again a few months ago. It's a really great movie to be honest.
Wow, Jamal, we're learning on Halloween. We're learning about people. You are correct.
Oh man, that's so funny. All right, we got to keep it moving here. Core Scientific shareholders rejected a $9 billion CoreWeave offer. The deal is terminated. They said the offer undervalued Core Scientific, the crypto miner. So I was surprised by how this all turned out. CORZ and CRWV.
Yeah, I thought this was kind of a done deal, honestly.
Yeah, I did too. I thought it was just like, okay, well, that's going to happen.
I think this is something to watch. I feel like CoreWeave has an interesting spot in this whole AI thing. If you don't believe in AI, then this is going to be the first stock to fall. If you believe in it, I think this thing is going to do something interesting at some point or another.
Well, it's up $2 this morning, but it's well off of its highs around 180, off of its recent lows of 85, sitting at 133. So kind of in the middle with an IV rank of 20. So place your bets, either side.
Netflix out of nowhere just announced a 10-for-1 stock split. The stock is currently one of 10 stocks in the S&P 500 with a price above 1,000. What are your thoughts? They're also bidding for Warner Brothers Discovery. So.
Yeah, I think I think a lot of people were looking for this split at around 1,000. It's finally coming. I know I played for it about 2 months ago. It never happened. So early on this one, it's kind of sold off a little bit from its highs. It closed at like 1,088. It's 1,002. I saw Netflix about $15 higher than this, pre-market. So kind of a muted move for this earnings, but or for this 10-for-1 split. But all the research shows it stays a little bit bullish after this. So maybe if there's a little bit of a bounce, most stocks, and by most stocks I mean 70 some odd percent, go higher after these splits. The only problem you have is sometimes you got to take under on these splits, like a CMG or something like that.
Yeah, that's probably what I'm going to play for the upside on this one. I already have a calendar call spread on the 1,200 strike in here. Actually, a viewer was talking to me about it on Engineering Trade one day. We put it on. And speaking of Engineering Trade, I remember talking about it a month ago about Netflix possibly going after WBD. Look, it's only a matter of time before we start seeing consolidation in the space, in the streaming space, for sure.
Yeah.
And then we're right back to cable.
for those who have existing positions in Netflix, this split becomes a little bit interesting for you. Nothing changes, obviously, like on your risk, except now if you had one contract, you're going to have 10 contracts. So to use your example, your calendar spread is now going to have 10 contracts. Now, it's the same amount of risk. The stock is going to be 1/10 the size. So let's just use $1,000. Yeah. Let's just say it's going to be the 100. You'll have the 102 strike on. You'll have 10 instead of 1. But you'll have a lot more gamma on that trade, right? Because
120.
I'm sorry, 120, right. I said 102. Yes, 120. I apologize. You'll have much more gamma on that trade than you would on one contract. So you will get some gamma swings on there. So you'll have your example, you'll have a lot more gamma. Somebody who had a strangle on, or maybe even an iron condor, will have 10 contracts if they had one contract iron condor. They'll have a little bit more gamma exposure too. Same risk. It's just going to look a lot different because you have other stocks that are $100 that you have one contract on, and now you have 10 contracts on that product. So
sorry to interrupt, but some of the finer details on this: existing shareholders as of November 10th will receive 9 additional shares for each that they hold. You'll get the allotment November 14th, and then the stock will trade at the new post-split price on November 17th.
Perfect. Good information. Thank you.
So there you go. Hey, skipping a story here. Nvidia is investing $1 billion in an AI startup. I don't super care about that, but this is the week, and I'm sure, Jamal, you'll talk about this. Nvidia is just straight up worth $5 trillion. So what are we doing?
Yeah, I never heard of poolside, but yeah, I mean they're sprinkling money around, and stock companies do this often. I mean, big companies like them, after a while, they start sprinkling around stuff. Eventually, they might buy something that they feel could interfere. At this point, I don't really think there's anything close to interfering with Nvidia quite yet, but we see this often. So yeah, they're sprinkling money around.
Up near its highs, around 210 or so. It's 206 right now. It's up around $3 or so on Nvidia. I'm going to use MasterCard as an example, buying zero hedge here. Here's MasterCard, multi-billion-dollar company. They can't create something, so it's just so much easier for them to buy it. It almost comes to like what you pay for it is obviously important because you make your money when you buy something. But when you can't build something and you're the behemoth in the space, it doesn't matter. You're going for the business model, which is the recurring billing of zero hash. Here at Nvidia is just looking for the same type of thing. It doesn't almost matter what they pay for it. They're trying to be accretive to the stock on the long haul.
Here's something interesting. A company called Navan, Navan, Navan is the ticker. They decided to do an IPO, even though the government is shut down. It did not go well. They priced their IPO at $25, the midpoint of its marketed range. The stock opened at $22 a share, and so they started trading around 12% below their IPO price. Momentum in the IPO market had picked up, but the travel technology company decided to go ahead with the IPO, even though things are a little wonky right now.
I don't know anything about the stock. You said it's a travel technology company?
Yes, that's all I know about it.
Yeah. Okay. When was the last time raise your hand if you've been to a travel agent?
Yeah, but I use like Expedia, and I use like
sure. I get it. I know.
Kayak. I use travel technology.
Yeah. Yeah, I don't know. It looks like it's under 1975 on the bid right now. Again, this is just you either want to be long the stock, you can't be short it, like you're not allowed to short it. So if you want to buy it under the IPO strike, here you go.
Hey, skipping a couple stories here because I don't want to take up too much of Jamal's time, but Hershey's.
Oh, it happens all the time. Don't worry.
Hershey's Halloween sales have disappointed, but there is hope for last-minute buying. The chocolate giant says seasonal sales started slower than expected, but overall Halloween participation should pick up to be in line with last year. HSY, you ain't got no alibi. I got to go buy candy today.
Yeah, it looks unchanged, but you're right. It traded down to $164. On its lows here yesterday, today. Unchanged right now. I don't know why its sales are lower. I bought 180 full-size bars. I did my part. I don't know what anybody else did. And some fun-size ones, which are significantly smaller than the fun size I remember.
Yeah.
I just feel like they've been kind of monetizing Halloween quite a bit this year, despite the Hershey sales. But I feel like I've been seeing a lot of things. I feel like usually Halloween's a little skipped over and we just go straight to Christmas. But I haven't seen really any Christmas commercials yet.
I haven't seen any Christmas commercials, but if you go to a store, Christmas is strong. I mean, they've got Christmas stuff up already in some aisles, and they're getting ready to take down the Halloween stuff. They're chomping at the bit to take down the Halloween stuff to get.
I tried yesterday to go to Spirit Halloween because I was just like looking for stuff to decorate my bike because I hadn't known I was going to go on this ride. Anyway, the line was wrapped around the building. I took one look. got back in my car.
Nope.
I was like, I will find something in my craft closet. I'll be all right. Hey, and congratulations to Chicago. I love this city with all my heart. But we have something else to celebrate. We are no longer, finally, America's rattiest city. That title now belongs to Los Angeles. Suck it, LA. Chicago held the title for a really long time. It's basically data that's collected by Orkin about like pest control calls and stuff. And it's always kind of a tongue-in-cheek title. But Chicago, we held the title for a long time, but now the crown belongs to LA. So.
Oh, good for LA. Another thing they won.
Yeah, but we're not the rattiest anymore. So, also as a mother to feral cats, you're welcome. Finally, today for my viral video, I'm switching it up here. I normally do like a food thing, but I was like, all the Halloween recipes, you've seen that. I think I found a video that appeals to both of you. Take from that what you will. This is amazing and good for her. It's kind of, I mean, she's in a costume. So watch this. Happy Halloween, everybody. I mean,
I've seen this before.
I've never seen a bitch moonwalk on the ceiling.
That's because the clubs don't have a ceiling. The poles go all the way up.
Good. I don't think it's optical, right? It's real.
That's crazy.
Wow.
You know the grip strength? Like, she makes it look so easy. She's so strong.
Play it one more time. Maybe it's not. Maybe, play it one more time.
I guess I wasn't out of order mentioning showgirls today, huh?
I knew you guys would like it.
Thank you.
Jamal, this was fun. I loved having you on. This was great. Bat, what's coming up next?
Happy Halloween to you and happy Halloween to everybody else. We're going to take no spooks going on here, all treats right now, no tricks. We're going to take a quick 90-second break. We're going to come back. We're going to go to confirm and send, talk a little bit about the market, and then we've got This Week in Stocks with Jamal. We'll be back in 90 seconds. Tasty Live. Thank you.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Jamal, my friend, we are back, and this time of the day we go straight to the markets. First, straight to confirm and send. But before we do, let's take a quick look at the markets. Even the S&Ps, they're up 54 handles. That's about where they were all night, up around 45, 50 handles, a little bit higher than that. You could see they went about 18, 20, 9 or so handles up to 69.18 just a moment ago. Even the S&Ps caught a bid right after all the earnings came out for Amazon, Apple, Reddit, MSTR, and such. Sorry, I'll start again. NASDAQ up 342. That's your leader in the clubhouse. It was the weakest yesterday, seems to be the leader today with that rotation of the NASDAQ being, or any future being the weakest and then becoming the strongest the next day holds true. That's the way it's been. Russell basically unchanged. It was the strongest of the group yesterday, even on a weekday. And the Dow up 73 was one of the stronger of the four, even on a weekday. Today, it's the weakest of the group. Volatility, this is what I was talking about a moment ago. That's /VX. The futures basically unchanged at 1863. Jamal, volatility /VX had been rallying even with the market going higher the last couple of days, and then did nothing as it went lower, being a little bit predictive on what the market's doing. But really, it was more about like what was happening with Powell and all the earnings. I would expect this is a weekend. Volatility usually stays bid going into the weekend. I would expect if we stay up here up 50 handles or more, that volatility would come in ever so slightly to unchanged. I'm talking 10, 15 cents. I'm not talking 50 or 75 cents on the /VX futures. Yeah. And if Monday we continue this pattern of being higher, then you will see volatility get smoked. I don't think you'll get a lot of the weekend out today, but on volatility, but we'll see what happens. Bonds are down 3 ticks, 117.16, going a little bit lower the last 3 or 4 days, still at the higher end of their range. Bitcoin finally catching a little bit of a bid, traded over 110 to 111 and change. I'm talking about the Bitcoin futures, up 3,200 right now. Ethereum's doing the opposite. The futures are up. I should use the futures and not the cash. Futures trade all the time. The cash trades all the time. Futures close and open. Ethereum up 152. Oil up small, 13 cents. Gold up 19. Gold volatility, you can see lofty still at an IV rank of 60. Still good things to do in there, but it's come down from the IV rank of the 80s into the 60s. Silver basically unchanged. Corn, wheat, and soybeans all a little bit lower here, but they've all had runs. Here's the soybean run I was telling about. I think it looks like a buy the rumor, sell the news kind of event, but we will certainly see. I don't know if you're into the currencies. We've been talking a little bit. Nick's been trading them on the Forex account that we have. You can all have that too if you sign up for it. It's inside the Tasty Trade platform. But the yen has been getting decimated, and the dollar has been strong. Let's see what it's doing today. Pound is down. That means the dollar is strong. And /6E, that would be the euro. Euro's down. Dollar strong. On the earnings front, let's take a look real quick. Amazon up around, let's see, it's 52, so that's up $20. It was up around 28 earlier. Did you see it up higher than 20 earlier this morning?
I think this is maybe the highest I've seen, 252 and change.
Got it. Apple was up around $5. It still is. Coin was up around $15 earlier. It looks like it's up around 11 right now, 10 or 11. Reddit, RDDT, I saw it up around $20. It looks like it's up just about $18 right now. And MSTR, might as well take a look at that. 269, 254, up around $15. Let's get to our confirm and send questions. You want me to read the first one and you read the second? Vice versa.
Let's do it.
Okay. I'll read the first one. On this spooky Halloween, Friday, October 31st, confirm and send. Let's go to the first question, please.
Hey, man, if this were like, us in our 20s, Friday, Halloween?
Oh, this is.
Come on now. It would be a good night.
A lot of people would call in sick today. From parties from last night, going into tonight, going into the weekend. Anyway, what drives a stock price after an earnings announcement? It's clearly not the results.
You want me to take it first?
Sure.
I think it really depends. I mean, this is a pretty broad question. I think it really depends, though. Sometimes I think it's just I mean, sometimes it can be the what they say in the call, right? It really does. It really can move. Sometimes they may say something really interesting after the numbers come out and something happens on the call. It could be something in the space. It could be some buzzword that happens there. There could be some, we were talking about nice round numbers. And honestly, this is a lot of what I play for when it comes to earnings. I talked about Amazon and 250. I mean, it's arbitrary, honestly. I didn't know it was going to 250 and change. It was just, I figured if it came out with earnings and it said something good, maybe the stock could have a big move. And so I think it's a lot of that, honestly, a lot of times. It's a crapshoot. I mean, nobody really knows which way and where the stock is going to move and how big. It just really depends. But I think a lot of times on those calls, they can say something that causes the stock to move more, and you see it sometimes.
Yeah, and it could also be the market itself. The market's at all-time highs right now. Usually, these earnings are going to reflect what the market has been doing. They have an upward bias to them anyway, because every company knows their stock is coming out with earnings. Every company wants to say good things, doesn't want to say bad things, so they kind of underplay it when they're good, and they try to downplay it when it's bad, right? So they always have a little bit of an upside stent to it, but you're right. It's pretty random, and it's what they come out and say afterwards or what the market's doing. If the market was significantly lower today, a lot of these stocks would be lower too. Now you got the market a little bit higher. A lot of these stocks are higher too. So we'll see what's going on. But you got the Russell unchanged here too. So maybe a little bit of dampness on this up move. Let's go to the next one, please.
Okay, yesterday, Netflix announced a 10-for-1 stock split. What does this mean for anyone with an existing options position that doesn't expire until after the split? And I think you hit a lot of these points very well earlier, but go right ahead.
I did, but I'll do it again. I should have waited. I forgot that this was in there. I didn't remember. Anyway, everything gets multiplied by 10. So your options will become, if you had one contract, they'll become 10 contracts. I'll use the same $100. Let's say that Netflix was 1,000. And you had stock, and you had 100 shares at 1,000. You'll now have 1,000 shares at 100. Same amount of money, everything else like that. But you can see how the position grew just by changing the price. Now on the option side, you're going to get the same thing. If you had one option, you're now going to have 10 options. Instead of it being the 1,000 strike, it's going to be the 100 strike. So you'll have 10 options at 100. So you can see you'll have more gamma risk. If the spread, you're going to do the same thing. You'll be 10 by 10 if you had 1 by 1 contract. So you'll still look at something. It'll be exactly the same amount of risk, exactly the same amount of buying power. In most cases, it'll be de minimis one way or the other, like if you had a strangle on and stuff like that. But you'll have a lot more gamma risk. That's the key there. You'll have a lot more gamma risk.
You nailed it.
Next one, please. On Tuesday morning, you were talking about Zero Hash being bought out for substantially more than its most recent valuation. Forgive me, I forgot the exact number. They raised money at an $800 million valuation about a month ago, and they got bought out for, if you believe the news, 1.5 billion to 2 billion. It really is closer to 1.5 billion. But if they do certain things and hit certain lofty levels, it could be 2 billion. You're talking about it in the context of a frothy market. My question is, how do you know when a market is frothy versus being valued at a higher multiple?
I guess the only thing I can really, I didn't know exactly what you said the other morning, but the only thing I will add to this is, if you just look at some of the details, I don't remember the exact valuation a year ago, or whatever, but I do know they did just raise.
Well, a month ago it was 800 million, and they got bought out for 1.5 billion.
Exactly, and they raised money at $1 billion valuation. I do remember that about a month ago, and so yeah, that I think that speaks to your point. But give more.
Yeah. So how do I know about like a frothy market? Well, I mean, I think the numbers speak for themselves. If you're raising money at one multiple a month ago, everybody got to see behind the door, see in the closet, see what everything was there, and this is what they raised money at. And then a month later, it gets bought out for twice as much.
Right.
It sounds a little frothy. Now you got to take that with a grain of salt. Also, I mentioned, MasterCard was the buyer of Zero Hash in this example. It's a behemoth stock. They can't innovate. I mean, they obviously can innovate. They don't have the know-how to innovate. So it's much cheaper to buy something, even if it is at an exaggerated level, just unless Zero Hash completely undervalued themselves, which a month ago, which I don't think, if this was 2 years ago, that's a different story. It was a month ago. It's just so much easier for a big company to buy them, bring them into their fold. It's very accretive. It goes with the business model of MasterCard, which is, charging on the back end, the merchants and everybody else like that. So it makes perfectly good sense. So they pay up. I mean, Zero Hash, I got to give Tom some credit here. I mean, he loved Edward is the CEO of Zero Hash, Edward Woodford. I mean, he thought he was one of the best young CEOs in the business, and he loved the business model of Zero Hash. We were a lead investor in there from the very beginning. I mean, we meaning IG, owned about 10% of Zero Hash at a credit. That's how early an investor we were in Zero Hash. So
it's pretty sweet.
Good on them. Good on MasterCard. I think they got a great company. But
I think it's fascinating. It's fascinating overall, and speaks to what's going on in the entire space, right?
Yeah.
I don't remember exactly, but Mikey was talking about something. We were on the show with Ryan maybe last week or the week before, but the idea of payments and how fast money moves around. Like, look how fast we can just send money to each other now, just on a simple thing of Zelle and Venmo, right? And so I think you're going to just see more of that. He was talking about how he did one trade in somewhere and was able to move money here and then move it there, and that's really what's going on here in this whole situation. That's my big takeaway.
Yet, when you have a friend who owes you money, they cannot find the Venmo button or Zelle. It's amazing. It's absolutely amazing.
Yeah, it is.
Oh, another phenomenon. Next question, please. I think it's the last one.
All right. Does price lead volatility, or does volatility lead price? One thing that stood out to me yesterday was that even when the market was down at the lowest levels, volatility didn't seem to be up all that much. Was that a tell, or does volatility need time to catch up with the price?
Yeah, I mean, it's so subjective. I mean, it's, some things are good to know and some things make you money. Knowing what volatility has done in the past, leading up to a move, having some market awareness and context to it, I think is one of the most powerful things for trading short premium. Like, not for directional movement one way or the other, but for trading frothy markets, meaning not necessarily highs and lows on the stock itself, but highs and lows on the option pricing. Now, remember, option pricing is high because something is happening. There's some unknown either in the market or in the stock itself that's pricing that high. Now you have to realize how high is it pricing it. And that's where IVR comes in. So IV rank, which is a number that we have right on top of the tastytrade platform, it's the first thing right next to the stock, even before the price, because we feel that that's one of the most important things to look at when selling premium. If you're going for just a directional shot, it doesn't make too much of a difference. But if you're going for selling premium, which we do mostly, then it's paramount in my eyes. So that volatility is all measured by IVR from 0 to 100. So if it's closer to 100, the option pricing has never been more frothy. Can it go frothier? Yes. But at that moment in time, it's never been more frothy. And if it's close to 0, then it's never been cheaper. Can it go under 0? Yes, intraday it actually can go under 0. So it's as low as it's ever been at that day. So then you pick your strategy. If it's closer to 0, then you're looking for something that's going to be not selling premium. If you're looking at it closer to 100, you're going to be selling something with premium. If it's above 50, you're going to be selling something for premium. If it's closer to 25, then you might be looking to do something like you talked about a moment ago, calendar spreads or diagonals or something like that. So I don't know which leads which, but there's some good tells in there with volatility.
Yeah, and the only thing I'd add is, you think of implied volatility, which is basically determined by the crowd, we always used to say, right? It's determined by us traders. Let's just take Oklo for a quick example. I mean, Oklo is the type of name where it's really high implied volatility because everybody is concerned with the energy, for AI and all of that right now, right? So implied volatility is really high in there. I don't know how much you could say volatility leading price, but if you want to get granular with that, maybe you could say historical volatility, right? When we move around a whole lot, then historical volatility is going to get bigger. We've seen this when the S&P 500 has these big swings. Historical volatility increases. So you can kind of say volatility leads price there sometimes.
Beautiful. Let's take a quick 90-second break. We'll come back. We've got, This Week in Stocks. Yeah, that's right. With this guy, Jamal. We'll be back in 90 seconds. Let's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Jamal, we're back, my friend. We got This Week in Stocks. Go.
There you go. Yeah. Let's pull up some slides. Let's talk about it.
All right, let's do it.
So this is how we wind up at this time every Friday. This is how we get here, because we chatter and yap all the time before. Earnings makes the world go round. Let's move to the next slide. Big earnings this week, of course. A lot of them. The big thing of the week, of course, was Trump and Xi meeting to discuss a whole bunch of trade issues. Apparently, they're agreeing on a 1-year trade truce. And I will say the biggest thing I noticed was a lot of the rare earth stocks fell this week. Those have been some of the stuff that have been being held up by this potential between, obviously China controls like a lot of rare earth reserves, and that's kind of been the thing we've been hearing about from some of these stocks. You've heard about investments in the LACs of the world, and I think at least another, and a lot of those stocks fell this week. And earlier in the week too, gold was pulling back, we noticed as well. It eventually caught a bid and has bounced since once they started the meeting and after. Meta and Microsoft had earnings. They fell on earnings due to AI spending fears, while Google, on the other hand, they gained big time. And apparently they had growth in the search area, in YouTube, and the cloud segments. And then Amazon beat today, beat on AWS growth. We saw Apple shares rising despite the fact that they showed China weakness. So we had at least 5 of the Mag 7 report this week. And like you said earlier, markets have they've been up, and they've kind of been in the same general vicinity from where we started the week to some degree. We'll see what kind of move we get towards the end of the week here, or by the end of the day here. It is the end of the month, so who knows with some kind of end of the month flows. To no surprise at all, the Fed cut rates 25 basis points. We're now at 4%. So yeah, it's getting it's getting harder and harder to justify putting some money in a CD. But you still got a lot of chance there. You can make some money on that. Bank of Canada. It was also a bonanza week for central banks. Bank of Canada, they cut 25 basis points to 2.25. ECB holds at 2%, and BOJ they maintain. So you can see we're still the highest. So you talk about 4%. We're still like among the highest in the world.
That's Trump's argument. Love him or hate him. I mean, that's his argument. I mean, most of the time he comes out with the arguments from out of left field. This one seems pretty logical.
And you figure they all talk, so it is kind of interesting. And I can't even believe it, but I actually listened to some of the meeting, and I actually listened to some of his Powell's talk after, and he was talking about they asked one good question, I think, was, do you think the idea of cutting these rates fuels a lot more spending in the AI space? I thought it was interesting. He said he doesn't think so, but I mean, it is something to watch, I think.
Sure. I think the quarter point was the biggest non-event of 2025.
You're right, and it was reflected in markets. We talked about it last week when we were coming in. We showed the SPX curve, and it was basically a non-event. We did move though. I mean, but VIX and VVIX both positive on the week. It was as of last night's close, 1691 and 102. So we're still over 16, which 1% moves in either direction. SPX, VVIX being over 100 tells you there's a lot of activity in VIX options. Let's move to the next slide.
That's for sure.
But not to mention this, but yeah, we've seen a big move here. The biggest move happening earlier in the week. China purchased its first U.S. soybeans from this year's harvest. Big moves more recently. I kind of like you, and I think you've summarized as well. I feel like this kind of feels like a buy the rumor, sell the news situation. I've looked at trying to sell a call spread in soybeans and the beans. I really haven't been interested in it. Honestly, I don't feel like you get a whole bang for your buck. I don't know about you.
I'm in the same place. I'm the world's worst commodity trader. So I just try to lose money in gold and just keep it there. Keep all my losing trades there and just go someplace else with my money to find winning trades.
Yeah, but if it gets more extended, maybe becomes an interesting trade. But right now, this is just day-to-day moves. If you look at the chart, you can see basically we're at the highs going back up to last October, actually.
I mean, you have relatively low. You have high monthly implied volatility relative to itself, but low implied volatility. I mean, it's under 20 usually. It's 22 right now. So I don't know. Not my thing.
Yeah, it's just been one of the biggest points of contention in this whole U.S.-China trade war, right? China often purchases a lot of soybeans, and they had backed off those purchases. They also had backed off the amount of exports for the rare earth metals. So I tell you, Tone, all this type of stuff makes for a fascinating market, man. I mean, you've just seen a lot of stuff move off of these type of things.
Yeah, you can never count yourself out of a trade when you're trading commodities, especially something like, corn, wheat, and soybeans. They could move exponentially at any time. But then with that low implied volatility, that's what hurts me. So, you got to look for something with defined risk, I believe.
I totally agree. Let's move to the next slide. Yeah, so right here we got a chart just for the month of. I was just curious, again, we've seen a lot of movement in gold this month. I feel like all of these are certain, just ways of money. You know what I mean? Gold, obviously, the gold standard. You got the dollar. You got the 10-year. Obviously, you can get a yield on the dollar, and then you got Bitcoin. And Bitcoin October quite never really materialized here. Gold, we know it was at highs. We know the big fade happened around the whatever that was, 17th or 18th or 19th. I don't remember.
Yep.
But we're still up 5%, close to 5% on the month here. And dollar's been strong a little bit recently, and the yield is strong. I don't know what it means when the 10-year yield, the dollar, and gold are having a decent month. I'm not exactly sure what the hell that means, but I know it's weird.
I don't know what it means for the market either, but I know it's weird. But this is a great illustration. I always say, Bitcoin hasn't participated, it's underparticipated, but I didn't realize, it was by 15% when compared to the best product, which is gold right now. And even, looking at the dollar, how it's underperformed, even yield, how it's underperformed. So this is a good visualization of the force. So I like it.
And it tells you too, just because, I think I know I was a little, and again, I to be honest with you, I really didn't trade bonds a whole lot. I know something big you guys did for the years. I didn't really look at bonds much prior to coming to Tasty. I really didn't, and I learned a lot more. As a matter of fact, my first show was with Frank and Pete, where I was doing a lot of future stuff. Again, an options guy who had really done little future stuff in his personal, and I learned a lot more about bonds and yields. And so it's kind of interesting to see yields moving, but I'm sure a lot of people are thinking, well, why aren't yields down with the idea of the rate cut? But again, 10-year doesn't really get that much affected by that, more 2-year.
No. It's the longer end of the curve for sure.
Let's move to the next slide. This is an interesting one. The ratio of large caps to small caps is the highest that we've seen in 25 years, honestly. And you wonder if there's a signs of reversal. One of the things that I noticed on, God, it's been such a busy week. I can't remember. I think it was on Wednesday. I think it was during the Fed meeting. Was we saw a big move. I don't know if you noticed it in the IWM. IWM was kind of like down on the day, and it ended up going up 1% after the meeting, after he talked and all that. And I think there was somewhat of I can't remember if there was a fader yesterday or not, but there's been a lot of move in the small caps. And I know everybody's always trying to figure out, okay, is it the small caps time? And they've moved a lot recently, but large caps are still outpacing them by a wide margin. You wonder if this is eventually going to change or not.
Yeah, you look at, what's large cap? I mean, if you look at the Dow or maybe S&P, they were going straight up, which illustrates in your graph right here, going straight up. In the last couple of days, they've been going a little bit more sideways to lower as the Russell is kind of oscillated back and forth in some violent moves, as you just pointed out, and then catching a small little bid. I mean, the conventional wisdom usually is if interest rates go lower, that's good for small cap stocks that have to borrow money and stuff like that. But they also talked about, easing going into the next quarter and into the end of the year, being not easing, maybe no more rate cuts. So it was kind of like a double-edged sword there for interest rates. So I think the Russell is probably going to be one of the more volatile moving forward, even though the IB rank is basically the same as the S&P right now at 16. So we'll see if that changes. The correlation between the two, I mean, that correlation hasn't closed its gap at all. I know Tom was trading that for a while. I think it's one of the harder pairs trades to make.
Absolutely. I never liked that trade, honestly. It's hard to do. It really is.
Yeah. I mean, you want to do NASDAQ, S&P, I think that's a little bit easier, but Russell, you'd rather be just long one or short one.
Yeah, but even in that NASDAQ, S&P at this point, with those 7, if you will, being such a large part of S&P, they basically moved the same.
Yeah. Yeah.
It's kind of difficult. Speaking of, you know what? Speaking of IWM, sure. You got to look up. You got to look up the holdings in there. I just, and again, it changes. There's whatever what they call it. Every quarter they do the rebalance, whatever. But I just looked at it recently. I didn't realize some of these names that we've been talking a lot recently. The BE, that Bloom Energy, IonQ, RGTI. These are some of the top 10 names in the IWM. I'm not saying it's good or bad. I'm just saying I didn't know. It's kind of interesting.
Right, I didn't know either. I remember what was it? Like Amazon or something was in the Russell. Some stock, some big stock, I forget, was basically the whole Russell,
like the largest one.
Yeah, it was like one of the largest. It was 10 or 15% of the Russell. It was crazy. But Bloom Energy, since you mentioned it, Nick just got out of a trade where he was down multiples of dollars because Bloom Energy is the type, and we're talking about BE, type of stock that go from 80 to 120 in a heartbeat and back down, and he got whipped all around, but was able yesterday, I think, to take it off for a small profit or a scratch. So goodbye to Bloom Energy. It's a tough one to trade. That's not directional. I don't know if it looks so juicy selling premium.
I know.
But I think you have to have defined risk in there too.
You're preaching to the choir. I'm playing with fire. I just sold the upside call in there the other day, the 180 strike. I think stock is like 120 or something. I don't know where it is now, but
it's 133 this morning, up around $5.
I'm playing with fire right now.
Yeah, you got to have a lot of intestinal fortitude.
Yeah, exactly. Let's move to the last slide here. As Vanetta said, stealing straight from her, Netflix announced a 10-for-1 stock split. Currently, one of 10 stocks in the S&P 500 with the price of about 1,000. There's also them possibly bidding for Warner Brothers Media. We just did a little piece here, if you didn't see it, about how stock splits affect stocks. Like Tony said, essentially, I mean, there's going to be 1/10 on the stock size, right? If it's trading $1,000, it's going to be down to 100, but your options are going to be times 10 at that point. So keep an eye out for that. Delta and United call on Congress to immediately end the government shutdown. They're plagued by staffing shortages. I've been seeing different things about. I'm glad I'm not flying right now. I hope Mike, Nick, and Katie get.
We're flying next week.
Yeah. Have you had any issues?
So far, no, but I mean, we'll see.
Good. Qualcomm shares, it gets lost because it was so long ago, but Qualcomm shares had a huge rip earlier in the week on the debut of AI data center chips to compete with Nvidia. Nvidia also announced separate $1 billion announcements with Nokia and the AI startup Poolside, as Vanetta mentioned. So they're spreading money around. I've been saying, man, what year is this sometimes? We got Nokia moving, you got IBM moving big, you got, it's wild. Some of these names. I keep saying to Nick, I'm like, look, this ain't your father's IBM. I was like, well, actually, it is your father's IBM because IBM used to move like this back when you used to trade on the floor.
That's correct.
Wow.
It's back to the 90s.
Barring any change, there's I don't think there's going to be an October NFP report next Friday, and we still haven't received the September NFP report. And finally, research October 29th, the OJ, why leverage ETF struggle over time. Check it out.
Great job, Jamal. We'll take a quick 90-second break. We'll catch this opening bell in about 4 minutes. It's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Jamal, my friend, we are back. We've got about less than 2 minutes before the market opens. Even the S&Ps are up 45 handles, sitting right at 6,900. Why does it feel like they're down to me? And they're 18, 20 handles off of their highs, which we really made in the first hour of the show here while we were on. But they were sitting up 45 all night last night, and 45 seemed like a huge move to me. And now it almost seems like we're down ticking. Volatility basically unchanged at 1862. NASDAQ is the leader in the clubhouse, up 315. It's about 75 handles off of its highs, up 1.25%. Russell's actually down $1, which let's just call it unchanged. Bonds are unchanged at 117.19, and Bitcoin is hanging out at 110.5. We'll let this market open, and then I'll quote the rest of it. What do you think here, Jamal? Gold up 22, by the way. For those,
it's funny. We were talking about these nice round numbers. I mean, you see it on the screen. We're basically at a nice round number here. It does feel like that. You talk about market feels like it's pulling back some. It's hard to maintain these big overnight moves sometimes, I think. You know.
But we haven't had too much two-sided action up until yesterday, right? When we had a little bit of weakness in the market, and then we had some back and forth action there from lower levels. Let's see how some of these stocks are moving here, if we could. Some of the earnings plays. Amazon is up around $26. Remember I was quoting it around $25. I thought I was up 28 earlier. It's up 26. Apple is up almost $6. That's the high end of its range from all night long that I saw. Coin up $10. I thought I saw Coin up 15, but it's up 10 right now. Reddit is up about $25. I thought I saw it up $20 before. Reddit really catching a bid here. And MSTR rounding it up 11 or 12. I thought I saw it up 16. Even the S&P's up 43. Nick has a lot of trades on here, which I will get to when we take our first break here, because he's got a bunch of them. There's some that are going to have to manage. There's others that are going to look real good. By the way, your Oakley, that since you mentioned, is up $2.60. Oracle is up $2.70. It's a sea of green. If I look at some of the stocks that are lower here, just going on the high option volume list, or let's look at the Dow just for giggles here, since we've talked about the bigger stocks. Goldman Sachs is down 4. Visa's down around 4. Amgen is down around 3. It looks like a pretty much of a 50% of the Dow stocks are higher, 50% of the Dow stocks are lower. I will go to the high option volume list for you so we can see that one a little bit more. You've got Lilly, always one of the leaders in the group, down $6, $7. By leader, I mean like one of the larger moves in the stocks. Baba and some of the Chinese stocks like Baidu are also lower. Starbucks is lower by $1. It's pretty much a sea of green here, as even the S&Ps are only up 41. That's about as low as I've seen them for most of the night. Reddit up 33 now. Some of these stocks, some of these stocks have some moves to them.
That's volatile stock, man. I just noticed Palantir's up. It's closing in on a nice round number. That stock's been moving around a good bit. It seems like it caught a bid this week.
Which one?
Palantir. It's closing.
Yeah, for sure.
Yeah, it's been a big mover. I mean, it's been a pretty, despite the fact that we had a couple of names up until this week, it felt like a lot of the big names that were going to have earnings, the Mag 7s of the world we saw the previous week. Tesla and Netflix did not have good earnings, or at least did not have good moves on earnings. Right. And they pulled back for the better part of that week and even a little bit into this week. But
I should mention Netflix up $25 here, of $24 now. Netflix.
Yeah, it probably needed some good news. Maybe that's why they decided to announce it. We saw, again, I don't remember the exact. I think it was Meta that was down on earnings, right? Microsoft was down, but
Meta was down. Meta was down big. 666, basically unchanged. In Meta.
Google was up for earnings. So most of them have pulled back on earnings, but Google broke the trend, and then these last two accelerated that trend to the upside now with Amazon and Apple. So it's been a mixed bag, and I think that's kind of why we feel like market is kind of in the same spot at the start of the week.
You're 100% correct, my friend. You're 100% correct. Seems like it's weaker, but not really, right?
Yeah. And then volatility is still sitting around the 16-ish range, I assume. The interesting thing, I think, on the week, you touched on it. You mentioned the Fed, and I think from that we've seen interesting moves from the dollar. Dollar's been strong most of the week. Bonds did fade throughout the week as well. So that's been your macro stuff as far as where those going to go. It's been an interesting week there. And then gold, sort of finally, it seems like it's kind of caught a bid again. It's not the falling knife that it was. It's a different trade than it was when I pounded the table and said this is too ridiculous. It's a different trade from that now. It's totally reset.
It too is a round number of 4,000. I mean, I know it's 4,034, but it can, expected move in gold per day right now is around $21. Let's see what the ES is looking at. Expected move in ES is around $32. We've seen expected moves as low at this time of the day, as low as 18 last week. And now you've got 30 some odd dollars. So you can tell volatility has really crept up. Even the S&P's only up 38 here. So you've got a little bit of a little bit of a pullback in the market. Apple's up $1.50 now after trading significantly higher.
Yeah, I'm curious to see how this day ends, because again, it's the end of the month. Not quite end of the quarter, but end of the month. And sometimes we see little wonky things at the end of the month here. So I'd be curious to see how they end the day, especially since yesterday was kind of weak. You wonder if we'd even be up if it wasn't for those two earnings kind of propping the market up higher.
I don't know if we would have been, to be quite frank with you.
Yeah, it's.
I'm sorry to interrupt.
No, go ahead.
Let's see if I can start closing some of these trades for Nick here. There you go. There's an Apple. Yeah, that's Apple taking a buck or two or three out of that one. Apple worked out nicely since we bought November and sold October. You got all the juice out of there. You'll see that one come across in a moment. Some of the other ones that he's got to do. Let's take a look at Amazon here for a quick moment. Or I could really do this when we take a break. You know what? That's what I'll do. I'll do this when we take a quick 90-second break.
It's cool. This is what the show is. We got
awesome.
People got to know we got risk on half the time when we're on these shows, man. We got stuff to do, just like you guys. I'm looking at my stuff too. It's how it goes. We're traders. We trade.
Yeah, no, for sure. Amazon here is another one where he's got some good long delta in there. So Amazon's up 26.
To that point, as we're talking about it and as you're looking at it and possibly closing it, how do you, in those situations, people ask me this a lot. They're in earnings play. Sometimes I will let it run throughout the day because sometimes, especially for me, I'm usually playing earnings for moves. Mm-hmm. Sometimes the moves get extended. You mentioned Reddit. We opened it up and it was only like up 15. All of a sudden it's up 33, right? And so how do you deal with that? I mean, again, it's different if you're short, the vol crush happens and you're just like, cool, I'm out. How do you deal with that?
Yeah, probably going to be a crappy answer for everybody. I mean, on the show, since we do the show, we've been trading them pretty much like right after the opening, just staying consistent with that. I think if I was trading on my own in my own personal account, I'd definitely be watching the market and trying to have a little bit more of play with it a little bit more. You know what I mean? Like, not kind of be so rigid with my get out of it right on the open. I would probably have a little bit more market awareness into the whole thing. So it's a horrible answer, but we closed them pretty quickly. But it's a horrible answer.
So to that end, I mean, I'm looking at my Amazon now, and again, I said I got the no D's 250 calendar call spread, so I don't have to rush as much on that one.
Right.
That's kind of whatever. But if it were a near term, I probably would be a little more proactive in that situation because, again, I mean, life happens fast when you got weeklies on.
Yes, you do. You're 100% correct. You're 100% correct. All right, my friend, let's take a quick 90-second break here, and we'll come back. We've got fast market where we're going to look at 10 trades. I'm going to need your help with this, Jamal. I'll place as many as we can that fit our portfolio, and then we'll have some dings. We'll be back in 90 seconds. Even the S&P's up 39, volatility up 3 cents. Russell's still the weakest of the group. NASDAQ still the strongest of the group. We'll be back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Jamal, my friend, we are back, and we've got fast market. Ooh. Fast market. Yeah, we have our own music, Jamal.
Love it.
A couple of trades that I looked at for Nikki on this break that'll be coming through on the follow page in just a moment. Coin, we bought back a coin up almost $18. We sold some puts at $5. Bought them back at $3.45. That's mid-price. Maybe you could have worked them a little bit better. Their market there is $3.15, $3.75. Amazon rolled the short calls that we had out to November, 250 calls. So we've got a 1x2 $20 wide 1x2 ratio spread in Amazon. We'll see how that works out for us. I got a couple more that I have to do here. Amazon short put, we closed that one for a nice profit. We sold those puts a couple of bucks and bought it back at 36 cents. Let's see what else we got. We got Roku and Reddit that I have to do also. We'll do that, I guess, in the next 15 minutes or so. Roku, this is an easy one to close. He's basically just short puts and Roku's up good. So anyway, fast market. Let's take that. Even the S&P is up 28. Interesting little market here. Not quite. Not quite as strong.
Does that happen every time you say those two words together?
Yeah, it's like Beetlejuice.
Yeah.
It's like Beetlejuice, that kind of thing. So, yeah, you got to be careful. Don't say it.
What? Fast market?
There you go. What is our first soup du jour here? What do we got? ARM. What do you think about ARM, my friend?
I know it's been moving a lot recently. Bullish for earnings. The 190 calls, no SEP expiration, 253 per. 125 of them for me. 125 of them. Oh, okay. Bought Thursday morning. Where I don't have my stuff. But where's stock trading right now?
ARM is trading at $167. ARM has caught itself a little bit. It sold off the last 3 days. It's up $2 and change. It's got an IV rank of 39. Let's see what
does it have earnings next week or something, or sometime soon?
Let's take a look at ARM. Let's see. ARM, we do not have a position in it, so somebody could do 39 IV rank. Earnings are November 5th. You are correct. The following week. What's your opinion on ARM?
Am I reading this right? Somebody just wants to buy some 190 calls for earnings in Nove, huh?
Yeah.
I don't love the idea. I would just, I personally like the calendar call spreads, right? If I want to get long something, I mean, that's kind of how I end up doing it. And this one, let me see.
Yeah, you also have to look at the markets here too. Like, in the November 7th expiration, the 190 calls are, first of all, they have a 21 delta, which means there's a 41% chance of a touch. They're 30 cents wide. A lot of the other options are 70 to $1 wide in these weekly options. If you look at November with 21 days to go, you see very similar markets there too. So ARM, not really a tradable product. And if I was looking to do this, I know you're trying to hit the home run here on a bullish ARM. You've got a $17 expected move for the whole week next week. The stock is under 170. You're buying the 190s. You're not going to get a lot of bang for your bucks. I'd rather see you buy as wide as possible, either straight vertical spread or some sort of diagonal spread where you're buying, or like a crab type trade where you're buying an option deeper in the money, selling an option further out of the money, getting around 25 deltas, and a lot more delta risk to the upside, which you want, than just buying those out of the money calls. So I think we'll kind of abstain from this.
Yeah, exactly. I think your idea is correct. The idea of maybe even doing a calendar in there is probably better. You can do the long, buying the no 14 expiration, the 175 call, and sell those 185s against it, or even those 190s if you want.
Right.
And if I'm just looking at long, the no 14 175, short the no 7 185s. You can do that for 382. That's a $10 wide spread. You can get a better bang for your buck on that even.
Totally agree.
And this is from somebody who likes to buy calls. I'm telling you, I wouldn't buy those no 7s that far upside.
Yeah, it's too far. Next one, please. Meta, talk to me.
11% pullback. Meta is a great reentry compared to other Mag 7 names. I'm selling the 21 DTE 670, 700, 730 Ironfly. A little Ironfly action.
What do you think about this one?
Let's see. They're selling the Ironfly, and stock is in Meta.
Down $5 to 661 in Meta. Not near its low. I mean, it's near its lows that it made yesterday, but just off of it.
They're 30 points wide on this Ironfly that they're selling. Let's see.
IV rank of 25. They're looking to do this in the 21 day. That would be November. I mean,
I don't know, man. I probably would be. I would buy this Ironfly more than
anything. Then sell it.
Yeah, I probably would. I don't know. That's pretty good pop though. I gotta say, 76% pop. I mean, you're collecting $400 here versus a max loss of 2,500. That's the only thing I don't like. Like you're basically it's what's that, 6 to 1 And, I don't know if I love that part of it, but and I mean, Meta, could bounce back here. I mean, but personally, I would like to buy that Ironfly that call butterfly, if anything.
So I'm going to abstain only because I did a trade in Meta yesterday for my option trades today in our account. I only use around I don't know, around $2,500 in buying power, but I'll tell you what I did. I bought the DECE, kind of a longer term. I'll put it up there in a minute for you. Give me a second here. I bought the DECE. I guess you would call it a broken wing butterfly. Let's see here. Put it up there. There we go. I bought in December. I bought there you go. I bought the 585 put all the way out at around the 15-ish delta. Sold the 570 put. Again, I'm doing the same thing you're doing, trying to play a little bit of reversion to the mean on price, which is not as mean reverting as volatility. That would use a lot of buying power. So I went out and I bought the 520 puts against it. I did it for $1.75. It looks like it's around $1.60, $1.65 mid price here. Not the idea that the stock is that the trade is profitable, but it's all about the volatility, selling a little bit of volatility because it got frothy yesterday on that $100 move. I need the stock to be higher. It was better yesterday than today, but for that reason, I'm going to abstain from placing this trade. We already have risk on in Meta. I'm not going to place this trade.
I like that. I like the trade you have on, actually.
Yeah, I thought it was an interesting, scenario. You got a $15 wide long put spread in there, so your break even is $15 below your short strike. So I don't know. It seemed like a good intelligent trade. A little bit about 5-7% on your risk that you're taking in basically a month or so. Let's see how it works out.
Let's go to the next.
Yes, please.
I think the company may be, Spotify, excuse me, Spot. I think the company may become the target of a Disney-like subscription boycott. Earnings on November 4th, however, not sure how to play it other than call ratio. Maybe we wait until after earnings. So a Disney-like subscription boycott. That's quite a thesis for Spot.
Yeah, let's take a look at what Spot is doing here, and let's see if
they get my money every month. Their algorithm is pretty good, honestly.
The algorithm is crazy in there, but I mean, I like Spotify as a product. It hasn't been doing anything as a company so far. I mean, I guess it's off of its highs of around, I don't know. I mean, it hasn't been doing anything. It's a $660 stock. I guess it's been doing something, but it's off of its highs of 780, kind of going sideways with an IV rank of 41. It has earnings coming, looks like November 1st or so. So right around the corner. What do you think here? Wants to play it?
A call ratio is a little expensive. These markets are just crazy wide, though. I mean, seriously.
Yeah. Yeah.
It's the one drawback here.
Yeah, $4 wide markets in Spotify. I'm sorry, guys. We're gonna have to abstain from this one too. Spot is up $3.80 though. So if you were looking to be bearish in here, better today than yesterday.
Mm-hmm. Let's move to the next. Starbucks, bullish diagonal, buying the Gen 80 call, selling the Nov 85 for 470 debit.
Let's see, Starbucks. See if we have a position on in Starbucks too. Also, let's see here.
So the only thing about this is for me, and I don't know about you, and it depends on how far upside is. Let me see where Starbucks is trading.
Starbucks is trading 81 in change. We got a short.
I'd like to do diagonals for about less than half close to less than half the value or better of the spread. So I would rather do this for 250. I mean, for 470. I mean, again, this is still a $5 wide spread. At the end of the day, you're counting on the fact that maybe it's going to drift up and maybe not break through 85. But if it does, you're not making a whole lot of money on that.
No, in Starbucks, we actually got a little bit of short delta in here. We got an ACK D spread on in here that we sold for 370. Looks like it's trading at 222 or so. We could probably take this off and put on book a profit here. I mean, that's what I would look to do. So I'm going to look to take this off in the coming moments in Starbucks. Starbucks IV rank of 23. I don't know. We had a little bit of bearish delta in there, so I'm gonna abstain from this. So
yeah, I would be more inclined to do the Jan 80 Dece 90 call. I know you don't get a whole lot on that Dece 90 call, but at least that spread is 455 if you're really bullish. I mean, you can make at that point you can make if you do it for 465, you can make 535 on that thing max profit.
very good, very good. Next one, please. So far, we've been snake bitten here. I think it's more my fault than anything else. I'm a little preoccupied with the market. Even the S&P is up 29. Nasdaq is up 200 and change, about half a percentage point off of its highs. Russell's actually catching a bid, up $7 to $8, and the Dow is only up 69.
Another SPX, another Friday without major news. Government shutdowns, the same story. Selling 25 Delta Iron Condor, $25 wide. What do you think? You can always sell.
You know what? I don't hate this. Let's see what the SPX here, IV rank of 16, is relatively low. What month do they want to go out to?
They want to do 0 DTE.
Oh, they want to do the 0 DTE. Let's take a look at what the expected move in the E-mini S&Ps is right now. It's 31 and a half. Okay, let's put this on. I like putting on the 0 day. We've moved a little bit here too. You don't want to do the you want to do the end of month. So there's only one. There's only one here. Let's take a look at it. I don't want to be snake bitten here. I'm going to go to around. They said the 25 delta. We've been doing around the 20-ish delta. So I'll go down to split the baby and go to the 21-ish delta. The 68.15. We'll go $20 wide to the 67.95, and then we will go to 21 delta here on the upside. We'll go to the 68.85 or 68.90. Which one do you want to do, Jamal? 90 or 85?
And 90. Let's do 90.
Okay, beautiful. $5.10 looks like what it's trading at. Let's see if we can get 5.15 here. Go a little bit more.
Any fillage? No fillage. No fillage.
5.10 looks like mid price is 5.10. It is. All right, we've got our first fill.
Nice job. There you go, Brian from Denver.
Yeah, beautiful.
Next one.
Got our first one. How about that?
Rivian. This is Jerry from NYC. Rivian's due for a rally, doing synthetic long. Sell one Dece 19. Just fit that to 19. Selling one Dece 14 call and buying two of the Dece 10 calls. So,
what do you think about this trade?
Buying two of the Dece 10, selling. Is it due for a rally? I don't know if it is. Honestly, that's what I think about this trade. But let's see. Find two of those, selling two of these.
Rivian been kind of a dog, right?
Yeah, it has been. You're paying $1.35 for this thing. It's
due to rally. When do they have earnings? Earnings on November 4th.
Yeah, November 4th. It's been kind of a dog, honestly. I don't. That's the only part. That's the only part I disagree with. That part of the thesis.
Yeah, buying the Dece 14 call. So he's buying the at the money call in December. He's selling one Dece 14 call and buying two.
Did I read?
He's just doing a crab. He's just doing a synthetic long here.
Oh yeah, just a synthetic. I'm sorry, I read that wrong. Buying two of the Dece 10 calls. Yeah, my bad. And so
he put the sell first. That's what threw you off. He's buying two of the 10 calls, which have no volume today, by the way, 0 trades and 30-cent wide markets, and he's selling the 14 calls one time. So this would be trading.
So basically, a zebra. It's a zebra.
It's a classic. It's a classic zebra.
I don't mind that.
So here. So you could do this. It looks like for $5 and maybe $5.80 or so.
Why not just sell the 12.5s?
You could sell the 12 and well, you don't have the upside. So the 12, if you sell the 12.5 puts.
No, I'm just saying buy one of the 10s, sell two of the 12.5s instead of, buy two of the 10s, sell one of the 12.5s instead of selling the 14.
You certainly could either way. Now you got to remember something. it's only going to use what you pay for it, right? So let's just say you paid $5 for a little bit more. It's going to pay $500. This is an example where on a cheap price stock like Rivian, $1,300 for 100 shares of stock, I'd actually rather use the double amount of buying power and just buy the stock as opposed to having probably the 10 or 15, maybe even 20 cents, because the natural is around 40 cents away on both sides. So you're probably going to get filled 15, 20 cents above mid price here. So I'd rather just buy the stock and use the extra buying power because it uses so little stock. If this was a $130 stock, then I'd rather pay, and if the markets were as crappy as they are in Rivian, I'd rather pay the 10 or 15 cents more over synthetic parity to the stock because I'm going to use significantly less buying power. In this example, I think it's a small-ish trade. If you're going to do anything in Rivian, I would just look to buy the stock. I'm not interested in doing anything in Rivian, though.
That's fair. Let's move to the next one. Microsoft hosts earnings opportunity. Try a 49 DTE Iron Condor, maybe skewed a bit to the upside.
Let's
like the idea of trying to get a
look at Microsoft. I don't have a position on in Microsoft anymore. Did we take it off? No, he didn't have one. So let's take a look at Microsoft. Go ahead. He wants to be neutral here.
They want to be neutral, maybe possibly skewed to the upside in Iron Condor.
Yes, stock's down $6 and change today. It's off of its highs it just made about 3 or 4 days ago. What are they looking to do here in Dece or?
They're what's 49 days?
Yeah, Dece.
So, yeah, Dece.
What strikes they're looking at? Are they doing anything?
Any specific strikes? No specific strikes. So you dealer's choice.
All right, so let's take a look at this with a little bit of upside. So maybe we do with an IV rank of 16, it's relatively low, and a high price stock, you're really going to want to do something with defined risk. So the first thing I like to do is go closer to those 15 delta options with 49 days to go. Let's see if we can do like a $20 wide put spread. We'll do the 480, 460. Oh, you're only collecting around $2 and change. This is good. We're going to have to go significantly closer than this. But let's go to the 18 delta here, or approximately. We'll do 565, 575. You're only going to get $3.64 for this. I'm going to want to collect, $5 or more for this. So we have to decide either do a straight Iron Condor with an IV rank of 16 or 17, which seems pretty low here, or we've got to do some sort of different strategy. So with the IV rank so low here, let's see if we can do something that has a little bit more to it. November volatility is 24. December volatility is 25 and change, 24 and a half. So you only have about a half a vol differential here. So if you want to play something with some long delta, I might go to let's say the Dece 520 calls. Let's see if we can buy those. We'll do some sort of diagonal trade in here and then go to November with 21 days to go. Remember, I'm paying around $18 and change for this. So maybe we'll go up to the 525s. Now, to your point here, I'm getting around $9 for a $5 wide spread on a diagonal. Not real good here. I would want to pay, closer to $5 for this type of spread. So right now in Microsoft, with not enough vol differential in the front month, meaning the November being higher than the December, you can't even put a diagonal trade on in here. So for me right now, I think I have to abstain from selling any premium. IV rank 16, 17, too low. If you want to do something where you wanted to, play a directional trade in Microsoft, it might just be something as simple as a debit spread here in Microsoft. So let's take a look at that in December. We'll do like the 510, 520. That's almost half the width of the strikes. If we do the 525s, that would be $15 wide. You're still almost half the width of the strikes. So let's take a look at the 1525. There's your half the width of the strikes, the complete 50-50 shot here on direction. Let's do that. I'll put it in at $5 because the stock is a little bit weak today, and we'll see if we get filled at exactly $5.
Love it. Let's move on to the next. We got time for more? We're good?
I think we have one more. Yes.
We got like two more, but three more.
Yeah, we're on number 8, so we got 2 more.
All right, this is the yen's last 6J. Not sure how far the yen can drop, but want small positive delta, 50-50 at the money call spread in 35 days. So they got a call spread in 35 days. I mean, you know what? I always struggle with how you say these yen prices, but they're long the .0064, .0066 spread. So they're long the call spread.
It's not going to matter because the world's worst commodity trader extends itself to the currencies. And I know the yen has dropped far. It's the worst thing that I like to trade. I think we're
not going to put it on, but let's just pull it up for him and show him what we think about it. You know,
sure.
64,
/6.
I'm with you. I'm not interested in buying a yen spread neither, but
so what are they looking to do here? Give me the strikes.
I think it was a 0064, 0066 spread
in December.
Yeah, I think it's decent.
0064.
So they're long the call spread. I think this 50-50 shot. Yeah. And then the 0066. So a couple more down.
66. Yeah. There we go.
That's what they got on. So
I mean
a lot, on that thing. $1,300 in buying price, quite a bit.
Yes. Quite a bit for somebody who's
not sure of your size, not sure of your account size, but $25,000 account is what I always take the vantage point of.
Even the S&P's up 23, a little bit of weakness in here. NASDAQ still relatively strong, up 0.75 percentage point. It was up over 1.25%, and even the S&Ps were up around 0.75%. Everything's down. Everything's still up, but down by about 0.5. Actually, the Dow just turned red here by $1. Volatility hanging in there, which we talked about a little bit earlier today, up 16 cents. Volatility not contracting here.
Fascinating.
Next one, please.
Let's move to the next one.
And I got filled on Microsoft at $5. Again, just going with a little bit of watching the market. Microsoft has been soft. It's down another $8.50 right now. So you save yourself 5 or 10 cents by seeing what the market's doing and what the stock is doing itself.
Cool. This one is for Lulu. Jade Lizard. They're telling us about a closing trade. Closing before earnings in early Dees. The Dees 145 put, and they're long the 195-200 call spread. So a Jade Lizard in there.
Yeah, Lulu's been an absolute dog, right? Let's see here. We don't have a Lulu position. It has earnings coming December 4th. IV rank of 48 is pretty good. They want to do this in December, correct?
Yeah, it sounds like I don't know if they're asking us if they want to close ahead of earnings, if they should close ahead of earnings, but
well, they want to close it when earnings come. December 4th, you've got a lot of time. You've got a full month, so they're looking to close it before the earnings. I would expect if this works, it's going to work in a 3-week time frame, which means we'll be before earnings anyway. What do they want to do here? They want to sell the 95-200.
I think they want the Jade Lizard. So they're selling the 145 put, and they are they're short the 145 put. They are long the 195-200 call spread.
Yeah, let's put this up here. The 190.
I'm guessing they got more than the width of the strike. Right now, it's a $4 credit, but
right, the 195-200 call spread. That's $1.25. We like to get closer to $1.60-ish. If I sell the 145s, you get $6.45. So you get a decent amount of credit here. It brings you down to a break even of 140. So you have one of two things here. You can move down this spread a little bit to the 90-95 again, which gets you only $1.17. They must have wide markets here. They do 50-cent wide markets. That's the problem here. I don't know if this is going to trade. Let's see, 185, 190, and then the 145 puts. Where did they want to do their spread? They were doing their spread at...
they didn't say a price. They just mentioned the strikes. But
stock's up 50 cents here. Let's see if we can do... I don't know if you're going to get filled anywhere near here, but let's see. Natural bid is 610. Natural offer is 740. Mid price is 675. I'm going to go above mid price and walk it down and see what happens here.
Chris in Asheville, North Carolina, beautiful area.
Is it? Have you been?
Oh yeah, a long time ago, but yeah.
Oh, good on you. Let's see. I'll move Lulu down a little bit. Let's see if we can get filled. at 275, 675, sorry. I'll go down 10 cents below or so. I'll go down to 665 and see if we can get filled. This seems like it's a little bit too rich because of the amount of credit you're receiving here.
Yeah, it does, right?
Mid price is 675. I'm going to go down to 660, and then we'll let it sit. If we get a little bit of a downtick, Lulu's up 50 cents right now. We'll get filled, but I'll let it sit in Lulu get filled at our price.
Awesome. Let's go to the last one. Gold, the future /GC, bullish iron condor /GC, December, wider put wings, tighter on the call side. So the 3,700, 3,800, so $100 wide on the downside, and then $50 on the upside, 4,700, 4,750.
Yeah, who is this? Is this Derek in Vegas?
Derek in Vegas, yeah.
I think Derek's just playing with me because I have a wide gold iron condor on now. It started as a upside call broken wing butterfly that was around a 15 delta, pierced my upside, so I sold a put spread. Then it quickly sold. Oh, that's the SPX trade that we put on. I figured let's take a quick 10% on there. I got filled at 460. I don't know what's going to happen with the market. We'll just sit in there. Usually we take around 20%, but I figure if we can scalp a trade, since we didn't make a lot of trades for this segment, I figured why not take a quick little scalp there of around 50 some odd bucks or so on the overall trade. So 10%, going to our research, taking 10 to 20%. I don't know what's happened to the market. Let's see. Oh, no, that's just, no, not Lulu, but I'm trying in Lulu. Mid price is now 660. I have a gold spread that I'm out $5 on. So I'm working my way back to even here and really getting twisted in the wind. So Derek, I get your joke, but I'm not going to fall for it. So there.
You cracked me up and you said, who's this? Derek in Vegas? I thought it was like a buddy of yours or something.
No. He's no friend of mine now. No friend of mine now until I scratch that gold spread. But I'm pulling for you because I need it to stay in this range too for a couple of days, and then we'll be back to even on this. How many did we do? We didn't do too many. I think we did a scalp, maybe 3 or so total.
Yeah, if you count this, 4, I guess. Right?
All right, there you go.
Looks like we did a little more than that even. Look at that.
Yeah, there weren't a lot of some of these stocks didn't have great markets in them. So kind of a little funky there. Plus watching the market here. Even the S&Ps are up 25. Let's take a quick look at this. Even the S&Ps are up 25. NASDAQ up 210. I'll round up. The Russell, which was the weakest of the group, actually catching a little bit of a bid here, up 570. The Dow was weak like the Russell, not as weak. Looks like it's basically unchanged. Volatility up 15 cents. And bonds off of their lows, basically down 2 ticks. Bitcoin hanging in there, just under 111, 110.6. Let's take a look at some of these movers that we have to the upside. You got Netflix up 35, Reddit up 32, Amazon up 24, Coin up 23, Roku up 13, Tesla up 12. We haven't mentioned that all day. Tesla IV ranked down to 19. On the downside, who are the bad boys today? Microsoft down 9 and change. We did a call spread in there. Meta up $5. Meta down $5. Baba down $4. They've been weak all day long. Goldman Sachs, which was the weakest in the Dow, down 3. AVGO down 2 and change. Google down 2 and change. Meta from yesterday continues to have its weakness. It's down $4.70. Let's take a quick 90-second break. I can regroup here in a little bit, and we've got a market measure next. We'll be back in 90 seconds. Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered
that. Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Jamal, we are back, my friend, but you know who we're joined with? We're joined by my friend Sahil is here. We've got a market measure. How are you, Sahil?
I'm doing good. Fine market day today. How are you guys doing?
Doing good. Thank you so much for coming on the show today. You're a great asset to the team. For those who don't know, you're on the research team. You've been doing a stellar job for quite a few years now.
I mean, I can't believe it, man. You have graduated. You have officially graduated. He's calling you Sahil now. He's not calling you Baby Shark. I don't believe it.
Well, when he comes out for trades for the research team, I give him the Shark. But
Jaws,
today
Shark.
got Provenance.
At least nobody has to listen to that song anymore, you know? I could tell people started to get a little annoyed by it.
People or you?
Huh?
People or you?
No, I was obviously getting annoyed by it. But I think Tom was the only one who really liked that one, to be honest, okay?
Yeah, he can be annoying.
Yeah.
Well, what you got for us today? What are we talking about?
All right, so instead of diving into some statistics or some math or whatever, because it's a Friday, I thought we'd just take a look at how the market's been doing. You know, this year has been crazy year. Pretty much all years are if we really get down to it. But so we're just going to see how the market's been doing from a research perspective, kind of like a beefed up research corner. So we have plenty of slides talking about different trends in the market. So, yep, let's just get started. So the first thing I wanted to touch on was the current definition of low volatility. This is something that we've been touching on in a bunch of our shows over the past few weeks. And so we can touch on it from a research perspective, is that our current definition of implied volatility, our low implied volatility, has evolved. So now, I guess if you would ask people what low implied volatility would be, they would probably say somewhere around like 14 or 15, whatever, something like that. Because if you look from 2020 to 2025, all of the average VIXs have kind of been higher than that. But now, like if you go back to 2013 to 2019, and this is especially something I was talking about with Nick, during that Volpocalypse time where you guys basically had no volatility during that 2017, 2018 period, your low definition of volatility might have been like 11 or 10 or something like that, or like 12 or something super low that we can't even think about right now. So it's just interesting how the changes have been made into the market, how we kind of communicate in the market differently nowadays, where low volatility, high volatility, these are, all up to a personal preference. And we actually are collecting more premiums than we would have been back in the day. Just a little easier to trade in the market nowadays. Mm-hmm.
Yeah, definitely a good little point out there. And you're really looking at, volatility here. And that's something that I love to look at. You're kind of surprised when you look at, volatility. You say it's kind of low right now, but really it's at the higher end of where it's most recently been. Am I reading this correctly, Sal? Not as high as 2020 and 2022 pandemic years here, but look how mean reverting it was from 20 to 21. So if you're playing a mean reversion here and you've got a 19-ish implied volatility, which is a 1% move in the overall market, the market being such a high price, that makes the move so much more exaggerated, right? So you got to get used to this too.
Yeah.
There's a lot of little factors inside there. So great little slide to put up here.
Well, a couple of things here. I mean, just look at 2015 to 2020, right? And look at 2020 to 2025. And arguably people who have just started trading in these last 5 years have just gotten such an education on volatility and market moves when you look at those numbers right there on average VIX. And I'll do you one better. I remember when I came into the game in 2006 and I started working at a prop firm, the average volatility, it was pretty low. I mean, it was probably on the order of something like a 27. I don't remember what it was, probably like 13 or something. I remember volatility popped like 2 points. The whole firm stopped trading because everybody was so short. They made everybody stop trading and they went into risk management mode just from vol popping from like 13 to 15.
Yeah, so just the moves are much higher now. I mean, I put this on specifically for younger traders just like myself, because obviously I've been starting to trade in the past 5 years. So just putting it into a little context, how it was before COVID and how it was after COVID. So
yeah.
Very good. Good slide, my friend.
Next slide. Yeah. So this one is just something that happened this week. So S&Ps have been hitting all-time highs pretty much every week, it seems like, in September and October. But what's interesting about that is it's been very top-heavy in the reasons why SPX has been hitting all-time highs, and we'll get into that more with the Mag 7 stocks later. But 373 of the stocks in the SPX declined this week, despite the stock market nearing all-time highs. And then in October 29th specifically, 9% of the stocks in the SPX reached their 52-week all-time lows, despite despite the highs in the market. So it's kind of showing that it's really top heavy, and the stocks are moving, but a majority of the stocks in the bottom portion of the SPX are actually moving down, and it's something really interesting to think about. I would like to point out, so on the table over there, I have the 10 biggest losers in the SPX over the past week, and specifically we can look at Chipotle. Chipotle has really had a drop. I don't know why we were talking about this in the office. It was me, Errol, and Gus yesterday. We were just talking about this in the office about Chipotle being down, just because the CEO has made some pretty interesting comments, the Chipotle CEO, and now nobody seems to be going to Chipotle anymore. It's like $15 a bowl, $14 a bowl of just rice and chicken, burrito, whatever. You can just make it at home kind of thing. So it's interesting to see that.
His comments yesterday were so ridiculous from what I saw. This guy said basically that the 20-somethings that are just coming out of college aren't able to pay for their bowl because of their current situation.
Yeah, student loan debts and everything that they have, credit card debts.
Dude. First of all, how about you start getting good like you used to be a long time ago? Like you're not really that good anymore.
Yeah.
I mean, how about just
they call them slop bowls, Chipotle and Kava. Just the white collar workers during their lunchtime go to these slop bowls. But I mean, it makes sense kind of. It's not as good. You're completely right about that. When these companies start out, when the restaurants start out, they're so much better than when they become so corporatized. So.
It's similar about everything, though. I mean, here at least you can taste it, but that's kind of they lose their innovation, right? And they lose their kind of whatever their intangible is, that intangible thing that makes them good. Mm-hmm. I would just like to see the food get hot. If I was a CEO, I would make hot food. That's where I would start off with.
Okay. Interesting.
Yeah, I'm tired of the Shigella dysentery. Just hot food is what I want.
Yeah, some of these stocks you have on here, Cigna, I noticed that one had a big drop yesterday. I think it was an earnings move. Fiserv, obviously same deal. I'm actually short some puts in there. It's a tough one. But I think your slide is great here. It speaks to the idea of market breadth recently, and it's been kind of weak. The other thing I'll add is that the thing that I look at a lot, and we have it on the platform, the number of S&P 500 stocks above the 50-day moving average is only it's under 50%. And typically at all-time highs, it's like in the 70% range. So that's kind of interesting to me.
Yeah. So it's all-time highs, but not how it usually is, which I find it makes for a very weird time trading where you're only looking at a couple stocks basically. So,
yeah, you're right about that.
So next slide. So now we can go into the Mag 7. So I'm going to split this off. The way I've split this table off is I've looked at Nvidia and Microsoft specifically, which are the top two in the Mag 7. Then the rest of the Mag 7, which are the other 5 stocks basically. And then the rest of the S&P 500 stocks, which are the other 495 stocks, or because there's 496 stocks, because there's 503 stocks in the S&P right now. So I've split this off. So January to September 2023, you had 15% of the 15.7% of the contribution to the total S&P was done by 496 stocks. 53.1% was done by 5 of the stocks, and 31.2% was done by just Nvidia and Microsoft. And so the Nvidia and Microsoft share has kind of stayed the same, but they've increased their share compared to the Mag 7 because the contribution that the other 5 stocks in the Mag 7 has given to the overall S&P has actually reduced a lot because the bottom stocks have actually increased their contribution a lot. So that's a very complicated way of saying, I have just a one sentence explanation on the right of what I'm trying to say, is the non-Mag 7 stocks have actually increased their contribution share, and Nvidia and Microsoft have increased their share within the Mag 7. What does this basically mean? Really, the Mag 7 is being led by only 2 stocks, Nvidia and Microsoft. The other 5 stocks, while they are very important parts of the Mag 7, they have not increased their market capitalization as much as Nvidia and Microsoft have, and they've really been riding this wave, riding the bubble that people are seeing that we might be entering in the future, which we'll talk about later. So I just thought that was an interesting way of breaking it down between the Mag 7 and the rest of the stocks.
Such a great slide here on showing you that these fringe 500 stocks have really caught up to the Mag 7 or the Mag 2 now, right?
Yeah, basically it's Mag 2 now. Yeah.
Right, as you're pointing out, as opposed to the narrative that everybody talks about, the Mag 7 stocks are really the whole market here. Mm-hmm. I would actually, just from this slide here, look at it and say, well, if you're bullish, I mean, this is the two-sided coin. If you're bullish, you could be saying, well, this last couple of months, you really got paid on your fringe stocks that you haven't been getting paid on previously, going back to September 2023. That's the bullish side of it, and maybe that's going to continue. The flip side of that is now you have the overall market, like, the rising tide lifts all ships. Does that mean that we take a little bit of a breather here because we don't have any underperformers in the S&P 500 right now? Do you see the two sides I'm trying to make here?
Yeah. I understand completely. Yeah.
What a great slide, Sahil. Really is a great slide. Really kind of gives a lot of good food for thought here. Really a great slide. Good job.
Absolutely. Yeah. All right. Next one then. So now we can talk about market capitalizations. So I have from 2000 to 2025, so 25 years, what the market capitalizations were. Obviously, 4 of the Mag 7 stocks in 2000, and then the other companies had their IPOs later, 2005, 2010, 2012 in the case of Meta. And so this is just how the market capitalizations have risen over time. It's just a nice, interesting graph if anybody was curious. And interesting, in May of 2025, the Microsoft market capitalization was 3.42, and the Nvidia one was 3.30. And they've already increased all the way up to 5 trillion, 4 trillion. Apple has increased to 4 trillion. So just in the span of this year, just in the past 6 months, market capitalizations have increased by like $1.5 trillion or $1 trillion for these stocks. So just shows like the complete rise that is happening. And so I put the Mag 7 stocks, the current market valuations, and their weighting in the S&P 500, just if anybody was curious.
These things are massive, man. They're continuing to roll as markets go higher.
Yep.
Yeah, Microsoft's got to get its act together. I mean, 4 trillion. I mean, we need a couple more $5 trillion companies to really solidify this bull market that we've had.
Absolutely. Just keep on riding the highs. Yeah.
Hung out here. What's that?
Just keep on riding the highs then.
Yes, of course.
Trade what's in front of you.
Nobody wants the Bears to win ever.
I know.
They'll have their day.
I know. They have their day.
They had a small 2-week period in April this year, but nothing. All right. So next one. So everybody is talking about AI bubble, no AI bubble. I'm going to pose a question to you guys just to get your input on this. Do you guys think we're going to be entering a AI bubble just like we had in the tech world in the early 2000s, or do you think things are priced into the market correctly right now?
Wow. All right, Jamal, I'll let you go first.
Yeah, I bet you will. First, the word bubble, I mean, it implies that, that something's going to pop, right? And there's this, there's not enough actual tangible stuff. And I feel like it's tangible. I mean, we're seeing the results of a lot of AI. You can argue that there's a lot of overspending. I mean, you can argue that part. I don't know if I love the word bubble, but are we a little inflated? Yeah, probably. We could let a little bit of the air out, I would say, of the tire.
I see. Okay. Tony?
I have this argument or discussion with Nick all the time. Everybody says, we're a little bit bubblicious, which, by the way, we should play that little bump that we used to have if we really want to embarrass ourselves. That the market's a little bit bubblicious here, but it's been bubblicious for the last 3 or 4 years. So if we were to, let's just round and say everything's up around 20%. I mean, I know it's close to 15% on average. Some are up a lot more than that in the overall market. I'm talking about the 4 indices like, the NASDAQ, the Russell, the Dow, and even the S&Ps. If we go down by 10%, is it even a downtick anymore? I mean, the numbers have gotten so big. So what would a bubble, are we going to get cut in half? If we got cut in half, now you're giving me something. You know what I mean? Like that's a market correction. I think the corrections have actually gotten bigger. We haven't had a 5% move. Do I say all year? I mean, to the downside? I mean, if it is, it's very short-lived. I mean, we had that one little April, and that was about it. I mean, after that, we haven't had anything of any kind of movement to the downside since April. I think the down move has actually got to become bigger than what everybody's used to. The 10% correction, I think you can double those numbers. So just because
the stocks or the overall stock market is higher right now, the prices are higher.
Bigger,
you have to have
right.
a larger percentage in order for, a meaningful crash kind of thing to happen. So
that's right.
Yeah.
I mean, my point is we take a 20% move down in the end of this year or January or February. We're back to where we were in 2024 when we were at all-time highs and bubblicious.
Yep. All right. So, I mean, this is kind of what I've been hearing around the office, hearing from a bunch of traders in Discord and our Discord and Reddit that we have now. Just kind of talking about this different things. Some people think we are, some people think it's priced into the market. It's always just good to hear different people's opinions about it. I kind of agree with both of you on that. And just to dive into these tables now. So what are we looking at over here? So we are looking at the top 7 stocks, the tech bubble leaders, I guess you could say, in March of 2000, and then the Magnificent 7 right now in 2024. We only had data up till 2024, so we're going to take a look at that instead. So stuff might be a little bit different right now in 2025, but it shouldn't be too much. So I don't know if you guys remember all the way back in 2000, you had Lucent and Nortel networks. I mean, they don't even exist anymore, and they were the two most, like, they were 2 of the top 7 back in March of 2000. So obviously 2000 was definitely a tech bubble. What might separate the 2025 version, and the reason people try to bring it up is the market capitalization aggregate for the tech bubble leaders in March of 2000 was 19.0. Right now, the Magnificent 7 is 31.3. So people are saying there's a lot more concentration in just 7 of the stocks. So why are we not entering an AI bubble right now, or why will we? Why won't we? And the arguments to be made against this are the cash reserves, the PE ratio, and the net margin. So the PE ratio for the Mag 7 stocks are actually lower than they were for the 7 stocks. We'll just call them the tech bubble leaders of March in 2000 because there's not really was a name for them. Their margin, so the profit margins are actually much higher. You can even see something like Nortel did not have any profit margin. It was -1. Like, when you're not making any profit, obviously, there's just a lot of speculation going on. And they have much higher cash reserves. Their cash as a percent of market capitalization is much higher with the Magnificent 7 than the 2000 stocks. So people are saying it's priced in. These tables would suggest that they actually have that. It's not all speculation. There is a lot of speculation obviously going on, but they actually have the cash. They have the PE ratio. They have the profits to kind of back it up more so than the stocks did in 2000. So I don't think, I think a nice takeaway from this is obviously nobody knows what's going to happen in the future. This is true for all of trading, but a potential AI bubble might not happen it might happen, it might not happen, but it won't be as extreme as the tech bubble was in the 2000s for all the reasons I think we mentioned just now. So.
All the way back in 2000, the kid says.
Yeah.
I was in grad school at the time, but you're making my point, and this is a great slide, by the way. You're making my point, like you said, just looking at that cash percentage and looking at the net margin, very different in 2000 from what it is now, and that's my point. Like, we might be a little inflated on the moves, but it's not a bubble, man. I mean, there's tangible value to these companies and assets.
All right, next one. All right, so this is not on Mag 7, this is on Treasury rates. So I found this particularly interesting because obviously, as a younger person, looking to do more adult things, hopefully in the future, buying houses, doing more borrowing in the future, Treasury rates and how the FOMC and how the Fed.
Wait. Time out. Let's get into the psychological mind of Sahil now. So you said adulting thing. So buying a home is an adulting thing?
Well, yeah. I don't know necessarily how many kids are buying homes, Tony, but
so you don't consider yourself an adult now because you don't have a home?
Oh, is this what we're going for? No. I'm an adult by the U.S. government law saying age 18 is an adult. Yeah, okay. But
really, you can't drink when you're 18. So do.
Oh, okay. So if we're going on that definition, then 21. Okay. If we're going on the maturity of the mind, like your mind only matures when you're 25.
No, you can die.
Right?
You can go to.
Nah. Adult is when you're not taking money from the parents anymore. That's
okay.
Adult.
So I am not taking money from my parents. I'm on my phone plan with my parents and their healthcare plan because you can be on the healthcare plan until you're 26. And I think that's a good thing to be on my parents' healthcare plan until then. Everything else I'm paying for on my own, okay? Don't let dad confuse you, Tony.
That was the biggest setup, and you are an a-hole. Okay? You're doing that to the kid, right? You
started it. What are you talking about?
You are an a-hole, all right? Listen. You're an adult when you pay for your own phone, Sahil.
Okay, fine. I'm not an adult right now. I apologize. I'm also not looking to buy a home anytime soon either, Tony. So, my definition still works. Okay.
I think half the office is not an adult. Okay.
Okay.
All right. Whether they own a home or not. All right. When you get off our phone plan is when you're an adult. All right.
All right. I see. I will do that. I promise. Okay.
No. Listen, phone plans are cheap, man. You have your own home.
Every one of my friends in New Jersey is still living with their parents at home, commuting to New York every single day, or working in New Jersey offices. Okay, I'm the only one who moved out to another city. Okay.
Good on you. Good on you for doing that.
Or the audience, but I appreciate you playing along.
Okay. It's very nice, Tony. Very nice. Thank you.
You're talking to the dude who moved out at 17.
Your father's going to write me now all day long about this.
I know. He's going to take everything I said out of context too, but it's fine. That's his job.
We're going to try to text you. I'm going to text you and call you. Your phone's going to be shut off. My son is a man. You know he takes this stuff real seriously.
Of course he takes this stuff real seriously. Is it every parent wants their kid to actually, grow up, okay? I don't know if I've grown up in his eyes yet. But
just so you know, Sahil, I never want my kids to grow up ever. Okay? I mean, it's what keeps me relevant, all right?
Thanks, Tony.
By you not growing up.
Yeah, I know.
So.
You're on the show with Nick, right? You still see him as a kid every time he talks?
True.
You're like, man, wow, he's 35. He doesn't know anything though about the market. That's what my dad tells me. It's like you haven't learned anything, have you, in 2 years? Well, of course I have.
I'm just glad Nick wipes his own butt now. I mean, there's touch and go there whether I was gonna have to go to college with him. So you're way ahead of that curve, Sahil.
Okay, thank you. One compliment was received at least.
Oh, this went way off the rails.
Next slide, please, John. Put the slides on.
All right, no, back to the Treasury yields. We segued out of that.
Yeah. Gotta make his point.
So this one's very quick. Okay, so Treasury yields. So I'm looking at 1992 all the way to 2024, and then I just put the Treasury yields this year because obviously you're not basing any of your decisions on what 1992 was. I just put that interesting because it's 4.4% right now, the 10-year. So this is looking at the 10-year Treasury. And during just after the Carter administration, when the into the 80s and then into the 90s, the borrowing costs were just so much higher. And a lot of young people are looking at borrowing costs right now and saying, I mean, they're pretty bad. Obviously, they've been rising since 2020, since COVID, and due to inflation. But the borrowing costs were just so much worse in the 90s, but the home prices were cheaper. So now we have much, much higher home prices, but borrowing costs are still high, but they're much less than they were in the 90s. So I just thought that was something that, as a younger trader, it's just interesting to look at how the Treasury rates were 30 years ago, how they are now. And they've been rising ever since September 24 of last year. And obviously the Fed meeting that happened and Powell's conference that happened this week, he's saying in December we might not even cut interest rates. Like he was kind of hinting at that a little bit. So people are very speculative on Treasury yields right now. So I just thought interesting to put the two graphs on here on the slides right now.
Definitely interesting. So in your humble opinion, when I was paying 18 to 21% to buy my home to become a man, 18 to 21% interest rates to become a man, do you think you have a better point of entry at 4% to become a man? Are you...
Sahil, you don't have to answer that.
Is it 5 times easier for you to become a man than it was for me?
We're talking about the interest over here. You're not talking about the principle. The principles are much higher now.
You're not going to win this argument. You're not going to win this argument. Just go to the next slide.
Okay. I'll take Jamal's advice and respectfully invoke the fifth on this one. Okay.
Sure.
All right. These are the currency trends. So we're looking at the Swiss franc, the euro, the Australian dollar, the British pound, the Canadian dollar, and the Japanese yen compared to the US dollar. And according to this graph, the Swiss franc, the euro, and the Australian dollar are trending up. The British pound, the Canadian dollar, and the Japanese yen are trending downwards compared to the US dollar. All the world's economies, especially in the West, seem like they're going to shit on like all of the countries. So it's nice to see how the countries compare with each other. The Japanese yen has been in the news a lot lately just because of how much it's been falling. So I just put a graph this year. How have all the currency trends been comparing to the US dollar? So I don't know if you guys have any too many thoughts on stuff like this.
We talked about earlier. The central banks obviously had a lot of them had meetings this week, and Japan's doing things different than everybody else. I mean, everybody is 2% for the most part. We're high as 4%, but they're at 0.5%, and they just raised for the first time and only time in like 5 years. So.
All right, guys.
Yeah. Yeah.
2 more slides. Stick with me. Just 1 more slide in the takeaways, okay? So we are trying to, as the research team...
You've done an amazing job. Don't...
Thanks, Tony. I wanted to get nice Friday, nice keep it not statistics, not too much math, just general market research talk. Like, I think we should do a little bit more stuff like this on the research team because people have been asking for just general market research. So we're also trying to improve our graphs, by using new stuff, Plotly, on our Python databases and everything. So this is some new code we have written to track stuff that's on the platform directly. This is the most traded stocks this week, the 20 most traded stocks this week on the platform, and how they compare to active trading, your core holdings, your speculative holdings, and your low activity. How that's basically defined is based off of liquidity and implied volatility. If your liquidity and implied volatility is high, that's kind of seen as more active trading. And if your liquidity is low, but the implied volatility is high, that's seen as more of your speculative trading, and then vice versa for the low implied volatility ones. So if anybody was curious what people are trading the most, what are the 20 most liquid stocks on the tastytrade platform, I mean, they're kind of names that you would expect because, they're all in the tech industry, and they're all dealing with different industries that are in the news a lot lately. But these are your 20, and I think we can do a lot more research on stuff that's happening actually in the market currently, what people are trading, what people are actually doing, all the speculations that are happening. This is something we can focus on more on the research team. So if anybody wants to email research@tastylive.com, anything they want to look at immediately currently in the market, we can get right on that. So.
I love it. I love it. I agree with you too, by the way. I think you should do a lot more of this.
Yeah, I mean, these are the liquid names. This is where you want to be.
Yep.
So last slide, takeaways. So it's kind of hard to do takeaways for talking about so much stuff that we did today. So I just kind of kept it general to 4 bullet points, which is that inflation easing and rate cut hopes are supporting equities, which is why equities have increased their market share a lot, as we talked about on that one slide, compared to how they were in 2023. Earnings remain strong, but market leadership and valuations are narrow. Geopolitical and policy risks continue to pose volatility threats. Lots of moves when the market is so big like this. The moves that do happen, they might not be as big percentage-wise, but the moves are happening a lot more nowadays with the volatility, and the market sentiment remains optimistically bullish overall. So obviously everybody has their own opinion on what the market is doing. Some are bearish, some are bullish, like we've been talking about. The current SIBO equity put-call ratio is 0.44. When the put-call ratio is that low, it generally means that the market sentiment is bullish. So that's why we might be trending upwards, and we might be trending upwards for a while. But at the end of the day, nobody knows anything. So let's see how this plays out over the rest of the year. I hope at least one of these charts, some of these tables have been helpful to try to understand how the market's going this year for people. So yeah.
Sahil, great job. Honestly, really was a great segment. I realized things that I didn't realize before. You put it in a different perspective. It was an excellent job. I know you don't feel like a man, but you're a man in my eyes. Yes.
Thanks.
Great job, kid.
Thanks, guys. Yeah.
Applause. Great job out of you. We're going to take a quick 90-second break. We're going to come back. I believe we have Quentin coming in. So Quentin will be next. No Marty. Marty's AWOL. We'll take a quick night, which has happened to Marty back in the day a lot of times. I'll wait for him to come on to tell those stories. But Quentin will be here. We'll be back in 90 seconds from the trade desk. Even the S&P is up 41. We'll be back in 90 seconds with Tasty Live.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex.
now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Jamal, we are back, my friend. You know what that means. Time for the trade desk. Quentin, my man, how are you?
Fellas, how's it going? Doing well. How are you?
What you got going on there, son?
So I did not get the memo. It's not everyone else. It's me who didn't get the memo. Last year, a bunch of people dressed up in the office. And then I was like, oh, okay, I'll come into the office in a costume. And I am the only person that is dressed up.
They played you.
They played me for sure. Yeah.
Wait, not even like Tori or Alyssa dressed up? Alyssa,
no one else is dressed up. It is just me. Clink's got a Halloween looking blazer, but it is just me. Yeah, wait, here's my. I can stand up and show that. Sure. I got the full kit on today.
You're a space cadet?
Thank you. Yeah, I'm an astronaut. Yeah.
Big John Glenn right there when you did that.
Yeah, there we go.
Do you have a helmet and everything or what?
No, I don't have a helmet.
You should have a bluey helmet, or like a cartoon helmet, like a Mickey Mouse helmet or something like that.
I was trying to be festive. I was trying to be fun. I was like, everyone wore costumes last year. Like Jason was wearing a banana costume. And then I was like, okay, yeah, I'll dress up too. And then no one else dressed up.
Can I tell you what happened? Sosnoff is the fun vacuum. So when Sosnoff was here, he doesn't like costumes and all that other stuff. So everybody would do it. Now that he's not there, there's no incentive to do it.
Yeah, it's not as fun when you're making someone, when there's no one to make mad anymore. It's not as fun. I gotcha.
That's right. Well, you look good.
It sounds like next year people. It sounds like next year people should definitely dress up.
The big question really is, are you going to dress up next year?
Oh, for sure. Yeah, I'm not afraid.
That's all that counts.
I'm not afraid.
Don't let them change you, my man. You be you.
Exactly. That's what I'm saying. I'm not afraid. I think it makes it cooler that I'm the only one dressed up.
I agree.
It's just
me. I agree.
I think it makes it even better.
It's great.
All right.
What do you got for us, my man? We can close.
Let's get into some symbols here. Top 20 symbols going through the system, and they're IVRs. We've got Amazon 20, Apple 13, Meta 26, Tesla 18, Nvidia 23, Microsoft 19, Palantir 35, Reddit 17, Netflix 15, Coin 26, iBit 49, MSTR 14, Google 30, AMD 53, Oracle 51, GLD 54, Micron 45, Robinhood 31, Chipotle 34, and Roku 17. All right, there we go.
Very nice. A good list. Yeah, a lot of them catch a little bit of bid here with the overall market itself. Let's take a quick look if you want to before we peace out here. Even the S&Ps are up 41. The only laggers of the market is Meta, again from yesterday, down another $8. Microsoft down $5. A little confusing with Microsoft down $5 and the NASDAQ up 277, regaining a lot of what it lost. It is $150 off of its highs. Russell gaining strength too, up 14. It's up half a percentage point now, equal to the E-mini S&Ps up 41. With the E-mini S&Ps were much stronger than the Russell earlier. So you have that little bit of that rotation with the Russell catching a bid equal to the E-mini S&P. Still the NASDAQ, the strongest of the group. Starbucks can't get out of its own way, down $1.40. AVGO, which has been a leader of the group, down $2. And the Chinese stocks like Baba and Baidu are a little bit weaker here. My friend, thank you so much for joining the show. Quentin, you did a great job. Appreciate that. Jamal, thank you so much for filling in for Nick, who is out in San Diego. Hopefully you come out there on Sunday to visit them in San Diego. Good day here. Made a couple of trades. The 0-day trade working out nicely. We took ours off. It's still over $1 profitable now. Volatility hanging in there. Don't be surprised by that. As we talked about earlier today, volatility going to hang in there for the weekend. 1830, at least that's what I expected to. Just under 19. You're going to have to wait another day to get that premium contraction in these options. Another weekend. Monday, if we open higher, you will see volatility down. And if we open unchanged, you'll see volatility down 20, 30, 40 cents. We're going to take a quick 90-second break and come back. We got Liz and Jenny next. Peace, everyone. Enjoy Halloween. Happy Halloween. Don't get...
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome to the Halloween edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette. To the left of me is Miss Jenny Andrews. How are you, Jenny? Happy Halloween.
Happy Halloween. Happy Halloween. It doesn't happen often that your birthday, well, I just don't remember often that your birthday is falling into Halloween weekend. So this whole weekend is just going to be crazy for you. Halloween, birthday.
It's always... you're not supposed to remember this, but it's always wrapped around Halloween. Do you remember when Mandy and I used to throw those Halloween parties for my birthday?
Oh yeah, back in the old college days.
Yes. It's so funny because Kathleen and Mandy have been sending me pictures of. We used to do it all the time. Yeah, but it's always my birthday is November 2nd, so it's always wrapped around Halloween. Like every present that I've ever gotten as a kid has Halloween candy taped to it.
Oh no. Yeah, so have a happy
and
birthday.
Tomorrow is Scott Somer, our International Man of Mysteries birthday. So happy birthday, buddy. Yeah.
Geez. Well, I can't believe it, Liz. Enjoy your last year in your 40s.
I know. I texted Christy Lagoni because it's her birthday today and be like, all these suckers are turning 50 this year, not us.
I know. I have a few more months.
Yeah, a few more months in your 40s. And then, so we got one more year. But I'm not yet. I'm only 48 right now. So today I'm 48. I'm not even 49 yet.
No, you're young. You're just a kid. You're going to be, when we're all in Mexico celebrating our 50th birthday in January, you're going to be like, what the heck?
I'm like, we're decades apart. You're in your 50s. I'm in my 40s. We have nothing in common anymore.
All right, so I've got 900 little candy bars. I hope I don't run out. I'm going to give 2 to each, which gets me 450 kids.
You have 900 little?
Yeah, 900 minis. Which
I have 400 full size.
So, I mean, that's what I'm thinking. I'll get 400 kids. I'm giving everyone 2. That's
what I said. So I love being in the house with a full size. So we always have full size. And Dan's like, you have a problem because you always wind up giving out 2 to all the kids. I was like, I'm not doing it this year. This year, they're only getting 1 full size.
And Tony does the full size. I've done it before, but for me, my trick-or-treaters, it's hit or miss on the weather. Like, I've had 600 and I've had 150. Like, it's hit or miss depending on the weather.
So I bought a ton of full size, and then I had to buy 2 full bags because my neighborhood is, like I said, I love it, but it's a scene from a movie. So, I mean, when you open my front door, it's just kids, fire truck, police officers, because my neighborhood has lost their mind in Halloween decorations.
Oh, well, that'll be fun.
They're all super scary, so people come from all over to come to my neighborhood. It's fun, but,
I remember so it was a year ago, last Halloween, where they were setting up for the Indianapolis Taylor Swift final Eras tour that was going to be on November 2nd, I think, on your birthday. And so today was the day, October 31st was the day they were setting up the chairs, and that's when they dropped more tickets. So my entire day on Halloween last year, I was just trying to get the extra tickets that would drop. So I had like my laptop in my hands and my bucket of candy at the door, handing out candy to the kids, just constantly watching for tickets to go up. And I did get them that day. But
you guys didn't go to the concert?
On your birthday last year, Lily and I did. Mm-hmm.
To the Taylor Swift concert?
Yeah, the last Eras tour in Indy.
Oh, Indianapolis. Yeah. I didn't. For some odd reason, I didn't remember that.
Yeah. Last year, I know it was your birthday, but I don't. Because it was all so quick. It was all so quick. Like I was getting the tickets on Halloween, and then we left the next day, and the concert. It was all just like boom, boom, boom. You probably. Yeah. I don't know if I talked to you. Halloween maybe was.
I don't think you told me you went to the Taylor Swift concert.
Friday we drove to Indianapolis, went to the concert.
Vanetta would be so proud. All right, but Jenny, do you know what is not scary? This market.
No. Earnings, everything
Let's
I
pop
saw
up the
was
platform.
up.
So
Were there any earnings that were down?
I'm sure there were, but nothing that I was in. So Apple, Amazon, Reddit, Net, everything that I was in went up.
We have a couple. Okay, so we did Amazon. We did another crab. So we bought the 7-day at the money. It was trading 227 when we did this, and we sold 240s, but 247.5.
Perfect. This is exactly what we want to happen.
Yeah, we're up $358. So we will take that off.
And I like the crab. The crab is a crab and diagonal are less expensive ways to play a bullish earnings play.
Right.
So in Apple and Amazon, not that it matters, and we do what we do on this, but I played all of them to the upside too. But I did the buffer. And the buffer, you can make a lot more money, but you also have a lot more risk, and it's a lot more expensive.
You have a lot more. Well, you have here's the thing with the buffer. Like I know I did this crab in Amazon, but I did the buffer in Reddit. When you do the buffer, you have a naked put. So
it's very expensive.
Yeah,
and
it's
in the money
because
naked put.
You have but your risk is far down. Your risk is at about the expected move. Your risk is at about the expected move, but you have the risk of a naked put.
Yeah, but like you do that in Meta, it's expensive and it can take you out too. Do you know what I mean?
And honestly, it was I think our risk was actually well inside of the expected move. Well inside of the expected move because we did so in Reddit, we did this downside ratio spread. Is that what we did?
Yeah, we did a downside ratio spread. We wound up buying something because we couldn't give up. It was $6,000. This is full profit. You can let that go.
And so maybe, do you think 175 was about the expected move? Do you think that's where we put it?
Probably.
Okay, 175. And I think, yeah. And this isn't bad. We collected $1.28. We made $1.28. We couldn't take the risk of a naked put in Reddit.
No, we can't. That's what I'm saying. Not in this account. So that's why I really do like the diagonals and the crabs. They are a low cost alternative to make a bullish trade where you can make some real profit potential versus just selling a put for 50 cents.
Right. I guess
we made $300 or $400 in Amazon. That's pretty good.
All I need to do is buy one short.
You don't need to do anything.
Yeah, I really don't. But I will buy one short back just in case.
Okay.
You know, like just in case. Just in case something crazy happens.
Did you do your SPX this morning?
Oh, call me Blue Wackadoo. I did so many because I started at like 8:55 and then I couldn't stop myself till like 9:10.
Good. Are you out? And you're out already.
I'm out of everything except one. So I was doing $10 wide put spreads and $5 wide call spreads, and I would put the GTC in for them individually. So I'd do $10 wide put spread, 35, take 35%, $5 wide call spread, take 35%. And then as it would move around, then another $10 wide put spread, 35%, then another $5 wide call spread, 35%. So I'm out of everything except one $5 wide call spread.
Good. That's awesome. I'm staying consistent. I did the at the monies. I took 35% out in 14 minutes.
Yeah. I mean, SPOOs are up 40 now. So at 9 o'clock, SPOOs were up 20.
I actually
22, 27. Like they were bouncing around between up 22 to up 29.
Yeah. I put it in when we were up 35 and I'm still out. Yeah.
Yeah. So I just kind of I kind of like that. I had many different ones and they all had their own GTC. So even though I had both sides on, the calls had their own GTC for 35% and their puts had their own. It wasn't like, oh, I need to get a certain percentage of these both sides. And I did the narrower, I kind of like that, the narrower call spreads and the wider put spreads.
Yeah, for sure. For sure.
So
it's not bad at all. I mean, you got some two-way action, so you got out of both of them. And that's why I really like these because I do not think they have anything to do with what the market's going to do during the day. We were down a ridiculous amount yesterday on the close. I think we ended SPOOs down 50 and everybody should have gotten out of their 0 to T SPX.
Right. Yeah, for sure. And I see Blue Wackadoos here. Eric, happy Friday. IV rank 16.5. I put on 2 6-lot iron condors. And you could see 80 to 90 points wide and you could see his short strikes here. 6905 is that 6905, 6910, 6905, 6910. There, his risk would be on the upside, and SPX is trading. Let me take a look.
Let's see.
6905, 6910, and we're trading 6860. So, yeah, he's fine.
Fine. Yeah.
Yeah. Yeah. He's fine. I mean, he might be out already. I don't know. But he did. I mean, if you look at how much he collected, over $7,000 in premium.
Yeah, that's pretty good.
That is good.
Yeah, and he tries to get out for 40%. Usually, he's a 40% guy, which is great.
Yeah. So that's impressive. That's impressive. Hopefully, and who knows? You never know what the market's going to do, but we've kind of just been, up 30, is this the highest we've been?
No, we were up 55.
Oh, on the open?
Yeah, we were up a lot. I think opening print was the highest, or maybe it was before market.
68.79. So
Yeah,
17 points. 17 points high.
Yeah.
57 up 57.
Yeah, that's what I saw when we.
Yeah, I never saw. I didn't. I was out. Oh, I was at the bakery. I felt so bad. I went to the bakery and they had all these Halloween pumpkin cookies, ghost cookies, and I walked in there and I was like, I'll buy the balance.
You did?
Yeah, because Lily's having a party, and then the kids that I know in town, I'll give them a big bakery cookie. And so I felt like kind of a jerk walking in there early in the morning and buying the balance at the bakery, but
if it wasn't you, it'd be somebody else.
And that's what I said. Like I said to the lady, I go, I feel kind of bad, but this will be, and she's like, these would be gone in half an hour anyway.
Yeah, I wouldn't worry about it.
Yeah.
Yeah. Okay, so we do have a very, very, very exciting recap of market measures from Kai, and I'm glad we're getting to do this. He's been sending these to us, but Fridays have been a little bit crazy lately, and we haven't gotten to it, and I'm really excited.
I am too. So you want to jump in?
Let's do it. So this is Kai's, and we asked for this a while ago, right? So what we asked for is Kai to recap everything that happened this week in the market measures. So if you want to go take a deep dive into it, review the tape from this week because it's all archived, but this is just the highlights.
Right, just the highlights. So you get the setup of the study and the takeaways of the study. We're not deep diving into the meat of the study, but we know the takeaways, and that's really what we're looking for. The takeaways.
Wait, Jenny, Kai is the first person that's ever done it for us. We used to ask people this we asked every researcher that has ever walked through those doors, being like, just tell us what's happening. Kai's the only one that's like, okay, you just want the takeaways? We're like, we just want the takeaways.
Right. We're not going to go through the whole study. And then honestly, there are some studies where we see it and we get the takeaways and we're like, geez, I kind of want to see this study. And guess what? They're all archived. So I could go back and look at the slides. They're archived on tastylive.com. But this is nice to see what they're doing. We don't want to miss anything. So we're not watching all the time. We know everyone can't just watch Tasty Live all the time. So we can pop in and take a look at, spend 10 minutes on the takeaways from the week.
And the research team's great. We trust them. All right, let's go.
All right, here we go. Weekly summary.
I mean, honestly, Jenny, I know you got this in advance. They did not allow me to have any type of access to this, so I'm going to be reading it in real time.
You're banned. It's great. Okay, first up, why leverage ETFs struggle over time.
Now, let's give an example of a leveraged ETF. So those are remember what the ones you were doing with Nvidia? Yeah, TQQQ. There you go. Like that's an example of a leveraged ETF.
Yeah, so that's you constantly see that on the most active list, TQQQ. I don't know how many Q. Okay, so TQQQ. Now, we have grown up with the mindset of we kind of stay away from the leveraged ETFs. That's just kind of how we grew up at Tasty. I don't know. What are your thoughts, Liz? I don't have any leveraged ETFs in my portfolio.
Well, so here's the deal. Leveraged ETFs, and I can't wait to see what happens with this. I don't have a lot of leveraged ETFs in there because I'm a margin girl, right? I'm a margin girl. And the margining, what happens with the leverage is you get a lot of leverage there, but it takes it away in buying power, in my opinion.
Right. Yeah. So you might think like, whoa, this is great. This is going to move 3 times as much, but you're using three
times as much capital. Yes.
Yeah.
Or more capital. I don't know if it's 3 times as much, but that, in my opinion, that's what we found. I think they have their time and their place. I also think the leveraged, and I'll never forget somebody telling me this, the leveraged are not buy and hold. They're not get in for the long haul. The leveraged ETFs have like some type of drag, or there's some way that they're making these. So you want to get in and get a very quick move? Great. But don't be like, I'm going to buy this and put it in my IRA.
And I feel like these leverage ETFs, they move by a percentage. So when it's higher priced on the way down, you're getting like bigger moves on the way down. Then when they're lower priced, you're getting these smaller moves on the way up.
Yes. And you can have, with the leverage, you can have the inverse as well. Just keep that in mind.
Yeah. So I don't know. Well, I don't really trade them. We are aware of them. We used to trade them.
I think all these things have their time and their place. It's just not for me because I just trade differently. But go on.
I mean, we will trade UVXY occasionally, and is that leverage? Is that an ultra?
Yes. Oh, that's leveraged.
Yeah, so that's probably the only one I will sometimes have. Okay.
So they look at this. So the assets. Okay, while stocks, I said not reading, but while stocks keeping records, another corner of the trading world is quietly exploding. It's exploding. Okay.
It's exploding. The leverage ETFs. Hey, maybe we're missing something, Liz.
But there's a lot of assets in there. So that's good. So much of the growth happened after 2020, after the pandemic.
Yeah, so in just a decade, their assets have surged over tenfold, now topping 120 billion. Much of this growth began after 2020, as investors sought to amplify exposure to a strong market.
Okay, this is good.
All right,
next. Okay, so across these major leverage single ETF, 2 times only. Okay, so they're just using your 2 times one. Great.
I think that's so there's the different terms, right? Like there's the ultra, there's the I think different terms tell you like what the leverage is.
Yeah, but
now these are just looking at underlyings. The Tesla, the Nvidia, Palantir. Is this the? Oh,
no. Look, and then it's like giving you its 2-time ETF next to it.
So so like these individual product ETF. So like the Tesla 2 times leverage and Nvidia 2 times leverage.
Yes, that's what they're looking at. So these are, so you think, and we got into this because so I remember with Logan, you wanted the leveraged Nvidia because it was cheaper.
He wanted to get Nvidia. He had a small account, and I was just trying to find a way for him to get into Nvidia that was cheaper. And some of these were cheaper, but again, I thought might have been, extra fees involved in them, or who knows? Let's see what they say here about it. So because I think our study was just trade Nvidia.
Well, take a look at this. So if you look from Tesla, 22% return, but the leverage 2 times is down 9%. Now, that's different than everything else. The NVIDIAs are across the board. So NVIDIA's 44% return, but then you have 52, 45, and 50. So those all seem to be a little bit better. Everything else but the Tesla ETF seems to be better.
But again, you're still using a lot more. When you use these leverage ETFs, you're using more capital. So let's say you bought Palantir, or you're going to use twice as much to buy the double ETF. You could buy twice as much Palantir. I don't think there's like a trick here.
PLTU is a symbol, right? So what's ironic about it is PLTU is 122, and there are no options.
So if you buy 100 shares in a normal product, it would be $6,000. How much is 100 shares of PLTU?
It's 12,000.
Yeah, it's double normal margin.
Yeah, it's double normal margin.
Yeah, I mean that's usually how these things work.
So because of that, you should get double the return, and you're not. So I think that's the point. Like, even if you look at PLTR, you should be getting 3%, because if PLTR is 1.5, that's my opinion. But let's go to the next slide.
Okay, so when outperformance does occur, it's typically short-lived and driven by temporary market conditions rather than sustained compounding gains.
Okay.
The
daily compounding means volatility can quietly erode returns. Okay. In markets with frequent ups and downs, this volatility decay causes leveraged ETFs to underperform even when the underlying index ends higher. The drag. Yes.
The drag.
This is the drag. The dreaded drag. We've been talking about this for a long time.
And I swear, because we would sit on the train together, and I would go into Logan's account, and there'd be days where you're like, oh, I'm making money in my Nvidia's up. And I was like, oh, his like little, leverage
is down.
It's down. Yeah, right. It's down.
That's when I was like, Jenny, I don't know what's happening in this, but I think you need to get out. Yeah.
So you can see here, the Tesla versus the 2 times leveraged Tesla, the return. Let's see. And now I'm trying to see starting price, days 1, 2, 3, and he's just looking at 3 days. Starting price.
Let's see the takeaways.
I'm lost here following his little chart on the back.
Let's see the takeaways. There we go. Leveraged ETFs are designed for short-term strategies. That's what we said. I said it before we got here. I said it. I'm just kidding. Not buy and hold investing. Yeah.
All right. Daily resets and volatility make long-term tracking unreliable. Upper risk management and clear time horizons are critical. So I think this chart was showing like, okay, in just 3 days, yeah, they can make a difference. But the previous chart was showing like over time, it doesn't make sense to use those leverage products.
That's good. I do think, if you want to jump in and if you think you got a strong assumption and you want to buy it, it's going to hold up more margin.
Yeah. So if you've got a financial advisor and he's like, I really think you need to invest in this leveraged ETF, you'd be like, I
That's a good one.
Holiday euphoria. What really happens? Do you think this is referring to the Santa Claus rally?
I don't know. Did we just have a holiday that I missed?
I think it's talking about the coming holiday. I don't think it's I don't think the holiday was October, because that didn't really work. I know crypto's up today, but it really wasn't up for the month of October.
So we did have a day off in October. I can't remember what it was for.
We did not have a day off. There was Indigenous Peoples Day where the banks were closed, but it was not. We were not off.
Well, let's stop speculating. Let's see if they're talking about Indigenous people or the Santa Claus rally.
This is like Santa Claus rally, holiday euphoria, which is happening in my house because I'm well underway on my Christmas decorating.
I know you skipped over Thanksgiving and Thanksgiving and Halloween.
Oh my gosh! Tomorrow morning, all of my outdoor Halloween mums and everything. Garbage. It drives my neighbor crazy. I'll throw away all my mums and start putting out my Christmas stuff, but I have to get a jump start on it.
Wait, no. Before we go into this, you can't be a lunatic and keep it up till the middle of January. Because I have heart palpitations when you take down your Christmas decorations.
Technically, yeah, you can keep it up until at least the Feast of the Three Kings, which is like January 6th.
I'm saying if you're putting it up now, you're going to have your Christmas decorations up for 4 months.
Hey, listen. I can't control. I have a company that does my outside, so I can't control when
you can turn them off, or you can take them down. Was it last year? It was like February. You're like, I got to take down my Christmas tree. I was like, your Christmas tree.
I like to leave it up. It makes me happy to look at it.
Oh, I was like, I can't do it.
Down on December 25th, like at night, Christmas night, like the party's over and she's dragging her tree out.
Oh, my husband's been out there with a chainsaw on Christmas on the 25th before cutting the tree in half. I was like, you look insane, because the neighbors are still kissing their family goodbye.
And I just don't like in Chicago. January is cold and dreary and snowy, and there's no reason to take down a beautiful Christmas tree that makes you happy.
There is nothing better than when the house is clean afterwards. It's so clean that everything is down and it just is like a clean slate.
Maybe we'll do a house tour on one of our shows. Maybe we'll take a video house tour of one of our shows, because Liz's house is like a hotel where there's nothing. Like her no one in her family's allowed to have a toaster on the counter.
Oh God, no. And I'm a coffee lover. Nothing's on my counters.
Not even a coffee pot?
No. Mm-mm. I mean, when I'm drinking coffee, yes, and then it goes underneath. Nothing is on my counter.
So you put it inside the cabinet, and then you take it out to make your coffee, and then you put it in the cabinet. That's crazy town. And the only reason we work together
is because you don't make sense and I don't make sense, but together we make sense.
Yeah. So
what's so funny is I just saw this article, and you get things. It's targeted, and I know it's targeted, right? But there was this article that said clutter really affects women's psyche. It doesn't affect men at all. It does. Like clutter, I don't like it. I don't like clutter.
Oh, I don't like clutter.
Clutter to me is anything on a counter.
I don't like clutter, but I like a Christmas tree. So I will keep it.
I like a Christmas tree for a good month and a half, but if it's on for 3, it's gotta come down.
All right, let's see. Holiday euphoria. That took a turn. All right, holiday euphoria can be described as the time of year where people lose their minds,
we're living proof of that, Jenny. We are living proof of that.
Get all giddy and do crazy things while being in a festive spirit. Many expect it to start after Halloween and extends to early January.
I obviously did not read this in advance. I had no idea it was going to take a turn like this. We have received customer query asking to determine the historical and annualized SPY returns from November 1st, which is tomorrow, to January 15th. Compare those results to the rest of the year. Okay, so this is the holiday euphoria. So they think the holiday
it's starting next week. Today's.
I'm telling you, they believe what Jenny believes, that Christmas starts on November 1st and ends on January 15th.
Okay, so one of my favorite decorators that I follow, he does so many houses. He does so many like celebrity, famous people's houses. And he has so many. I've already seen him do at least 20 homes already, because he has so many homes to do. He has to start now.
I believe it. Yeah.
So like the celebrities are already decorating their homes.
Oh, Jenny, I'm okay with decorating early. I just want it down, not in February. That's the thing that bothers me. I'm happy you have your Christmas decorations up. Mine will go up early too.
They're
Mine
not
go
up yet. They're not up. They're like laying on the table, ready to be up tomorrow.
Up tomorrow. I know. Yeah, I'm a fan of that. I just need them. I need them down before February, and then we'll be on. Then we'll be okay.
Once mine are up, I'm going to kick back, open my trading platform, and just buy from November 1st until mid-January.
I don't know. Let's see.
Let's see what it says.
I don't know. We'll see. We have to see what Kai tells us to do. Or you're going to sell. One of the two things is going to happen.
We missed this is one I actually like to see the meat of the study, but here are the takeaways.
Oh, no, I don't care about the meat of the study. This is perfect. Okay, so the November through January window tends to deliver better returns and high win rates. Okay. So you're going to buy.
Yeah. I'm going to be finished with my decorating so I can just sit at my computer all day and buy.
Risk was also lower when the CVAR decreased, which is great.
Okay. And when I say buy, I'm really switching a lot of positions to puts.
I love that we're using 333. Okay.
Risk was also, the CVAR decreased by around 62% during Nov and Jan compared to Jan to October. This likely reflects fewer sell-offs, calmer markets, stronger sentiment. There was only one December that I can remember. I think it was December of 2018. I believe it was December of 2018 where we really tanked.
Where we tanked, yeah, I remember that. And then last year it was in January. No, it was in February that we tanked.
February, it was later, and it went through like April. And I heard Tony today talking about how we really haven't had any sell-offs this year. We did. Yeah,
we had a massive one in the beginning, and you can take it to the tape. Yeah, we had a massive one this year. Okay. So historically, the Nov-Jan window has performed the rest of the year. Don't get me wrong. I'm going to sit on my couch and buy too. But I will tell you, they're giving us historically, just like crypto was supposed to be October historically, and that didn't happen.
Yeah, crypto I got really mad at crypto. I changed my whole crypto position. That October didn't work. I got really mad at crypto. Took off my straight up long cryptos and just I'm back to my old weekly puts in crypto and ETH and IBIT. I'm back to my old weekly puts. I had it with crypto. Had it.
Yeah. So that's October didn't work. That's what I'm saying. We're talking historically. That doesn't mean that you can hang your hat on that, but historically, November through January window has outperformed. So it's pretty good.
Both in return and consistency, but traders should treat it as a probability tilt, not a guarantee.
Yeah, there you go. Probability tilt.
Okay. So, since you didn't look at this ahead of time, you're going to be very surprised with the next one.
So you knew this was January through November through January, and you just let me spout off on that?
No. I looked at the titles. I just looked at them. I looked at the titles. Okay. So, but wait for it. Get ready. Get very excited.
I'm ready. Should I close my eyes? You want me to close my eyes? What do you want me to do?
I asked him to put this in here for your birthday.
Oh, okay. Hit it. The hidden benefit of a jade lizard. I appreciate this.
Yeah.
I know what all the benefits of a jade lizard are. I don't know they're hidden from me. Who are they hidden from?
I was thinking this. We should update our LinkedIn
as creators. Creators of the zebra and the jade lizard.
Yeah.
Yeah.
Well, let's do that today.
Yeah, you're right. And let's put the same verbiage in there.
So mine matches yours?
Yeah, so they're identical. So we are edifying each other in this because
we have to, and I think we have to call it zero extrinsic back ratio, also known as AKA the zebra.
The zebra.
All right, the three-leg jade lizard's performance exceeds performance of strangles and iron condors. Its performance has been even better over the bullish market time period. Sure, and everyone's going to say, "Oh yeah, because we're in a bull market." But honestly, for as long as we've been doing this show, we've been in a bull market.
And but Jenny, how many times have you gone on the stage in a lizard costume? I'm just kidding.
You better.
Who's got our puppets?
I don't know, but you know what?
I bought you a puppet.
Hold on. Let me see something. I pulled this out. Hold on.
Is it a lizard costume? I hope so. God, I hope so.
So, I hope that this shows up on this camera. I don't know if it will, but I bought this dress.
Oh, yes. I remember the Jade Lizard dress.
And since you seem so excited about it, this might get added to your birthday.
Yes.
Yeah. I think you'll look really good in this, Liz.
I would love it. That's amazing. Amazing, amazing, amazing. That's all I want for my birthday is just that dress.
Okay, well.
So how many times have you gotten on stage, whether it be bull market, bear market, even in the down moves? So even in massive down moves, the one thing I will say is if I had a Jade Lizard on, did I take heat in it? Yes. But did it eventually end up okay? Yes.
And I'll tell you, I think the worst was like August, and I can't remember what year, 2015 maybe. August 2015, I had like Jade Lizards on, and the market had such a big drop that it blew through the puts of those Jade Lizards. But then by September expiration, and I think these were all September expiration, by September expiration, if you did nothing, they were all fine. They were all fine. And that was the one time that I remember it blowing through. I also, I want to say this was like January. Tell me if you remember this. We did a show. We did like a money show.
Oh yeah, I vividly remember this. We put a Jade Lizard on triple Qs.
Yes, we put a Jade Lizard on at the money show, and the next day the market just tanked, and we're like, good thing our trades are not trade recommendations.
I do remember that. This also looks eerily similar to our RMC presentation.
It sure does. I wonder what clever person made this.
The Risk Management Conference for the SIBO, Jenny and I were very, very honored to be there as the only retail traders there. And we did this exact thing. We did a Jade Lizard versus a Strangle versus a $10 wide, well, actually a wider iron condor. I think a wider iron condor is actually more comparable to a Strangle and a Jade Lizard because you have options in there.
You can see average P&L winner, Jade Lizard. No,
So Jenny, I'm going to guess. No. This is just a guess because we didn't get the meat and potatoes of the study. If you had to guess, what product are they using if you've got a $9,000 loss?
SPX.
Correct. That's what I'm saying. So apples to apples, that $10 wide iron condor, it makes sense that your drawdown is going to be so low because there is no way to get less than that.
Right. Now, performance exceeds three-legged Jade Lizard performance. It doesn't say SPY. No, I think it's SPY though. It's SPY because when you look at the average P&L, this is different. This is not the same. I don't think this is the same one we studied. It's not the same one we studied for RMC because we had a much bigger SPX $15 wide or like $50 wide call spread, a $35 put, collecting $50. We had a much bigger credit, much greater results using SPX. I think this is SPY, and there might have been one time that's the largest loss. So over however many years, 20 years, there probably was a time that it blew 100 points through the put. It must have.
If they did
that would be a $9,000
every day. If they did them every day, I'm sure there's a 100-point loser in there somewhere.
Yeah, like when did the SPOOs drop 100 points? During COVID.
Yeah, I'm sure they did. But I mean, yes. And I also want to make sure too that the Jade Lizard is set up correctly, because you can hit Jade Lizard in our platform and it doesn't set it up where you're covering extrinsic value.
And honestly, like you can always buy something to avoid that, because like here's the issue with something. If you have a loss of $9,000 and you're that really that I think is COVID, because I remember looking with Kai or Gad or someone about how the average P&L, what a difference it is if you take out that small period of like COVID down move, your average P&L, how much better it is. Because you think of that $9,000 loss, what kind of hit that took on the average P&L?
Yeah, that's a lot. That's a lot. That's a big loss on the average P&L.
Yeah.
So it is true when you remove that. Now, granted, it's not saying remove that data set because it did happen, right?
That's why you can, if you want to, you can always define your risk.
Yeah, for sure.
Or I think another thing that I'm going to guess these weren't managed at 21 days, because I don't think you would hit that kind of loss managed at 21 days. Number one.
You couldn't hit that. I mean, no, Jenny, if they're put on every day, Yeah, you still wouldn't.
Yeah. So I think if you're managed at 21 days, I don't see you hitting that loss. Also, when I put on a Jade Lizard, I say, if this put goes in the money, am I willing to take this stock at that price? I'm not just gonna, like, if I had a Jade Lizard on and the put was $100 in the money, I would just take the stock and hold it. Like I just did it in Upstart. Upstart's been down. I had puts. And today I said, closing everything in Upstart and I'm just buying the stock and I can sit on it forever. I don't care. Maybe one day it'll come back.
Only because this is our show. While you're talking, pop in the platform because I want to show what we're talking about, how you get to a $9,000 loss in SPY.
You would need a 100-point down move.
Yeah, and then and I want to bring up your point because if it was managed at 21 days, even if with a 100-point down move, just go to the trade page.
Okay, but I want to see like how in COVID, how far did it go? Here's 2020. So let's say you put your Jade Lizard on this day. It was probably like this. This is February 21st. You put on a March Jade Lizard. Your put was probably around the 310. So you got a 310 put in March. And by March expiration, we're trading 220. That's your $9,000 right there.
There's your $9,000 right there. That's the one thing I want to show. And so to your point, if you were managing it at 21 days, cut that in half, you wouldn't have a $9,000 loss.
You wouldn't have a $9,000 loss. And if you follow like the mindset of, I'm not going to sell a naked put unless I'm willing to take that stock. And if I got hit on the 310 put and I said, okay, I'm just going to hold 100 shares of stock and sit on it, guess what? By May, you were right back to even.
Yeah. So, okay, good. I mean, I just wanted to show because we're going back to COVID, but we're extrapolating. We don't necessarily know that that's when it was, but this is just two old traders talking about how you'd get to a $9,000 loss in SPY.
It was this one.
Yeah.
It was the day they sold the Jade Lizard on February 24th.
Yep. And then we shut down.
And now again, right or wrong, people don't have to think like, oh, if I sell a Jade Lizard, I have to take that stock. But I don't sell a Jade Lizard in something unless I'm willing to take that stock. And if I am not willing to take that stock at that price, I make a spread out of it.
Yeah. And this just reminds me of TP because remember when TP's like, if we get hit on that put, things are going horribly wrong in this world. And they were going horribly wrong in the world right there.
Yeah, right. And just to look at it, if you're doing, and this is just 45 days out, standard Jade Lizard,
it would be 70 cents.
I mean, with vol where it is right now,
that's what I'm saying. It's
crazy.
This is a snake oil salesman. Because watch, it's so for you to get 100 points here, go to like 80 cents. Just so you go up a little bit. Like go to the 40. There you go. Perfect. Even 45. Just to make
so you're 140 points lower.
Yeah, you're already 140 points lower. So to lose $9,000 at expiration, you'd have to be 100 points beneath that.
Yeah, but I think the problem, because this is a 19 vol, I think that in
it was a high. There was a low vol, very low
vol. In February of 2020.
That's a good point. It's going to be I think it was teens, right? What do we?
Yeah, it was 13.
Yeah.
It was 13. So you weren't getting very far.
No, you're not getting far.
So with the 13 vol, you weren't getting very far with your short put.
Yes, true.
Yeah. So.
Very interesting, Jenny Andrews. Very interesting.
Let's say the takeaways. Oh, wait, we're still on. Look at this. In benefits, Jade Lizard still going.
Because Jade Lizards perform much better by entering the trade in a high IVR environment, which we just established before we got to this, capping our losses on one side as well. Okay.
Yeah.
Okay, there we go.
30 Delta Jade Lizard. 30 Delta Jade Lizard. Because Jade Lizard.
So that's what I'm saying. The Jade Lizards, the way they do them, are not the way that we invented them.
Well, but when I've worked with the research team on doing some of these studies, it was when you're looking at SPY or SPX, bringing the put up, making a wider spread, starting with the 16 delta put.
This is a 30 delta. Which is kind of interesting.
Yeah.
So, okay, let's go to the takeaways.
All right, takeaways.
Skew is key consideration in constructing because it is. So you'll notice we don't do Jade Lizards in gold because the skew is reversed.
Right. People will ask, like, what about a reverse Jade Lizard in gold? And I don't like the naked call in gold. So
yeah, we don't. But they have performed even better than strangles and iron condors due to the market going up even after the dips over the past decade. True.
Okay, a neutral to bullish strategy. Ideally, the Jade Lizard is deployed such that the total credit received from the short call and the short put is greater than the width of the upside call spread. So I I'm going to go back in the platform and just pull up something that if I were going to look at a Jade Lizard and SPY, I think like from just from testing puts alone, if you're looking at a 45-day Jade Lizard, that put would be, if you're just trying to collect $1, that puts a 3 delta. Now, if
how much is that? Can you pop that in? I want to see how much that is in our margin account, just for fun.
$5,600.
Whoa, really?
Yeah.
Oh.
It's 10%. It's only 10%. This is a 560 put. So 50.
Yeah, I know. It just seems like a lot, but
if you're testing, if you're doing back testing, honestly, I think you get greater results using a 16 delta. So like back testing puts, I seem to find better results with the 16 delta. So bringing it all the way up to the 16 delta, which is going from the 540 to the 640, we're getting $4. And if we're getting $4, we could do a much wider call spread.
Yeah, you can. You just want to make sure you're covering with your call spread.
So, and then I usually, I think our studies used about a 30 delta. And if you make 703, 710, here's where am I? $6 wide, $5 wide, $5 wide. There you've got a $5 wide call spread.
Here's what I don't like about the Jade Lizard. I do like the Jade Lizard, and I would like to I will get on my soapbox right now and talk to the regulators. When you eliminate that call spread, because the call spread's so wide, you're adding the width of the call spread onto the buying power, and they don't realize that you can't lose to the upside.
I know. One of these days, Liz, we'll go to Capitol Hill and fight that.
We're going to Capitol Hill, Jenny.
So you've got the $5 wide call spread and the 16 delta put giving you $560 instead of $1, because when you're using the other one was using over $5,000. I don't want to use $5,000 to make $1, but using $9,000 to make $500 in 42 days, not as bad. To buy something would be tough. To buy something
close,
would be
though.
tough.
16 delta is decently close. I mean, it's not that bad, but like versus looking at the other one.
Honestly, 640 and we're trading 680. That is shocking. So that is it does seem kind of close.
That's insanely too close for me.
I know. It does seem like it, right?
Yeah, it does.
640, we're right here.
Yeah.
We're right here. It does seem close. That's why I don't even really sometimes I prefer IWM, because IWM, it just I think it kind of looks better. Like if I go to 16 delta and IWM, I'm getting $2 and using 2,700. So
it's always a lower price. It's easier to do it in lower price, but I'm sure they were using SPY.
You're getting like a 10% return instead of a 5% return,
Yeah.
And then I do a call spread. Here's a $3 wide, 58.61, or I can make
a couple cents in rent.
Yeah, or a $2 wide, 260. So it's closer to a 10% return. You almost double your return percent.
We know that it's really hard in high price products.
And 224 in IWM
is lower.
Seems better to me than 640 in SPY.
No, I agree. All right, let's pop back in the study to put it to bed, because we've got some.
No, I think that's it. That's it. We're done.
Oh, that was it. That was the takeaways. Wonderful, excellent.
I think that we were on the takeaways. Yeah, takeaways.
But there's not another market measures. Oh, excellent.
No,
I loved it. I just did not know when it ended, so I figured I would go back in. Now we do have some. Do you want to go to Twitter real quick?
Yeah.
We have to manage the things with a little red in the money signs. IBIT.
It's ETHA and IBIT, because we had said like, okay, we're gonna have these for October 31st, and we're really gonna kill it because October is here, and it didn't happen. It didn't happen. So we've got this in the money call we lost on. We bought it 8 days ago and we're down on it. I mean, ETHA.
We made a little bit of money back today.
Yeah, but like Ethereum's 38.76. How long ago did it hit that 4,000? And it just hasn't been able to really take off. It never took off.
No.
It never took off. It's been it was a while ago, right?
Well, it hit 4,000, and then did it hit the 4,000 level recently again, or no?
Thought it got close. Yeah, here. Yeah. Oh, yeah, it did. And then dropped back down, and it's just kind of been sitting there.
Yeah, I mean, we got, like I said, a little bit of a pop today. We made back $125 today. So let's, what else do we have in our positions?
We have one put spread in November, and it's not a winner yet.
That's a put spread. Okay, so we have a put spread in November. So let's just close the long.
So we closed the long. We have a put spread in November. I had a lot of longs that were expiring today, and this is why I said I'm back to just my 7-day, my weekly. I set a price target in my head of how much I want a week, and I'm just going to do, sit at the money puts.
Yeah.
But yeah, weekly puts. That's all I'm doing.
That's fine. I mean, so we've got to put spread in. We got to do IBIT too. We just got to close the in the monies.
So we close this and take a loss on our October. Wah, wah, wah. Okay, here's a situation where you actually have to figure out parity. I do. The market is 50 cents wide. 27 to 29.20 is 222. So I know parity is 222. That's probably all I'm going to get for this.
We should get out for parity.
Yeah.
Or a penny under.
223 or a penny over. So like
penny over. I'm sorry. Yeah, because we're going the opposite way.
Yeah. So 224 and we'll get filled.
You might have to do
now it dropped down to 29.20. So
well, that's what I'm saying. I mean, there is no extrinsic value, so you should be under.
You should just like hit parity and get filled. There we go.
There we go.
Yeah. Okay. All right. So we're out of that, which is kind of sad.
I mean, we have something in.
We can make 55 cents.
I know, but that's all you can make in the puts usually. I mean, we've been doing in there the what are they called? It's the Jade lizards in there in the weeklies, and I like those.
Yeah, maybe we go back to that.
You can make 50 cents a week. I get it. I mean, don't get me wrong. It's a week.
Mm-hmm. No, our ETHA trade is 21 days.
Oh,
yeah.
Well, let's do one. Leave ETHA. Let's do one in IBIT. Close IBIT and let's do our weekly IBIT.
All right. So I'll close our long call for October. Wah, wah, wah. And then we will put on a weekly. We'll go back to weekly Jade lizards.
I like it.
Because honestly, we were doing well. We were doing well just selling weekly Jade lizards, weekly Jade lizards, weekly Jade lizards. And then, we wanted to get long and unlimited profit potential running through October. And this is where things took a turn.
Yeah.
So.
No, we had zebras and we switched them to individual options.
But we were just doing the weekly Jade lizards.
Well, you go backwards, meaning now go buy something for 19 cents.
Yeah. Here, I'll buy the
57. Yeah. And then what put do we want to sell? There you go. That's exactly what we've been doing.
Where we have a put spread and a call and a short call spread.
Because this requires a lot of capital.
Yeah. So now it's only 360.
Yeah.
I think we'll have to go to 90 to get filled. That's fine. $100 a week. If it blows through the call spread, we won't make as much. But it's something that we could chip away at IBIT.
Yeah, we can.
And I don't even know. Like, I'm curious. What does it say in order change in IBIT?
Oh, it's been good.
Last year we're up 585.
Yeah, that's been good to us. I mean, that's been slow and steady. That's been pretty much lizards and just selling premium.
Yeah, and honestly, 585 over the last year, over the last 30 days. Oh, it hasn't been terrible.
It hasn't been. We switched that to an individual option because we didn't want to instead of a zebra. But that's fine. So we're in IBIT. Anything else in the money? No. RKT. Go to RKT.
Rocket Lab?
I don't know why we have 86%. This is a double calendar. Close it.
Wait, no, it's a short. It's a short put spread that's expiring today.
No, it's a double diagonal.
What? No, it's just a Jade lizard. It's a Jade lizard.
Oh, okay. Just close this because
like Jade lizard, big lizard.
Okay. They must have had earnings. Why do we have 80 cents today?
Well, it's expiring today, and it's right there. It was went right to the middle. I mean, it didn't move today. It's only up 12 cents.
Oh, I thought it was up $80 today. We just ignored it yesterday.
Well, it might be up $80 today, but we had this at the money. We had that at the money.
Because all of our profits came from today. That's why I was confused.
Maybe they had earnings. No, it doesn't say. But it was like a butterfly. That thing was so tight, it was like a butterfly. And you see, like butterflies you don't get paid
Open up until the end. Okay,
I
so
also want to close our MCL. So MCL, not this butterfly, but this put we added. We added a put 3 days ago, and it's up 43%.
Yeah, let's take that. Good. That's a good catch.
Are you pushing everything out?
Yeah.
Okay.
Yeah, I'm actually on it, so don't worry about it.
It was only up 22 right now.
Did you get that out? You're not filled in MCL yet, right?
No, I'm trying to penny it up. Come on. Okay, now we're filled.
Okay, thank you.
Filled. So we're out of that. I'm just trying. I want to take a look at. We should have on the down day took a look at the gold QQQ. Remember, Tim Knight had us in that short QQQ long gold, and maybe. No.
I don't know. I mean, I
don't know. It was again.
And it's a longer term trade.
I just didn't know where our $44 was coming from in gold. Our gold position must be doing okay because we're down $16 on those shares, which means our other position is up $60.
And this is just a big lizard because you've got the 64 call and put. So let's close this.
Yeah. Yeah, so we'll close that. So we're taking, I can pop out the side. Activity in GLD.
It was only 3 days ago.
Oh, really?
Yeah, we put it on 3 days ago.
We sold it for almost $7.
Okay.
So then buying it back for $6.40, we made $60.
But wait, hold on. Before you hit that button, take a look at this. We made $50, but right now it's going up through this is a big lizard that it's going through the 370.
I know, but it's $6 wide. It's not just $5 wide. It's $6 wide.
Yeah. So that's what I'm saying. Like we would take it off now anyway. So that's good.
Right. Okay. So that's off. We probably got a ton of buying power back because we took off a lot today.
We did take off a lot. Hold on. And everything's getting pushed. Okay.
And some other earnings that we didn't play were all up. Like Coin is up $30. Apple.
Apple's up.
Apple.
Ooh, it's down now. Huh.
Ooh, Apple.
Ooh, I'm going to make sure I got out of mine.
Huh.
And I did. I got out of it today. So that's good.
Interesting. Yeah, it was up. I saw it up at least $6. It was up to $277. So yeah. Interesting.
Okay, so the one that I played was Net. So I played Apple, Amazon, and I got out of my Apple this morning. Thank the Lord. I did everything in the open.
I was telling Liz, it was funny. I had to have some deck work done in Michigan City, and yesterday I got the bill for it, and it said Cloudflare or whatever the heck this is called.
Yeah, whatever this is.
Net Cloudflare. Okay. So it said the bill came from Cloudflare, and I was like, it's Net. We were just looking at it today and didn't know what Cloudflare was, but I paid a bill through Cloudflare yesterday.
My son was so excited because he has a couple shares of this, and it went up 20. I mean, when you have one share and it goes up $24, this is pretty big.
Yeah, that's good for him.
He was excited.
That's awesome. So I was happy to see the move.
Yeah, that's pretty good.
Yeah.
We do have some good earnings coming in, or not earnings, tweets coming in. It's 52. Is there anything else we need to do on this Friday of Fridays? No, I think we're good.
I don't see anything.
Netflix is splitting 10 for 1. I texted you that yesterday.
Oh, I didn't even see it.
You didn't see my text about Netflix?
No.
Oh, I did spam text you all night last night.
Oh my gosh. I
did. I kept being like, how's your mom? Netflix is up. No.
Oh. My mom had lung surgery yesterday. I was at the hospital from, afternoon until 10:30 at night. So she didn't. The crazy thing.
You didn't even respond to me. I can smuggle you a bottle of wine. You didn't respond to any of them. You didn't respond to Netflix up 10, or I can bring you wine in the hospital. None of that stuff.
It was crazy because she got there at 12:30 in the afternoon. Her surgery was scheduled for 2, and there were so many emergencies taking over all the operating rooms. They didn't take her back till surgery till 5:30 p.m. And we didn't even get into her recovery room until almost 10 o'clock at night. It was so late. And
I'm surprised they let you stay as visitors.
Oh, the security guy, he's like my new BFF. Because they made everyone leave at 8 o'clock, 8:15, visiting hours ended. And my dad and I stayed because we couldn't leave. She was in the middle of surgery.
Yeah, I get it. I'm glad you got to stay.
Yeah.
Yeah, so Netflix is splitting 10 for 1, I believe, on like November 17th or something like that. And it could be, I think it is because it's my son's birthday. Let me check the date.
So should we get long? Let's sell a put spread.
Yeah, sure. I'm in.
Just the 21 day. Just a 21 day. Or what's the day of the split?
So I want to say the 17th, and that's sticking in my head only because it's my son's birthday. But I'm going to Google it and make sure. Okay?
I'm going to sell a put spread in the November 14th cycle. So we'll be out of it before the split.
What is the date?
85. What do we want? Just $100?
Yeah.
85.75. Do we want $200 or $100?
Yeah, if you're asking me, I'd like 200. I'm sorry. It's okay. So hold on. There's two things. The effective date for the stock split was November 14th, with shares on split adjusted basis starting on November 17th. So it's the 14th. I knew that was the 17th was sticking in my head.
85.75, $200. So we're using, this is a $10 wide spread. We're getting $200. We're risking $795.
I love it.
There we go. We don't care that it's up $39. We're in. Yeah. Okay, push that one out too. And I will get to Twitter.
Yeah, go top down if you go into Twitter, because I know there's Netflix.
Okay, Eric, done for the day.
Collected Wackadoo, I love it.
So we saw he had taken in like $7,000 or $9,000 in premium, $7,000 in premium, and he ended up keeping $26.73 with SPX Iron Condors and MES Scalping Insurance. Just 101 trades. Thank you, Mr. Market. Happy Halloween and happy birthday, Liz. Love it.
Oh, thank you so much, Blue Wackadoo. But so you know what I was going to say? I do love this. I actually love Jack Tucker. I love Blue Wackadoo. I like their style. Yeah. Once again, you're enjoying your weekend. He's got no risk on over the weekend.
And I like that he does these SPX Iron Condors, but he scalps with MES for MES Scalping Insurance. I like that. Yeah, I like that. He's a smart guy. He's a smart guy.
He's a smart guy.
Dave Goins, Christmas tree stays up until almost Easter today. Love it.
He goes, not my decision. I understand, Dave. I understand.
Hey, my son's birthday is January 21st. My husband's birthday is January 25th. And it's usually like, oh my gosh, I'm having a birthday party at the house. I have to get the Christmas tree down. And I race and get it down before my son's January 21st birthday. That's
yours was up until Easter last year. And I know this because, like I said, I can't do it.
Then what happened in my life that I left it up till Easter?
I don't remember, but it was up for a long time. It's fine. Like you guys like it out. It's good. But I was
I would
when you're like, I got to take my Christmas tree down. I think I fell off my chair. I was like, what?
Oh, here, and Fazia put it in here. Netflix announced a split. New strikes will trade on November 17th. Stocks usually go up. Yeah, let's get bullish. We sold a put spread, so we're on the same wavelength, Fazia.
I like it, Fazia. You know what I think I'm going to do with my Apple profits that I took off because it's down? I'm going to put on a diagonal in Netflix.
Oh, a diagonal? Or could we do like, which we already put ours in, but you know how we did the earnings trade type of crab? You could do probably...
an earnings.
Like, let's say you bought the 21 day and then at the 14 day, I don't know if you don't get the inflated vol. So here's $50 wide, right? 1130, 1180.
Not bad.
$50 wide.
Here's what I don't like about this, Jenny, and I don't understand it. Why is it holding up more capital than the debit?
Well, wait, I didn't buy anything yet.
You have two things in. Oh, you're doing the crab. Sorry.
Yeah, the crab. So if 1130 to 1180, $50 wide, then 80, 90, 1200, that's $20 wide, 30. I'll make it $30.
Listen to me and listen to me good. If Netflix goes up and we've done the crab, I'm going to be pissed. Like if it goes to 1300 or if it goes to 1250, all I'm saying is that I would rather pay the 1300 for the diagonal.
Okay,
for the diagonal. So we're not doing it in this count.
1800 for that crab.
This is breaking news from Frank the Great. Vanguard owns 38 million shares of Netflix.
Okay, and this is I guess how much was the crab?
1800.
And the diagonal's 21. And the 21
because no matter what to the upside you would make money if it gaps up wildly. And that crab if it went
it's not as wide. 35, 45, 55, 65, 75. It's only $45 wide. It's only $45 wide and you're paying $21. So your profit potential here is only 23 23.88. That 23.88 is your profit target here. You can make your profit target on the crab 23.88 and pay less because you're not getting as wide.
You're paying less, but if it gaps up, if it gaps up through it, you're not going to make any money.
So if it gaps up through this, you make 2,300.
Yep.
Right.
And if it gaps up through the crab, you're not going to make any money.
Well, you can set it up so that you make the 2,300. You can, because this is $50 wide. So if that's $50 wide and you're paying $12, $13, you can make, $37. So if you make this only, you could set it up so you almost can make the same. But then they're just expensive.
It's the same price. That's what I'm saying. I'd rather the diagonal than the crab. You don't need to, if I think it's gapping up wildly. Yeah. But we have our trade in, so that's good. And
if I think it's gapping up wildly, I'd rather have on a zebra.
I would too. But that's what I'm saying. I would too. But for my purposes, the zebra is too expensive for my blood, just in case it goes down. The diagonal is cheaper than the zebra.
Yeah. All right. I think do we get to everyone? Ajit short put in Amazon. Like it, Ajit.
I love it. And I love that Ajit spells it all out for us. And welcome back, Ajit. We missed you.
Yeah. Like that. Okay.
Everybody.
We got to everybody. We got to everyone.
We did. All right, Jenny, have a wonderful Halloween. Have a great weekend. Give your mom hugs from us. And I know you're going to see her this weekend.
Happy birthday, Liz. Enjoy your birthday weekend. I will bring your gift. Get ready. Your Jade Lizard dress is coming on Tuesday.
Yes. All right, everybody. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday.
Yeah, Monday, everybody.
Happy Halloween.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply. Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Hello and welcome to Options Trading Concept Live. I am your host, Jamal Chandler. I am joined by the one and only Glenn Freiberger. What are you doing, man?
How we doing? Happy Friday. I'm liking this
Happy Friday indeed.
applause.
Yeah, happy Friday indeed. Just you and me today, buddy. Mike, of course, is along with Nick and Katie. They're out in San Diego.
Sounds pretty nice.
For the, Mike and his Whiteboard and Friends tour. So they've been rocking it on that tour, man. They had some great cities too. They're in San Diego, of course. By the way, go if you can still get a chance to sign up. I think there still might be possibility. Go check out the show. I love San Diego. I mean, when I hear San Diego, I think of the USS Midway. I think of the San Diego Zoo, which is like one of the greatest zoos ever, by the way.
They got pandas?
They got everything, bro. They got everything.
Pandas are the one that's hard to get. You gotta have a trade deal with China.
Yeah. I'm sure that's exactly one of the things that they were discussing during this whole Trump and Xi meeting this week. It was rare earth metals. It was soybeans. And some pandas.
You laugh and joke, but they've revoked our panda access before.
Tell me more.
I'm serious. I think within the past year, they've stopped shipping. I don't know if shipping is the right word.
Well, you said it already. I mean, they probably ship pandas. You know why they've slowed down? Because they know weirdos like you and the things you might do with pandas. That's probably what it is. So they just don't want. They want to make sure we limit the access. Yeah, you look it up. You look up all the details and you let me know what the situation is on pandas.
There are no longer pandas because of in the U.S. because of expired loan agreements and geopolitical tensions between China and the U.S. So
that's hilarious.
It might still be under fentanyl in the the PEMDAS, the order of operations there, but they're
that's it.
It's still part of the equation.
Right under fentanyl is pandas. Right.
I want them back. That'd be great.
I mean,
I've never been to the San Diego Zoo. My dad's actually from San Diego, but he was in a Navy family, so he wasn't there too long. But I have seen the pandas at the Washington, D.C. Zoo when they had them. So, big fan.
The Nationals. Is that like considered the National Zoo? Is that what that is?
They can just slap that on everything. It's kind of not fair. They don't really commercialize it as much as they could. They could make a lot. Yeah, they could make a lot more money, I think, if they trademarked that word. Maybe that's the solution to the U.S. debt problem. There you go. I solved it.
Trademarking national.
Yep. Yeah.
You are just full of ideas today, aren't you?
I'm firing.
How come you don't have an outfit on, by the way? I mean, I saw Q came on this morning. It sounds like he's the only one in the office. You guys didn't give him the memo. What is up with that?
Yeah, I mean,
or do you have an outfit and is it like preppy school kid? Is that what you're going for today?
I'm actually going for commoner coffee shop right now. barista in Wicker Park. How's that?
Yeah, exactly. Nah, I don't know, man. Nah. You got to have a little more facial hair. You got to have some kind of weird do. You know what I'm saying? Like I don't know about that.
Yet another year where costumes that require facial hair is out of the equation because I can't do it on my own. And at this point, it would be, I'll say it, emasculating to put on any sort of fake facial hair. So,
well, how old are you?
24.
24. Yeah, I was the same way at 24.
Okay.
I really couldn't go with facial hair. Don't worry about it. Don't trip.
Okay.
It's actually a good thing. Okay, that means you're not necessarily. I mean, I'm. You don't have to answer this. I'm making some assumptions, but if it's hard for you to grow facial hair, that means you're not a very hairy person overall. I think that's a good thing, personally.
Okay. Yeah.
It took a long time for me to be able to just naturally go. It gets annoying after a while. I'm telling you, after a while, you're like, oh, I gotta shave. Like it just becomes one of those things. So
yeah, but I still have to shave every 3 or 4 days because I just get a neck beard, and that's
little weird areas.
Yeah, that just makes me look a little rounder. But hey, maybe no shave November. I'll give it a go. Grow the neck beard out.
Maybe. Maybe it might be the thing to do.
John likes that idea.
I know you got some slides. We're going to get to in a little bit, but just to give people a little update on the markets, it's if we could pull up the slide. Yeah, thank you for the platform. Interesting day we got going on here. Markets were up higher at one point today. We have S&P 500 currently only up 14 handles at 68.69, and we have the Nasdaq at 26,000, only up 0.5% here, as you can see. And the Russell 2000 is positive, might be negative sooner or later. You can see kind of somewhat of a divergence here between Russell 2000 and the Russell 2000, the Dow, and the Nasdaq and S&P. Currently, the Dow's the only one that is down. Volatility is kind of ticking up a little bit here today, and I think that's one of the things a lot of people that pay attention to markets are talking about, those on the Twitter sphere are talking about. You got volatility up 3%. Volatility people can't stand when you talk about volatility in percent terms. So we're going to keep doing it. We're going to keep doing it. It's 1930 in the front month VIX futures right now. 70-cent difference on that roll market between the X contract and the Z contract here, with 20 being the bid and the Z contract for December. Bonds are still kind of a little heavy here. The 30-year bond has been heavy all week, as you can see here. Gold was a little bit positive earlier. It's clinging to that 4,000 level, though, so not really a whole lot of movement. Silver to the downside. But Bitcoin seems to have found a level here in the 108 to 110 area. It seems to be hanging out here, still positive on the day. Again, Bitcoin and the S&P 500 and NASDAQ definitely seem to have mirrored each other a lot over the last couple of months. It's kind of doing the same right now. Would be interesting to see if it falls to the red as markets might fall to the red. And of course, your world, when we talk about currencies, of course, these are the futures, if you will, but you could clearly see it's another positive day for the dollar here. The dollars had actually a pretty good week in the wake of the Fed meeting that happened on Wednesday. And a lot of these currencies, as you can see, are down: the Aussie, the pound, the Canadian dollar, the euro, etc. We had a couple of earnings, of course, last night. Apple was positive. Now it's in the red. It was slightly positive. It was up like $5 to $6. I know, right? Amazon still up. Was as high as maybe 253, I think.
Still pretty good.
It's still pretty good. Yeah, it opened 250. I think it was 252, 253 in the pre-market, but actual open was around 250, if you will. And some of the other ones, Coin, still positive. MicroStrategies had earnings, still positive. And Reddit, big mover there, $25, still positive. So interesting day going on here in markets.
Yeah, I can't stop looking at the gold market right around that. Not only like psychological price level, but it's been moving it's just been, assets are moving in tandem, but not always in the way you'd expect. Yesterday, I mean, what I was looking at more closely was, dollar up, gold up. You're like, what's going on there? Today, a little bit more normalcy, but you saw gold kind of chop around while equities were at their highs, and then both falling in the past hour and a half together there. So, yeah, I don't know. It's hard to track everything at once, always is. But a lot of these assets are just, they're moving at the same times. I can't tell if today's trading session is, what the old trader guys always call it, like losers club or something, where the only people left on the floor on Friday at 11 a.m. are people still trying to get green on the week. So I don't know how active are you looking today versus we've had an interesting week. Could have been more interesting. But
I've never heard it put like that, but that's actually a really good way to put it. Mm-hmm. The idea of the last people at the club trying to get something done, if you know what I mean, like for sure. That's exactly a really good way to put it. I wouldn't put too much stock in these last couple of days of moves, truth be told. I mean, I know it was, so of course there was two big events of the week, multiple actually. Three big themes, I should say, of the week. There were the earnings of the Mag 5 from the 5 of the Mag 7 this week, right? We had earnings. There was obviously the Trump and Xi meeting, which was supposed to resolve a lot of the stuff around the rare earth metals and obviously the gold move has been some of that in the recent months. A lot of people saying that China has been buying gold, which has been obviously at the detriment of the dollar more recently, and moving in that, and so that's been moving markets. And then the third thing is something that I totally just forgot, but it'll come back to me in a second. But Fed meeting. Thank you. The Fed meeting was obviously the other thing of the week, and so I say all that because that's a big soup. You put all that in a pot and you stir it around. There's a lot that's going to go on. The correlations are probably going to fall apart the way that we look at them throughout the week, right? Like you just said, the dollar and the gold were moving in the same direction. I noticed that to the earlier in the week too, and that's pretty weird. And this happened throughout these last couple of months at times.
Yeah.
That's pretty strange. And when you see that happen, it just lets you know something's off for the time being. And sooner or later, one of them is going to make it right. You're just not sure which way it's going to go. And again, this is also the end of the month. And I don't care what people say, but usually at the end of the month, you have certain things happening, certain flows happening. And I think that's something that is not, look at this, what just happened. I just saw it. Gold just dropped. Again, I think things start to sort of unravel or go higher at some point on a day like this. And the end of the month flows happen, regardless of what people think. There are funds that have to do certain things by the end of the month just to rebalance. So you can see some big positioning happen at times. I always pay attention to end of the month flows. And I think you can't, it's hard to read and to find the correlations on a week like this when you have so many different things happening.
Yeah, very well said. So what are you looking at today then?
Me? Oh my God, a lot. But we'll get to that in a little bit. I mean, because that'll take a minute. We should definitely go into what you got, your slides, and we should definitely go into that first.
Sounds good. Today on this little ad hoc segment of Forex Focus, wanted to cover if dollar streaks last, how long they last, because we're set up in an environment that we haven't been in for many times this year, at least, where we have dollar swinging, rallying to the upside very consistently. So if we go to the next slide, you'll see that the background I'm working with for this analysis is, of all the events you covered, FOMC being one of them, perhaps the main focus for FX traders, at least in terms of regularly scheduled programming. Dollars ripping against all major currencies on the heels of that, even leading into that. Not much of a fake out on the table one way or another as a result of this meeting. Powell alluding to, the next cut perhaps not coming in December as markets pretty much all but priced in leading up to the meeting. And now here on a Friday, we're looking at 4 straight dollar up days in a row. Here looking at euro dollar, that means 4 down days for the pair, moving in the dollar's favor against the euro. And not only has it been 4 days in a row, because you could see some 3-day moves in one direction, and the magnitude of that being a little bit of chop, especially recently in FX markets. Volatility hasn't been the highest, as there's been so many other asset classes to look at in 2025. But I wanted to do a little bit deeper of an analysis, a back test, if you will, into what scenarios, because when you're looking at FX markets, spot FX markets in particular, you really have to get directional if you're trying to engage in these markets. You have to hit the buy or the sell, everything traded in pairs, so on relative strength or weakness. So I wanted to see, do contrarian or momentum strategies favor well historically? Which one wins out when you have this kind of backdrop? So if you go to the next slide, please, I'll walk through what we looked at the past 6 years of price data using daily data, mainly daily closes for this, but I looked at 3-day directional streaks. So this I could have done only for dollar up days, but decided to keep it a little more robust. And this is inclusive of if dollar swings higher 3 days in a row, or if the dollar depreciates 3 days in a row, which we've seen a lot more often this year. And also filtering for the volatility environment a little bit by requiring these 3-day directional streaks to exceed 1% total in cumulative movement. So in FX markets, an outsized day would be around that, anecdotally around that 0.5% price level in different pairs. Different pairs having different volatility characteristics of their own. But this was, a pretty sound benchmark for, what would be considered a notable move in one direction or the other, and wanted to take into account symmetric risk reward here, using a 0.75% profit target and stop loss target to simulate some of these historic trade performances with a 5-day max holding period. So keeping this pretty short term. If you're logging into the platform, whichever platform, and seeing, a trending dollar market like this, can you take action in the short term, looking for, either continuation to, a little bit lesser of degree than we've seen following the trend, or can you get a little bit of a pullback there? And a pretty 0.75% with the leverage offered from these FX pairs, isn't nothing. And so what I did is calculate win rates, dollar P&L and ROI, which does factor in those leverage ratios, and conversion metrics based on the most recent exchange rate, just compiled this morning, based on one standard lot trade. So that's requiring margin from around $2,000 to $5,000 for these major pairs. But as you know, we can size this up or down. But just looking at ROI, those characteristics will be the same no matter you scale it. So first,
quick question. Yeah. What's HLOC?
High, low, open, close. So
okay.
That's what I used. But for this, I believe it was just close data, as I only looked at 3-day directional streaks. So the rolling close data.
Love it. All right.
Yeah, so looking at the first scenario on the next slide, momentum following the move. So this one already spoiling some of the takeaways here is that a lot of red on the screen in terms of average P&L, average ROI, win rates less than 50%. A lot of numbers on the screen, but just to walk through it, we're looking at symmetric risk reward. Right, so all things considered, that should be 50-50. And so a lot of these, all except the Swiss franc, are below 50% win rate, with a lot of negative. I guess dollar yen also. Yeah, dollar yen also a little bit favoring these momentum strategies. But in terms of average P&L and average ROI, very muted on those momentum trades. Average days held tells you, we had a max 5 days for this study. But usually if you're following the momentum, you're in and out of this within 3 days. And then this average ROI takes into account, you see bigger swings in the euro and the Canadian dollar because those are the lowest margin pairs. The highest leverage pairs, whereas the Japanese yen and the British pound are the most stringent. So here seeing less success with a sub 50% average win rate and negative returns for most of those pairs. Looking over at the Contrarian on the next slide, this one is where it really starts to get interesting, because when you're fading these 3-day trends, which is funny because right now we're on our 4th day of dollar increase. So if I was to do this yesterday, this would perhaps be an instance where it did not move in my favor on day 1. But given these profit constraints, we are seeing win rates of more than 50% in a lot of these major currency pairs, even as high as 59% for that euro. Similar in terms of average days held, just under 3 days. And then average P&L figures a lot more green for those simulated trades, with Eurodollar being the outperformer here, getting you $140 on average for a pair that's margined at around $2,200 right now, given the current exchange rate. Anything here stick out to you, Jamal?
I mean, yeah, the euro for sure.
Yeah.
The euro win rate and the way that average P&L has been pretty good.
Yeah. So all of these, a lot of variables to either restrict or let run, your profit targets. If you wanted to do kind of a 2-to-1 risk reward scenario, perhaps that would favor momentum strategies. Maybe some more chop before breaking through some of those. But going to the key takeaways, this is pretty cut and dry for these trading criteria. And this study in particular, if we can go to the next slide for key takeaways. In this study, contrarian strategies have outperformed. So in either direction, to dollar strength or to dollar weakness, it's much more rare to have continued moves in one direction in these major dollar pairs. As historically, over the long term even, these are typically, historically, mean reverting pairs. And so we saw those positive returns for fading dollar strength in this particular case or environment that we're in. Eurodollar delivering the highest risk-adjusted returns because of those margin requirements and its historic performance. And dollar Swiss franc, perhaps not, not only not being favorable for contrarian strategies particularly, but not really a lot of success in the momentum strategies as well. So all this tells me is my takeaway for trading that pair is not one way or another. Perhaps the study as it was set up is not as conducive to this pair's price behavior, maybe from a percentage basis, maybe from a volatility basis. Perhaps it's something where, even in this heightened volatility environment, dollar franc still holding on to some lower volatility, and so the number of occurrences perhaps a little fewer and far between. That's what I got for you.
So do you think that is that one that typically has like some lower volatility? I mean, again, this is kind of a 1 week study, right?
Mm-hmm.
In a week where the dollar actually had a pretty decent move. So, that shouldn't be lost on anybody. But at the same time, like, is USD, Swiss franc, one of those pairs that is a little bit lower in volatility, you think, or what?
Yeah, historically it is. This year in particular, we're seeing it move a lot more and a lot higher correlation in its range to Eurodollar. So a lot more flight to quality in that pair in particular, as we've seen some sort of a de-dollarization trend. I think it's new in this current administration where dollar has been less of a safe haven overall. When we're looking at the past 6 years of price data, the dollar Swiss franc didn't necessarily have that characteristic as it does now, and that's what's led us to 10% dollar depreciation in 2025 alone. So who knows if this is more to come, and studies only using 2025 data will end up being more robust in the long run. My statistical background says more data is usually a good thing, but as you know, you can absolutely get too far, and when you're using such a small, what you're looking at is short-term trading strategies, and so using too much data might actually not give you as much exposure to the current environment, like we see the rise in popularity of things like exponential moving averages over standard moving averages, just wanting to get some weighted exposure into what's happening right now. But I thought that was interesting.
It is interesting. Nice
some
work.
higher win rates, because even if it is still near 50-50, using those leverage assets gives you some slight edge.
Do you consider yourself somewhat of a contrarian when you're trading a lot of these currencies, or are you more of a buy and hold, or what's the deal?
Yeah, I think there's the one nice part about having the access to the spot currency offering is you get a lot more ways to play dollar exposure simultaneously. So as you know, like if you have one account and, not always would you want to do this, get long and short the same pair at the same time. Of course, there's always room for neutral strategies, but that gives you the opportunity to say, hey, here's a very historic price extreme. For example, in the dollar Swiss franc, something that I'm comfortable being long the dollar in the long term, whereas you could then look to a dollar yen pair, which is known for its volatility recently and trending price swings, and want to capitalize, being less dollar biased on that one and being more a student of tape action or technical analysis, just trying to trade those ranges. So that's my what I like about the spot offering in particular, because you're not getting double margined if you're trying to play some of those crosses as well.
Yeah. Nice, good stuff, folks. If you just joined us, this is Options Trading Concepts Live. You're in the right place. I know you're looking for Mikey, you're looking for Nikki, you're looking for Katie. They're out of town, and if you haven't been paying attention the last couple of weeks, I'm a part of this show now. In case you didn't know, I'm one of the people that are hosting. Exactly, I'm one of the people that is co-hosting the show. Glenn is a regular. Happened to join us today as we're down some troops. But again, like we said, Mike, Nick, and Katie are in San Diego for the show. I also they're in for the whiteboard tour in San Diego. I also need to make sure I put this money match link into the account, and we're live streaming here on YouTube, so definitely check us out. And let me put this into the YouTube chat if you haven't seen it yet. It's a great promotion. Definitely take a look at that. What do you say? Should we go over to the platform for a little bit?
Let's do it.
Speaking of things, speaking of taste, let's start in your world a little bit before we go to mine.
Oh, look at you. Booyah.
Look at me. I know, right? We got the Tasty FX platform up. I know you mentioned average, technicals, right? And so it's funny because I typically don't look at Bollinger Bands. I just have it up on here. Mm-hmm. It is interesting. I typically day to day look at simple moving averages. I'm sure you're well aware, the history of the firm is that for the most part, they don't pay attention to any of this crap, right? Tom, Tony,
right.
They didn't, you got to understand the time where they were trading, it was just so different, right?
Yeah.
And you kind of, so first of all, they were market makers, so they were pretty much taking the other side of just about every trade that was coming through the crowd. And they weren't necessarily trying to do things based off of, is this a good, I feel like technicals kind of help you decide, is this a good price or area where I want to trade this, right? And I always say technicals are they're like greed and fear pockets, I like to call them, mm-hmm. because it identifies areas where a lot of people may get interested in trading. And again, the reason why they didn't do that as much is because they were market makers. They were taking the other side of trades. And I mean, it was almost like free money half the time. Like if a market is, let's just say this gold market that we're looking at right here up top, they would be a whole lot wider. Say it was $3.99 at 4,010, and somebody's coming in to buy 4,010. Of course, you're going to sell them that, and across the market, because you just are you're selling on the offer. This is the things that they did for people who don't understand how market work, or they were buying things on the bid, and it was easy for them to do that without they didn't have to look at any price. Yeah, that's a great price. I'm going to do it all day long. Whereas, nowadays, again, you talk about retail investors, and it's become such a huge thing. It's a huge area of the market. It's massive, the amount of trading that retail traders do. All you need to do is pay attention to what the exchanges are doing, and it lets you know that they care about us retail traders a whole lot more now than they even did, like, say, 5-10 years ago. So my point is obviously a lot of us pay attention to technicals. Where do you land on this? And what do you pay attention to? What do you look at?
Yeah, I think your example is actually a perfect example to tie into this. Is you're saying that their time as market makers, they don't have to double check because they have direct access to kind of what is a good price. Now with much more efficient markets and tighter markets overall, other people are looking for any other sort of reference point or anchor to know maybe if it's a good price. And so the role of technicals, in my eyes, from just a price level perspective, like you said, fear and greed pockets, but also, just market participation, looking at what everyone else might be looking at, can tell you when other people start to get more interested, and not only volatility might pick up, but and especially on these leveraged products, when there might be some resting orders that either get blown through or rejected. Yep. And so that's how I think about it. The Bollinger Bands here, I think, can be an important tool, not for any sort of price entry in particular, but just because, especially this audience, tasty traders that are so accustomed to IV and IVR, just giving a more visual volatility gauge right off the bat, I think can be valuable when you see these bands expand over whatever horizon you're looking at. Then you can tell very quickly if this is a more volatile environment or a less volatile environment, and perhaps trade accordingly. And then other people use it for identifying, breaks when we are moving outside the expected move. Which absolutely, in some of the other studies I've done, we've actually used these Bollinger Bands as the entry criteria and found that in low volatility environments, historically, pairs like Australian dollar, US dollar, tend to be more respectful of those bounds and mean reverting, whereas over the short term, something like a dollar yen can just really trend for days on end. And so in my mind, it's just kind of a contextualization as you get more and more familiar. Maybe you can act more and more like some of those market makers that just know what a good price is and know what the kind of volatility that we're experiencing or is expected. So I wouldn't say I have any true favorites, but just making sure I'm looking at what other people are looking at as it pertains to some moving averages, and then identifying what kind of volatility environment we're in and what could be expected.
Personally, I think a lot of these are very similar, honestly. Mm-hmm. I mean, a lot of times it's similar areas, particularly when you're talking about like major areas, major numbers, whatever, round numbers or whatever that may be.
Yeah.
I feel like, but it's just me.
Well, no, but that brings up a great point in that it's hard to respect technical indicators as a tool. I think can be very valuable, but it's very difficult to put onus on what a technical indicator or signal is flashing to you, because if you're using historic price data, while it's pretty smooth in FX markets, trading continuously, if you tweak one of those numbers in the look back period or what have you, that could categorically change whatever entry price by 5 pips, 10 pips. And so I think I'd be very hard pressed to find, backtesting is very popular, but to find a very strict criteria that you're confident in from allowing an algorithmic perspective. But the people that take the time to do it, I think there's absolutely a place where you can let that run for as long as it works, but to recognize that the environments are constantly changing, and having static numbers as, having set variables could dictate your overall trading strategy, I think it's kind of a slippery slope.
As long as it works, well said. I mean, like we always say with trading, whether it's mostly with equities, I mean, everything works until it doesn't. You can sell downside in a market, and it's like, oh, this is always working. This is great. And then you just keep it, but you got to be aware of the type of environment you're in. So that's a good point. Folks, if you got questions, ask them in the chat. We're going to get to those in starting in the next 3 minutes. We'll wind down the last 20 minutes of the show with that, but definitely ask some questions for Glenn, ask questions for me. It can be FX stuff. We're going to go to equities in a little bit. We're going to bounce back and forth. So it's whatever. For me, Glenn, in this portfolio, I've made a specific, what's funny? When I first started trading here in the FX account, I was actually long dollar, and my thesis about the idea of long dollar started in July when the dollar was just getting hammered. And I was like, this is a little, you know what? I've done knock on wood, and this isn't wood. I need to find real wood. I've actually done a decent job in dollar and gold a little bit this year. I haven't called tops or bottoms, but I just felt like I've called some of the price extremity to some degree, because I just thought dollar was getting oversold. You know, when I saw it, DXY, when I saw it earlier this year, it just seemed like it was a little bit much. And it was where was it here?
Yeah,
around here. It's like the end of June, beginning of July. It's like, look, man, this is overdone. And you can check tape, especially it was on Futures Power Hour. I was talking with Chris. It was around 4th of July time. I was like, it seems like to be overdone. We got to start finding ways to get long the dollar. And it just so happened this was the week and things took off. And I think a lot also happened in this week too. And I didn't call it bottom per se, but it just seemed as it was a little bit overdone. And I still think at some point, again, it's going to eventually go above par meaningfully. Hasn't happened quite yet. Again, it did it on that in August 1st, but there was a big sell-off in the market here. I can't remember. I think this might have been a Fed meeting. I really can't remember, but we're trending back up that way. And so I bring this up because that was I actually got long the dollar. That was what I had for a while. I decided to do the opposite in this portfolio, and I'm actually short dollar in this portfolio. So that's kind of been all my trades.
Yeah, I got you. Yeah, I mean that in terms of picking, what would outperform the dollar, pound has been a tough one. They're finding their own weakness even when the U.S. dollar can't find strength. So, we're breaking a little bit of that range. But, I mean, your entry point there over the past 6 months is still around midpoint. So, who knows? But, yeah, I think one of the most dangerous things about this year we've had so far is, even yourself picking perhaps one of the absolute bottoms for the dollar in July. It's so hard from a psychological perspective to have seen this depreciate 10% over certain currencies, be able to call that bottom and get maybe 1% back, and to close that and recognize that we might chop in that area. I think it's been the hardest for long dollar traders this year, is because you just have in the back of your head, we should be way higher. So even being directionally right, getting in and out of these positions, respecting, the range or lack thereof that could be possible or should be expected, I think has been hard to take profits in this environment.
I've never been to Australia, but I'm about to buy some Aussie dollar.
All right, giddy up.
There we go. Yo, first one, first entry. Yeah, the only one I'm still positive in is the euro. I get beat up in these, but it's cool.
Very nice.
Cool. This is the most equity. If you have not to 26%, I'm gonna have to dial it back, Glenn. That might be a little much for me right now. Dial it back. Do you pay attention to? Do you ever trade any of the futures against any of your positions?
No, I haven't had the exact necessity to do so. I think I've only looked at options in the futures because when you find yourself in the middle of some of these ranges and you have the only thing of conviction is you think that it'll respect these ranges over the short term but can't get directionally confident. I think the options, though less liquid, are still not possible in the spot environment. So I think there's time and place for them there. But no, directionally, I've never gone, contradictory in one account versus the other. I've done this,
I didn't really
the
know
same
you traded
thing.
options much.
Yeah.
Nice.
Successfully, who knows?
Yeah, let's see what's in the chat here. Anybody? I know somebody asked me about. I thought somebody asked me about an Amazon trade. I thought. Happy Friday, peeps. Oh, Smack Lovin', what's up, man? What do you think about selling an iron condor or strangle in Amazon after this move? Do you pay much attention to the equities, Glenn? I feel like you do. I feel like
Yeah.
you're well in a lot of different things.
Thank you. Yeah, definitely pay attention to it. I would say I have less command than you do in terms of recognizing an environment and the best option strategy forward. So I'm curious to hear your thoughts on this.
Well, yeah, somebody's asking about the idea of a strangle or an iron condor in here. I mean, look, volatility is not that high. You can see the IVR is a 17. It might have been a little bit a lot of times it takes, obviously it's at earnings, vol comes in after earnings. Maybe it was a little bit elevated as into this move, but it looks as though from this IV rank that it's kind of dropped some. I personally, I think there's better things you can sell a strangle in right now, honestly. I mean, this might work for you. I mean, again, if you're selling this, just know, the vol has already mostly come out. I don't know if I personally love that idea. And I don't think the wings are actually bid enough to really do, hold on, let's do $10 wide, to do an iron condor. Personally, it's 2.25. I mean, if you really feel the need, you could do that. If I don't know how you sort of whoever's asking Smack 11, I don't know how you typically like to do condors, but I personally like a little bit more bid on the wings on the 285 strike and that 210 strike. It's really not bid enough for me. So for that, I would pass. I wouldn't necessarily do a strangle in here. I mean, honestly, I feel like there's a couple of other things that maybe have had earnings that you could possibly do those things in. It's probably a little more scary, but things like this name, and you could sort of get probably do a strangle in here if you wanted. It's a little tight, the 60-80, but I just feel like there's more names that actually have a little bit of volatility to it. Amazon doesn't. I know the strikes look fine. Again, if you wanted to, like that 275 and that 220, those are obviously outside of the expected move over the next 49 days here. I'm sure that's probably somewhat you could probably put it on, but I think it's going to be kind of watching paint dry because I don't think this vol is going to come in super fast is my point. Hopefully that makes sense. Any other questiones? There's considerable call skew. I would play it bullish, not neutral. Totally agree, Stephen Bims. I would play it probably more directional, if you will. I don't know how much more bullish you can get in Amazon. It's already at 250, huge move on earnings. That's actually what I did today. I had the calendar call. I had the Deist no calendar call. I actually put that on yesterday on this show. It was, I originally had a calendar call using the first 2 months, the 250 strike. I decided to do the Deist Nove because 250 seemed kind of, it would have had to had a huge earnings move, and lo and behold, it did. So it worked out really well. But yeah, that's what I did. I took it off. I don't have any position right now. I'm probably just going to sit tight. Let's see. Anybody else? Anybody else here?
What about Meta? You feel like saving Meta?
I think I might still. I'm glad you asked that. Actually, I have an expiring calendar calls that are way out of the money now. Nothing I can do there. But I was thinking about. You're right, saving Meta. I was thinking. I feel like this thing's gonna bounce back, man. Like honestly. So I was looking at a calendar call. I just hadn't decided whether I wanted to do maybe the 700 is appropriate, I guess. I think I can get it for $9.95. We'll try. We'll put that out there. Yeah, I'm going to do this. So I'm buying, the 700 in Deist. I'm selling the 700 in Nove against it just to offset my costs because that Deist, I mean, that's like, what is that? That thing cost $19. Like, that's not cheap at all. For this portfolio for me. So I'm just going to sell that Nove against it just to offset it. And I think it's going to take some time to grind back up, but I think it will be. So that's the way I'm doing it. And I might actually go a little higher too. I might do another one on the 725 strike. Maybe, just depends. Who else is Microsoft is kind of fading today too. I could do the same thing in here, honestly. I just might. Let's see. The highs were 550. 550 sounds about right to me. I mean, it's really not that much science to it, Glenn. It's like, that sounds good. Sounds like a good price. It can come back to 550. We'll do the 550 there. The key is being able to sell the 550 in the near term for a decent amount, and I'd say 250 is pretty decent. So just to be a Scrooge, I'm going to go 470. See if it'll get it to me. Ooh, look at that.
So you're favoring, the calendar way of doing things to try and get that cost basis over just, a in the money call spread.
Exactly. It's better than just buying the outright call. I can at least sell a little bit against it. It gives me it gives me options, like if the stock continues to fall some, then I can buy that call back at a point where that upside call is not that expensive. Or if I just lose on this, I just close again. It only cost me $400 to do this versus if I had just bought this outright $700, right? So if it falls, I can just and again it gets away. The whole idea here is this is only $33 out of the money for a $500 name. That's not that much.
Right.
So if it falls more, say it falls to 500, I might not love this trade as much anymore. I might decide to go down to, I might decide to change strikes. 500 is not a good example. Let's just say it falls down to 450. I'm going to close this 550 call spread. That's a little bit unreachable at this point. Right. And I'm probably going to move down to 500, right? At that point, you see right now, let's just look at it. Say this thing fell to 450. This 500 call spread right now is $6.62. That's actually cheaper than I thought it would be, honestly. Well, not really. It's at that level, but I bet if that stock fell to 450, now all of a sudden this thing is going to be on the order of maybe 300 or $3 or 250, and so I might just recenter my strikes at that point. And I think it's just better because a lot of times it's a whole different trade at that point, and the 550 that I'm trying to reach, that's $100 away now, and there's no earnings coming up, so it's going to be a little bit hard, a little untenable. So I wouldn't keep the 550 on, or the 550 is irrelevant at this point. Like same situation here, right? These things. I don't have it on anymore, but sorry, the meta, same situation here. These are way out of the money at this point, right? There's no chance I'm going to get these with stock trading 650 with 7 days to go, unless some miraculous story comes out about OpenAI or something. It's just not happening. So I don't plan on doing anything with this, and that's why when I'm doing this new trade, I'm using the 700 strikes a little bit further out. So that's kind of how I look at it.
Interesting.
Let's see. Any more questions? Oh, let's see. Who we see? This is probably I shouldn't read this, but look, it's a Friday and it's entertaining and it's Halloween. Prince Andrew, no longer a prince, stripped the title and kicked out of Windsor Mansion.
That's a pretty bad beat.
This probably explains the British pound action today. That's great.
Minus one royal. Yeah, that won't save you.
We are down a royal.
Yeah, I think that's probably one of the only things I'm already pretty upset that I'm not a British noble, but getting that taken away from me, that would hurt a little more.
Let's see. What is this? Short the 85 put on Target, huh? Target. Clint, do you go to Target? Do you go on Saturday? I envision you go to Saturday mornings, get a couple things.
It's funny, there actually isn't. I fortunately and unfortunately have a Jewel Osco on my block. And that's
the Jewels?
That's where I go 90% of the time, unless I go to the neighboring Whole Foods to get. Yesterday, I ate an entire rotisserie chicken. They have the best rotisserie chicken.
Really?
Yeah, very good. Nice. But yeah, there aren't a lot of Targets close. So growing up, I'd go to Target a ton. It was my mom's favorite.
It is one of my wife's favorites for sure. She used to go with my daughter all the time. That was their thing. And now my daughter, who's at Marquette, mostly shops for groceries at Target. How funny is that?
That is. Go Eagles.
Short put in Target. I don't love the idea of going naked put in the nude, as we say sometimes. Short the 85 put here ahead of earnings. I just don't love it. I mean, our Target's earnings haven't been the most stellar more recently. That makes me a little nervous over that. I would pass personally. I know. I don't know why somebody would want to sell the Strangle or Iron Condor after earnings. Isn't the idea to play the date before it gets IV contraction? Yes, but sometimes the vol is still a little bit elevated right after earnings and the move has already happened. So then you don't have to worry about the move stifling your trade. I think that's one thing to keep in mind and think about. Engineer me a Fiserv trade if you're looking for a Halloween scare. I'm already in Fiserv, bro. Like that stock is down. I get it. I need Giannis to play his ass off so that the stock can go back up at the Fiserv forum. I just need a little help. So Giannis, come on. Last night he didn't even play. Last night
he didn't even play. They still won though. That's so funny.
They won that game against Warriors.
Yeah.
Wow.
Who was it? Someone that got traded. Brandon Rowland or something. Roy
Who the hell is
Rowland.
that?
I
gotta say, I'm not going to be. So in the past, I love fantasy sports. I love mostly because it helps me keep up with the games. I mean, it's hard to watch NBA games anymore.
Yeah.
And so I would play fantasy sports to kind of keep up with the current players and keep up with the game. And this year I chose not to play. I can't do it anymore, Glenn. I did it for like 10 years. I can't do it anymore.
The basketball?
The load management is just ridiculous. You don't know who's going to play on any given night. You spend half the year doing transactions than just managing your lineup. It's stupid, man.
Yeah.
I'm done. I'm done with fantasy basketball. But you know what? It might change soon because that whole NBC and NBA on NBC thing, and Michael Jordan is back, and he's talking to Rico on the regular. And the other night, they asked him about load management, and he gave a scathing review on load management. He gave a scathing review, and he was right. He said, the fans come here to watch you play. All you have to do is play basketball for 3 hours a day. What's so hard about that?
And of the people to believe, he put his money where his mouth is there. And look at it already. Bulls undefeated. Just his presence back in the mix. Got the Knicks tonight.
How about it? Yeah, how about it? That kid Modest, I ever tell you, my kid used to use kind of the same trainer. My oldest kid used to use, we saw him at the same trainer for a while there. I remember seeing him. I mean, this was like 2019.
Yeah.
Something like that. 2020 maybe?
That's
2020,
awesome.
I think. Yeah, that kid. I saw him. He was tall then. He looked pretty good. It was like, wow, he's like 16. It's like, damn, this kid looks pretty good. Look where he is now, balling. Yeah. Hey, fellas, I created a show in my account by being long shares in CMG and Kava, plus selling strangles against them. Ooh, damn. Yeah, it's tough. Both of those have been just handled and massacred recently. I mean, this was the most ridiculous thing. What the CEO from CMG said, he basically said, well, he was targeting you. He was targeting people of your age. He essentially said that you guys are struggling so much financially right now that you can't afford to buy Chipotle, and that's why they missed on earnings. And to that I say, how about you make a better product again? It used to be so much better.
Yeah, I would. I think seriously, the marginal, one of the decision factors of just if you could know that their guac will be good every time, I'd get it every time. But you can't even tell if it's good or not from looking at it anymore. It's like that. That'll ruin it. Just ruin it flat out. So it's like, that's an extra, $3 you're not getting from me every time, anytime.
You know what's good guac is the guac that we get at work on Taco Tuesdays. From just most of the places. The places we had this past week,
Habanero?
That was pretty good.
That was very good.
Yeah, that was good, man. That was really good, honestly. Nice work, ladies. Nice work, Tori and Alyssa. That was really good. Okay, you got strangles in here. This sucks. I'm sure. I mean, I'm pretty sure your puts are probably pretty in the money. I'm guessing maybe the 35 you have, maybe 45. Your long stock. Gosh, what can you do here? Honestly, I mean, you're depends on. I mean, look. It is always scary being short a put that's in the money, but truth be told, you're just essentially going to be long stock as long as you have money to cover the idea of a stock purchase. That don't worry about it too much. Maybe you just roll these puts and hope at some point, something comes back, if you will. It's kind of hard to reduce cost basis in this too. Honestly, if you roll this out to Jan, I'm trying to see. I mean, at least if you roll out to Jan, I don't know which one puts you short, but I'm guessing you're short the 35. I mean, yeah, I'd probably sell. I don't know which puts are short. I really don't, but I'm just guessing. And again, if you're already long stock, you're losing on that too. It's about all you can do is maybe roll out to and collect a little bit more on these puts and maybe sell some upside against it. And same thing with stock. Kava, same deal. I don't know why you have this desire for these stocks. But I'd be a little nervous in this with earnings coming up if you still have the same position too. In Kava, there clearly seems to be an assault on a lot of restaurant stocks right now. So be a little aware of that and try not to put yourself in a hole here. But best of luck, man. It's really not a whole lot of, maybe you can sell, again, if you're short and strangled here and you've been, handled on this, first of all, you can always close and get out. I think this is a thing that people don't remember and don't think about a lot. It allows you to just, it sucks. Trust me, it sucks. But it allows you to just clear your head and move on to the next trade and not have to sit here and carry this thing over the time that it exists. You can't, and just sometimes it's better to just close and move on, take the loss. Honestly, just to take, trust me, this is somebody who's had to do it at times, and you do feel better. It sucks, but you do feel better if you're really feeling that much of a bind. But if you really just want to keep playing this, you feel strongly about this idea and in this space, then just roll your puts further out. Maybe to Jan, there's probably a little bit more upside that you could sell in those situations. I don't know what you're short, but say you're short the 55s or 60s. You can sell the 70s against it at some point, and hopefully stock comes back up. But essentially, as you noticed, I said the word hopefully twice. You're basically hoping, so nothing else you can do. I think that's about it, Glenn. Anything you want to say to the people before we go?
No, just have a great and safe Halloween weekend.
Yeah, that's exactly what. Nice. You're the first person I heard say that. Trademark it immediately, Glenn. Trademark it immediately. That's a good one. Halloween weekend. Ooh.
National Halloween weekend.
National Halloween weekend. Folks, thanks for joining us here today on Options Trading Concepts Live. If you want to get at us, you can always tweet us. I am at Jamal Chandler. Glenn is at Glenn Farbriger. Sorry, at Glenn Freiberger. Excuse me, buddy. I didn't mean to mess the name up. At any time you want to reach out to us, you can. And we're willing to answer all questions and queries. Appreciate you guys watching the show today. See you soon.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We've had a pretty volatile week. Finally, some digestion in the market from post-FOMC, but we'll get into all the details. Before we do that, my brother Gus, how are we doing today?
Doing good. Yeah, I've been making some exits off the green open today. I kind of thought that we were just going to make higher highs off of that, but we've pretty much sold back off, but managed to take advantage when it came in, so pleased with that. Also pleased with the downside action. My Nokia puts got home just barely by about 19 cents. I just managed to get out of those. I didn't see any reason to hold for the rest of the day to try to make that last dollar, so
I hear you.
Got out there, but yeah, so pleased with all that. The downside action really is just helping me out. Usually on a day where we're kind of selling off like this, I would be red to deeply red, but today it is just very moderately red, right around break even, really. I do have a fair number of shorts that are kind of close to expiration, so happy to see all that coming together. And yeah, as I mentioned before we hopped on, I am dreading a trip to the DMV later. That should be always a blast when you get to go to the DMV for anything. So right. I'm switching over. I got to do a whole bunch of stuff. It's going to be great. I'm being there for an hour and a half.
The DMV is always a great time. Everybody else, thanks for taking the time to hang out with us. But I got to ask, where could AI serve in the DMV to make things a little bit more convenient for, the process of going to the DMV?
Oh my goodness, everywhere. I mean, like all of it. I frankly, I think AI could just handle my entire application in the very first place without me ever even setting foot in a DMV, especially if we start getting into Big Bear AI and digital ID and being able to just scan my face and confirm that I am who I say I am. Yeah, I don't see why I can't just do this in my living room at this point in technology. But to their credit, I mean, the DMV is way different than it was, 10 years ago. I can recall being young or, a teenager and going with my parents to the DMV, and it would just be so horrible. And now it's just kind of horrible. Right. So that's an improvement on their part.
No, I'd agree. I would say, just like most things, going grocery shopping, doing this or that, things that felt a little bit more grueling to do back in the day doesn't feel as, quite the same nowadays. But yeah, no, the market's a little bit more volatile. We got some positions to manage here too. I know we're at 21 days till expiration on a few positions. We were able to take one of our first NASDAQ trades this week, finally. We're getting a little bit of a break to the downside, so we're in that one right now, and we might be forced to manage that one on stream, whether it's a red trade, whether it's a green trade. The market's moving, and we got on that position, I think, less than an hour ago. So we'll see what the market wants to do here. But with that being said, is there anything else that's sticking out in the portfolio outside of Nokia before we get into some of these other positions?
I mean, Meta has been frustrating. I got long off the dip. Looked like we just were going to rip back today, and I thought that I was a genius at market open, and especially post-market yesterday as it was ripping, and then we've just sold right back off. So that one's a thorn in my side. But what is coming through right now for me is Wynn, W-Y-N-N. I've been short Wynn Casino for some time. This was something I put on in Engineering the Trade some months ago now. But this is starting to work back in my direction a little bit. It just flipped green today for the first time since I put this position on. I'm still way out of the money. I have a short call vertical. I'm long the 105 and short the 100. So ideally would like to see this thing below 100. We're obviously not close to those levels yet. But this is one that has been deeply red and just slowly working its way back to where we are now, $18 in the green.
Yeah, they're down a little bit on the day-to-day, but maybe they put
it's a short, more. So I'm very, very rare short for me. So down on the day, good. I'm usually not saying that, but here we are.
I mean, hey, Vegas wants to move away from their roots. Let them walk away from their roots. We'll see how Wynn digests.
Yeah, that's part of my whole thesis, is that Vegas has just become so insanely expensive. I went on the soapbox on air the other day, and Wynn is chief among the casinos that are becoming insanely expensive and pricing out everybody except for the very, very highest end clients. So yeah, that's the part of my thesis for the trade. It just feels like it was overextended. And also, if you zoom out in a more macro context on this one, it really just tends to channel between like 125 and then it'll shoot back down to 90, 85 range. It's been pretty locked in there for a little while now. So yeah, but of course, as soon as I get involved, we go to make new highs. But we'll see. I think this thing still has a good chance, especially in this casino environment, especially with the growing rise of prediction markets that's making people a little more bearish on these things. I think that there might be enough there to get this home.
Yeah, I'd agree. Probably going to get a lot of continued volatility in there, so we'll keep an eye on it, especially headed into the end of the year. Other than that, I would say on my end, nothing too much that stands out. I would say Oracle is one. On On the downside, that stands out for me. Oracle's been extremely volatile. This is one that I'm a little bit more bullish on, so I had sold an out-of-the-money put spread. Because I'm down a little bit more than I'd like to on the Oracle position, I'm going to just make the decision to hold this one near expiration or whenever this one can kind of get me out of the position I'm in. But outside of that, Oracle's standing out. Nokia's moving a little bit more. I know we're getting a little bit more of a pullback like you mentioned. That's nice. That's playing out. Gold's still really quiet. We have a few positions on in there. Theta is just cooking in there. Not Theta Trader, but the Theta on the position is cooking in there right now. And then Beyond. Beyond's been a little lackluster. I know we're trading this one after the main moves were done on Beyond Meat, but we sold an out-of-the-money call spread on there as well. And gonna be patient there. Baidu, some of the Chinese names have been really volatile. They've been catching a lot of headlines, but coming off of their tops from just a few weeks ago as well. So other than that, not too much standing out. Unity Software was another one. That one's doing better today. Sold an out-of-the-money put spread, got more long delta on in that one. And then UNH. UNH is just an emotional roller coaster. I feel like we're kind of in the queue on UNH. Like we're kind of waiting for that next decision or whatever to be made on UNH, especially after Warren Buffett kind of put some of his eggs in that basket over there. But with that being said, I mean, we got on some NASDAQ position. It was our first NASDAQ position that we were able to get on for the week. We started to consolidate around the highs a little bit more. So we got this one on maybe 45 minutes ago. We can take a quick look at it. But it was based off of some of the levels we were looking at from yesterday as well. So we'll see if this one plays out. The risk to reward is decent on it, but I'll kind of show where we got the levels we were looking at and kind of what gave the confidence to pull the trigger on this one. It's moving, in our favor pretty well so far, but hold on, let me adjust.
No, you're good. And to respond to the comment about Old Vegas, yes, Old Vegas, downtown Vegas is still wonderful. I love Circa, I love the D, I love Downtown Grand, I love Golden Gate. Old Vegas is still doing it right. What else? Saw some other interesting stuff in here. Why are we ignoring geopolitics? Because this is not a geopolitics show. You want a geopolitics opinion from a 24-year-old in his first job out of college? I'm not. I don't know. I mean, I keep up, but we're not here to give takes on it. Future not bug. Waiting to see if VIX keeps going here or not before making more entries. Yeah, I think that's a reasonable way to look at it. And that's kind of what's been so interesting is that even amid this, slightly turbulent week that we've had, say for the first 2 days of the week, VIX really has not done a whole lot. Although I am saying this without having looked at it today. What are we at? 18? Yeah, a little over 18. Guess we're coming back a little bit. I'm happy I exited my. I'm happy my VIX shorts max profited on Wednesday because I needed it under 18 by then. I'm happy that wasn't the end of the week. Shout out to the midweek expirations on VIX.
Yeah, no, we can take a quick look at VIX as well. VIX has been a little bit more exciting lately, especially since the sell-off. Let me apologize. Just adjusting this real quick.
No, you're good. In response to the questions about Vecchio, I'm not going to throw an exact date out there and put him on the spot, but it will be before New Year's is the answer to that question. I once stayed at the Palms for a month. Was that comped? Was that a business thing? I gotta need more information on that one.
With that being said,
that would drag on you. Okay, yeah, go ahead.
No, yeah. The market is finally cooling off a little bit from the gap up from last weekend. So last weekend we had this gap up, and then we had been running to the upside until post FOMC. The market's been getting shaken up a little bit more now, but whenever the market is finally pausing and cooling down, it finally allows us to kind of game plan and process where more opportunity could finally be in the market. All-time highs is one of the most difficult areas, in my opinion, to trade in the market, especially as an active trader. So not really trying to
all-time high hater number one.
I am all-time high hater number one.
Up to Errol, the market should just channel for the next 10 years.
No,
it never make new highs.
No, I like all-time highs. I think the vibes are always great at all-time highs, but I will say, like, again, from an active trader standpoint, it is honestly some of like the worst price action. I think an active trader, like I'm saying, like in and out in the same day, like that type of price action. You don't really get price swings at all-time highs. We more so get like that grinding action. We typically lack a lot of volume too sometimes, and it's just like not the best liquid environment to be finding opportunities without that grind to the upside. So all-time highs is nice to like be sitting in, but in terms of active trading, it can be tough. It can be tough. So all-time highs, number one hater right here all day. And especially this year, I feel like we're always talking about an all-time high every other week. So let's clean this up. Let's see where some of the opportunity was coming from, but we'll break down the position we have on right now. With that being said, we got short today at 25,980, just right beneath this value area low, looking to target yesterday's low. I think Amazon had very good earnings, right? If I'm not mistaken, they did really well, had a pretty big gap up. And I think that was kind of dragging the overall market alongside with that. So today, the market opened up. We saw a lot of weakness. We started trading outside of our value area low. And that made us want to target the previous day's low because we know Amazon had a lot to do with that bounce right into the close. So we're almost there. I don't have the best risk to reward on the position, but at the same time, with not trading NASDAQ too much this week, I didn't want to, get too ahead of myself. So I didn't mind getting a little bit more confirmation to sacrifice some of the risk on a trade like this so far. But let me bring this down to a smaller time frame so we can actually break down where some of the risk would be at on this position and where we got these levels from. Let's see. Were you trading any Amazon earnings, Gus? I know that one had a huge influence on the market last night at least.
No, I didn't do anything for Amazon through earnings. I mean, obviously hindsight's always 20/20. I wish I was long, but I stay off of these tech earnings because I feel like anytime tech earnings go parabolic in such a way that it can kind of move the entire market, I feel like that just presents a lot of good opportunities otherwise, and I would prefer to not have to guess the initial move when I think that a bunch of opportunities are going to be presented anyway.
Yeah.
And that's been the case today. I've kind of been too afraid to get short into today, but off the high open and then selling back off. That's kind of the opportunity that I'm talking about with Amazon bumping way up there.
No,
I see what you're saying, Jay Hawkeyes. I didn't mean to come at you there either. I appreciate the apology. And to acknowledge that though, I would say I think if I don't know that it's necessarily contributing to the sell-off unless the military-industrial complex is moving up against the sell-off. That's what always that's when I would start to attribute wartime or rumors to a sell-off. But as long as Raytheon and Lockheed Martin are selling off with the rest of them, I don't know how much of a contributor I think that is. Obviously, uncertainty is never good, though. To that point, live cattle dropping, maybe Mexico news. I've never, I don't know if I've ever looked at cattle futures in my entire life. I used to play around with the ticker COW, which used to be a agriculture ETF. I actually see it's not even listed anymore. So it's been about that long since I messed with cattle futures.
Good old cattle futures.
Oh, well, that's awesome, Woof. Happy to hear it. Yeah, Errol is the biggest encouragement that I have to trade futures also. So I'm in the same boat with you there.
Oh yeah. No, I think it's a little bit easier to trade futures. Like I just put the stop in right here because like even as we're breaking this down, my mind's just thinking about the risk on this trade. So I was like, let me get this stop in and let's define that a little bit more while we're live together, so that we can actually talk through the rest of what's going on here. Because the market can shift on a dime, especially with NASDAQ. You guys know how NASDAQ is. It's a lot more volatile than ES. Yeah, even if you have your directional bias right, like it's not rare for NASDAQ to come out and have some random reversal and sweep some high or sweep some low. So just having in those stops gives you a little bit more of a clear mind.
And especially in this environment too, where how many days in the last just 2 weeks have we been like, okay, we might see a prolonged sell-off here for a few days, and then all of a sudden we're just right back at all-time highs again. Like the market does not care.
Does not care.
In response to the short interest question I saw earlier from Steven, gents, how much short interest are you keeping in your account? Do you measure this? I don't measure it pointedly. I would say my account at this time is maybe 10 to 15%, like very, very little. I personally prefer to just lean incredibly strongly into my directional convictions until something happens to make me change those convictions. So that's sort of where I've been at recently. And in early April, you would have found me 80 to 90% short as well. But if things were a little more turbulent, if I felt like the market cared about anything at all, I would be a little more inclined to have some short interest. But when we just keep going higher and higher, despite plenty of information that could make us stagnate or sell off for a little bit, it's really hard for me to put on any more short interest than this. And most of it is not even a broader portfolio hedge. It just stems from specific spots where I think a short could be valuable. We're
setting up our risk profile. This is one way you can kind of like with the options chain, we can see our risk profile using the curve mode, and we can kind of see certain shades highlighted, what you might profit in certain areas using that curve mode. This is another way that you'll have to do it a little bit more manual, but if you find a long or a short position on this tab over here on the left, yeah, this one over here, is it this tab? So many tabs. There we go. So over here at the top of this tab, you have long position or short position. So I have a short position on right now, and if I want to visualize that risk profile a little bit more, I'm going to click on short position, and then I'm going to click on my entry price, and then I can drag and adjust where my profit target is and then where my potential stop loss is. And then that'll give you more of a visual component of defining that risk profile at least.
Yeah, I think that's a great way to go about it.
Just help you visualize it. I remember I had seen something along these lines years ago, and it like was such a light bulb moment for me personally in my head. I was like, oh, like that's what that risk looks like. And then I really made that connection by looking at one of these a long time ago.
Yeah, I mean, it's one of the reasons I love the curve on the tastytrade platform so much. It's just it's sometimes really hard to visualize your risk and your levels, especially as trades become a little more complicated. So yeah, having the curve or having some visual element that you can integrate that allows you to see your risk is really nice.
Yeah, it's helpful. It's helpful. Again, the risk on this
Maximum
one is
spook entering markets. Yeah, you're absolutely right. It is some spooky markets here. I made a joke yesterday that the markets can't be orange, so red is the closest thing we can do.
And if you're colorblind, the markets can be whatever color you want them to be.
Yes, that's true. For Errol, the market is just whatever color he imagines.
Whatever you're feeling on the day. But no, looking at VIX here at 18.
Yeah, climbing.
Yeah, I'm not complaining. We can get to 1920. I'm not complaining. Spooky season.
RE Vegas tickers. Last time I saw LVS was the quality one. MGM and Caesar's better for shorting. Yeah, LVS, Las Vegas Sands, is really interesting. I think because the thing that's most interesting about Vegas Sands to me is that, well, one, they are widespread. They have casinos in Atlantic City and all over the place. But that Vegas Sands CEO, her name is escaping me right now, but she is really good friends with Mark Cuban, who is, and I think that the pieces are here for her and Mark Cuban together to lobby enough that gambling will get legalized in Texas, and then Las Vegas Sands would be the very first to the punch in opening those Texas casinos. So that's an interesting one there. Texas, obviously, a gigantic market. I think it's second in population behind California. In the country. So yeah, that's an interesting angle for LVS long term there. I live near Milwaukee. Might pick up some Pfizer shares just so I can go to the Pfizer forum and demand free tickets because I'm an owner. Damn it, that's a good one. I don't know if they're gonna let you in based on that. Maybe if you buy enough shares. I mean, there is a point at which they would have to let you in. I'm long Pfizer myself off of that dip. It's I got longer dated contracts which are up today but still down just barely, holistically down 45 bones. But yeah, I have a September 18th 26 naked 125 call, and then I also grabbed a 75.85 short put vertical that's 77 DTE. That's into January.
Big deal right here is that risk reward indicator 3-to-1. No, right now it's 2.12, so it's just over two times the potential reward that we're risking on this trade.
Yeah, the VIX climbing too. It's it might be a little better than what meets the eye. Is all I'm saying.
Oh yeah. I mean, I hope volatility pick it up. I hope we could just get to this profit target a little bit quicker. I don't like when we start consolidating and doing all that nonsense. But as for the point of control, so sometimes this is the developing value for the day. So what I'm going to do here is I'm going to take this volume profile tool, the fixed range one. And sometimes whenever we put in the obvious high or the obvious low on the day, sometimes you can just take the range from that day and it'll give you a better idea of where most, again, the trading activity occurred within the chart. So that's another reason that gave me a little bit more confidence to pull the trigger on this one, just seeing a little bit more of the volume taking place over here and then seeing that weakness down here. And then what I have highlighted here is the all-time high of this week's developing value. So now we can even take like a larger time frame profile and add that in, almost like a top-down analysis almost. So we're starting with the larger time frame now, and what we're going to do is we're going to go to the beginning of this week. And when we go to the beginning of this week, that's where we had gotten that gap up. So I'm going to take the volume profile, the fixed range volume profile. I'm going to take it from that gap, so the Monday's price action. all the way to the high for this week, and then all the way to today's current trading price. And it's going to give me this little rectangle right now. We can kind of see that chunk of value or that chunk of traded activity right there. We could adjust this a little bit right here. All right, we can pull this down here so we have a little bit more of a visual now where most of the trading activity occurred, which was inside of right here. So if we understand that price is starting to accept outside of this level of value, then we know we may be a little bit more directional. And if we were to take the data from last week, most of the trading activity from last week is sitting beneath these price levels. And we know that because the market gapped up within this range. And the market never even went back to last week's prices. So we know a chunk of volume from last week is sitting down at those lower prices at the same time. But we're not even targeting lower prices in the first place. We're going with more of the higher probability targets like the previous day's low. So that's what we're choosing today. And that's why we're getting a little bit more directional, just because we're pushing outside of this week's developed value, which we can see we took from the volume profile right here. I forget how we clean off these drawings a little quicker. I figured it out.
There was an undo button.
Oh, yes.
You figured out there was an undo. Yeah.
Thank you.
Two good questions in chat. One, is this volume profile a visual representation of the volume numbers in the options chain? Like it's the same thing? I don't want to speak out of turn, but to my knowledge, yes. We compared it to the active trader tab before, right? It's essentially the same thing.
Yeah. Is this volume profile a visual representation of the volume numbers in the options chain? Like, is it the same thing?
But I think that the active trader tab is just unfilled orders that are waiting, while this is just all volume in general, correct?
Yes, that is correct. And to clarify, Blue Collar, are you speaking of the options chain within where we place the options contract? Because if that's the case, then this would be a little bit different. But if you're talking about the active trader, like the DOM, the depth of market, with the trading ladder on the active trader, those will be two separate things. But I wasn't sure which one you were talking about. Can that risk reward ratio?
This includes filled orders as well.
Yeah.
Right. Yes. Obviously. And then can that risk reward ratio change automatically with a VIX read? That's a good question that I do not know the answer to. Is that just based on the levels that you have manually put in for your profit and loss targets, or is that a dynamic thing?
Can that risk reward ratio change automatically with the VIX read? What do you mean by that, Big Deal? I'm not sure.
I think he's saying as VIX continues to go up, does your reward profile get greater because you are short?
No, my risk profile, the risk profile will only change if you choose to change it. So the risk profile will only change if for whatever reason I choose to cover my position early or extend my position further. So it's fixed until you manually intervene. Or let's say I add to my position, it's going to change my average order entry price. So if it changes my average order entry price, it's going to increase my risk because I'm adding at a worse price. So it's going to increase my risk. Not only that, I have 2 contracts on now, and then also it's going to decrease my reward in terms of how many points I'll be able to capture. So it'll just be fixed until. Thanks, Gus. That's what I was asking. So what was that? What it was again, Gus?
Yeah, he was asking if it dynamically adjusts with the VIX or other market factors, or if it's just manual.
Oh, I got you. Yeah, all manual. So we won't have to adjust our risk reward unless like we decided on this pop we want to add short. It'll pull this average entry price down a little bit. And then, I mean, one way I can decide if I want to add short is if maybe I pull my risk down to this level, which I mean, that's actually not a terrible idea. Maybe we could have added on that pop because at this point, if price were to get back up to about 25,998, there's a very good chance we could retest the value area low, which is the area where we would get the best risk reward entry. So like even on that point, we had taken the short over here. Let me clean this back up. There we go. We had taken the short a little bit later, but that was just to, okay, these drawings don't want to disappear. Clean that up just a little bit.
Sometimes the teacher has to erase the whiteboard,
Yeah, and then sometimes you accidentally use a Sharpie. That's how I feel sometimes using the tools. So big deal. Over here, right, we have our value area low, and we understand the market is always trading within one of 2 states, either they're a balanced market or an imbalanced market. So here we see that the market has the potential to shift from the balanced market that it's been trading in and have the potential to shift to an imbalanced market, which will make it a little bit more directional to the downside. So if we can identify profit targets to the downside and we recognize the market is shifting from balance to imbalance, we can justify looking for an entry. Now, where's the best risk to reward on the chart going to be? It's always going to be near the value area low or the value area high. But why is that? That's because that's the point in which the market's making the decision to stay in balance or shift out of balance to an imbalanced market. So if we were to look for the short entries near this value area low, we're going to have our risks somewhere in here because we know if the market reverses on us, that invalidates our trade thesis. Now, the thing about chasing entries is you risk getting stopped out of your position before the market invalidates your trade thesis. Right now, this short, what we're pretty much expressing to the market is that we believe the market is going to go and seek new value to the downside. So we believe there's going to be a directional market, right? The market's going to dictate that. We might get stopped out. We might be wrong. But we're expressing that through these price levels right here, specifically 26,026. So if I chase this entry down here, or let's say I wasn't confident enough to get into the trade until right here, right? I risk getting stopped out of this position because the market can, right, bounce against me all the way within these levels, still reject the value area low, and then come and sell off, which is probably one of the worst feelings as a trader, is whenever your trade thesis is still present, it's not invalidated, and you get stopped out and you figure out later on you had the right directional move, it's just your execution was kind of off. So I think just highlighting that value area low allows us to really adjust and visualize where that risk to reward is coming from. Because again, here during lunch, we could have gotten short here, which would have obviously been a better entry price. But number one, it was lunch hours. And then number two, this was the first trade of the week. I hadn't taken any more trades this week, so it's smaller size too, and wanted to wait on a trade where you would feel a little bit more confident. So I was trying to protect my confidence at the same time. But really, all eyes was on that value area low. And it's always just thinking about, are we in a balanced market or imbalanced market? Because then we know what type of behavior to expect, right? If we believed that right here that the market wasn't going to shift into an imbalanced market, if we believed that, we would have gotten long. And that would essentially be expressing that the market is still accepting these levels to be fair value. And again, the only reason why I think we have a little bit more confidence taking the short today is because the market put in that low yesterday right before the close. So there's a little bit more of like a low hanging fruit target to go after, if that makes sense. So it's like sometimes a profit target are within your range to taking that risk makes sense. Sometimes I'll pull the trigger on trades where there is no justified profit target, and I feel like not knowing that profit target will make you lack confidence as well in the trade. That makes sense.
Yeah, and this all just lends itself to why you are all-time high hater number one, as I alluded to earlier, because that is a state of imbalance where we don't even know where the state of balance is going to come in or how that's all going to work out. It's just pure imbalance to the upside, and that's a really difficult situation to trade, especially because you're considering whether it might return to the previous value area, come down and bounce off the previous value area. Whatever may happen in that regard, but it just, it makes it challenging to trade this style at all-time highs. I can just buy more myself. That's usually what I'm doing at all-time highs.
Bro, no, seriously though. No, at all-time highs, it really is like, accept the risk to reward that's not in your favor, or, size down very small, or just anything you do, just don't try and pick off the top. That's probably like the best.
It's just more noise comes into play is kind of the way that I would put it. It's just, you have to try to use esoteric factors and not, volume and concrete market factors to make your determinations. And so when you have a system in place like this, it just makes it much harder to execute on that system.
100%.
And that really would apply to just about any system using technicals that you can think of. It becomes really challenging.
No, it does. It definitely does. It definitely does. I mean, I'm hoping this one will go through because, guys, if we can at least snag this one, we have some profits to risk into the next week. Right, so that'll be nice going into next Monday. We didn't get a trade too much this week, but if we can, snag some more ticks out of this one, maybe we can knock out that previous day's low, then we can head into next Monday risking about half of today's profits. That would be nice if that could be the case.
Andres, is your preference a 1 minute chart? Mine is typically 15 minute in 1 day. Personally, I do 1 hour or 1 day myself. You like 30 minute. You had a very good justification for 30 minute yesterday.
Yeah, I mean, 30 minute for the large time frame, just to kind of view market structure from a larger perspective. But whenever executing, usually the 5 minute and the 1 minute
And you switched from 1 hour to 30 minutes because of something with order executions. I don't remember what your exact logic was. You made some discovery.
Yeah, no, I was kind of in the same boat as you, just using the hourly. Like the hourly is just like a nice larger time frame to view higher time frame price action from. But then I switched to 30-minute. I don't even think it makes that big of a difference, to be honest. But the only reason why I did that is because I was studying TPO a little bit more, which is time price opportunity, which is pretty much the exact same thing as a volume profile. The only difference is it calculates time instead of traded activity in the volume. And when I saw that it was calculated in 30-minute increments, then I just had a habit of using the 30-minute time frame. But that's the only justification that I have for using a 30-minute rather than like an hourly, which I used to use.
Yeah.
Not that it even matters. It's all, preference. It doesn't matter.
Well, yeah, and that's the thing too, is, I mean, whatever you're trying to do is going to be valid on the time frame that you're looking at it on. You just have to keep that in mind as it pertains to entry and exit timing.
100%. See if you can clean this back up. It would be nice if we can get a little bit more volatility. We can maybe close this position out. I consider myself a reasonably educated and intelligent person, but I couldn't be on the air expressing an opinion and making it interesting. Errol and Gus have my respect. Oh, appreciate that, Theta.
Thank you, Theta Trade. Appreciate the kind words.
Yeah. No.
Now back to my normal semi-trill comments and non sequitur observations. Hell yeah. Oh man, that's funny. Big Deal says 1 minute, 3 minute, 5 minute, 15 minutes for trend. Interesting. Yeah. So you're just thinking in a way shorter term. And yeah, that's not invalid either. I mean, I think that's just one of the most beautiful parts of trading is that there's really no wrong way to do it. There's so many avenues that you can take, so many time frames that you can look at. You don't even have to look at charts at all if you really don't want to. There's angles that you could take in that respect as well. So yeah, it's just really interesting how there's so many angles. I mean, that was what drew it to me initially. It's like, it's not like if you try to learn to trade this way that Errol is describing and it doesn't work for you, that you just can't trade. You would simply pivot to something else and try to find something else that works.
100%. Bro, I just scrolled up and saw an egregious comment.
That was what all that was in response to. He's been dealt with. We're good.
Oh my gosh. Yeah. I'll keep my words to myself.
Yeah. Somebody lost a trade. Somebody blew a port.
No, market kind of consolidating here. It's getting a little bit slow on the price action on NASDAQ, but those are some of the levels that we were looking out for. We'll swing back to the trading view and see if we get any more updates on here, but that's the risk parameters on the trade. That's the whole trade idea, balance to imbalance, more of a directional trade to the downside. Previous day low is one of the more obvious targets to target. That's why we're targeting that one. Other than that, the market's been really weak. We haven't had much downside yet either. I think, who was talking about it earlier again today? I think it might have been Sahil on market measures and Tony and them. But, I mean, the market
Sahil
barely...
did such a great job this morning, by the way. That was awesome.
Say that again?
To throw that out there. I said Sahil did an amazing job this morning. Love
yeah.
Sahil. That was very interesting. I thought he did awesome this morning. I'd love to see him on more.
He did. Sahil was cooking. He was cooking today. But...
he won't tell you guys this. D3 golfer. Really good golfer, Sahil.
Is he? All right, so he's not lying. I didn't know. I'm like, all right, Sahil, we're going to see. I know I'm trash. But he's been saying he's like the second coming of Tiger Woods, so I'm gonna have to see.
Yeah, I guess I wouldn't say really good like in the broader scheme of golf. Like he's not about to make the tour or anything, but he's way better than me and is a very, very respectable golfer and a hard opponent on the golf course.
Yeah, no, he's been telling me to get some used clubs. He's like, bro, just get some used clubs, just practice your form, get the basics down. And I'm like, you know what, I'm down. I'm trying to roll out with you guys, especially once the weather starts getting a little bit warmer. So.
We'll get you right. We'll go to the driving range dome sometime over the winter and get you right. The hardest part is contacting the ball. If you've never played before, it's just the weight transfer and contacting the ball. Everything else comes into play after that. But yeah, we'll get you golfing. No, you're in finance, man. You have to play golf. It's like a requirement.
Man, I was down in Florida, and let me tell you, everybody and their moms, cousins, everybody golfed, and I was still the only one. Like, I'm good. I'm good, but I can appreciate like the greenery, a nice golf field. I can appreciate all that, but no, I'll come around.
Netflix. Oh yeah, Netflix announced a split yesterday. I thought it was really funny that they had earnings and didn't mention a split, and then somehow like 3 days later they're ready with the split information. I almost wonder if that was like tactical, if they were like, we know we're going to sell off after earnings, so we can delay this split announcement and bring ourselves back up. Which obviously it hasn't come all the way back up, but yeah, Netflix with a 10-1 split, long overdue in my opinion. This is going to sound really brain dead when I say it out loud, but I'm being genuinely serious. who needs a stock over $500? Like, for real, why not just split? And it's never made a whole lot of sense to me. I don't, it doesn't compute. So yeah, I'm with it on Netflix. I think Meta should go next. There's just no reason to have your stock price be like getting near $1,000. You might as well split, in my so unprofessional opinion. Unless you're Berkshire Hathaway, in which case you're just $300,000 a share. Who cares?
No, yeah, I mean, $1,000 is crazy. It felt like Chipotle was trading at those levels pretty much the entire time getting into the market. So it's also just new having somebody like Chipotle trading at these levels too.
Yeah, Tesla, yeah, selling off a little bit today. Tesla is just like, I feel like you're always just waiting for the next giant move with Tesla, and we get one twice a month.
I feel like Tesla,
it feels like something happens.
Tesla's one of those tickers that when it's extremely active, it's extremely active, and you definitely hear all the other active traders trading Tesla whenever it's moving. But it has been a little bit more quiet.
What's the historic outcome of splits, if any? I would venture to guess, and this is just me, again, guessing here. We have not done any research on this. I would venture to guess that splits, if you just looked at it objectively, would be generally a positive thing, but that statistic is really conflated because you have to be a strong company to need to split in the first place. So that's my take there. I mean, Apple's done what? Like I think that one Apple share in 2000 is like 237 shares now, or something like that is the number.
Something like that.
I know that it's the cost of the original iPod. If you had just bought that in stock, that's $1 million position now. that's a stat. Chipotle had a 50-to-1 split. Yeah, I agree, Steve. 50-to-1 seems like too much initially, but then I mean they were what, like it was like $1,700 when they split, maybe more than that. CMG. Just do research here.
Go. Looking at some of this high options volume watch list, energy is getting crushed.
Yeah, it was $3,200 a share, $32.83 per share, 50-to-1, down to 65 to 66 per share.
What ticker was that? I mean,
one? That's not that crazy. How yeah? Why are you letting it get to 3,000 in the first place?
What ticker was that one, Gus?
What? CMG, Chipotle.
CMG. Oh, I got you.
Yeah. I remember when I first started trading. Yeah, Chipotle was always like a $1,000, $2,000, $3,000 stock. Splits are good because people can buy more shares. Yeah, exactly. And you just make it accessible to more people as well. I mean, there's lots and lots of people who, don't know fractional shares exist, can't buy them with their platform, whatever it may be. And it's just, it's really hard to get involved with a company that trades at $3,200 a share. Like, I mean, that's what I would run into a lot when I was like, 18 and just had $500 in a little long-term account when I was in high school. Is like I just never felt like I could even get at those stocks because I could never get my hands on any considerable amount, even though obviously it all shakes out in the aggregate if you do fractionals.
No, 100%. I mean, even before I had learned how to sell options, and when I learned about vertical spreads, that was game changer because I had always heard about Apple, Meta, right? Coming from somebody that traded only equities, I was like, bro, how could I just afford to buy 50 shares of Meta and Apple, 50 shares of Apple, and actually have any type of exposure to the market to actually trade? Little did I know vertical spreads gave you some exposure to do that. So, yeah, options was a whole new ball game. Didn't know you could get exposure to some of these larger companies.
No, it was exactly what it was for me as well. It was like, it was the difference in how quickly you can make money, how you can structure your risk profile. I mean, all of it. But yeah, mainly just how much leverage you were able to get into your convictions, even with just a very small amount of money, and actually see some tangible return on that. Because, if I think Apple's going to move from 200 to 215 and I YOLO a $500 account into shares, I make $10.
Right.
Okay. But if there's all types of option strategies where I could make a few $100s with the same amount of input if Apple goes from 200 to 215.
I don't hate
a study done about 2000 found that companies that did regular splits held on to higher PEs. Yeah, there you go. Thank you. Appreciate the research. I don't know how to pronounce your name. Uppenden? Oh, that's my best try. Mr. Up, sir. Thank you. Or ma'am. Thank you for the information. That's really good research.
Uppender. I don't hate the Kava. I don't hate Kava right now, Gus. I'm not gonna lie. I don't hate
it. What's up with First Solar and Twilio? Those aren't related in any capacity. First Solar. Mm-hmm. Let's see. First Solar movement. I mean, yeah, this one's just been a strong performer for the year. I don't know what the catalyst is here today. FSLR. Let's see. Reddit. Oh, dang, Reddit's moving as well. I didn't even see this. First Solar. Oh, just good earnings. Nothing Nothing super exciting there. Twilio, also just good earnings, both of them.
Reddit, what is Reddit up to?
Twilio is a sleeper company that people don't realize how involved Twilio is in a lot of companies' business operations, I don't think. Reddit, drumroll please, also beat earnings.
Reddit.
585 million in revenue above the forecast of 546. So almost a $40 million revenue beat for Reddit there.
Now they're doing red. Long-term bullish Reddit. Long-term bullish Reddit.
Oh yeah, I'm inclined to agree. I can't really justify this statement too much, but Reddit to me is like very similar to Roblox in terms of my long-term thesis. Like they're just like the same kind of vibe to me. Like they have a lot. It's just a place that houses a lot of user-generated content, and they make good money. And I feel like they could continue to take over, especially Reddit in terms of search results. Although I know that the AI services now, like ChatGPT, used to be really big on using Reddit as a search thing, and they've tweaked that a little bit so that it takes Reddit into account a little bit more. I will say, as I was preparing for my DMV appointment earlier, I asked ChatGPT a question. I don't remember exactly what it was, and you can like see it thinking, and so I saw it pop over to like a bunch of legit sites in a row, like the Illinois Secretary of State site, like a whole bunch of sites that made sense. And then just for 1 second in the middle, it was like reddit.com. And then it went back to the Secretary of State site. And I was like, what information did this thing just pull from Reddit that I'm about to go make use of in this very important thing? But it seems like everything is right. It made me fact check it. I was like, I don't know what we're pulling on Reddit here, but it was good. I'm about to destroy a bagel and cream cheese. That's awesome, Rancher. I don't know if you've been around, as I've mentioned that I have been addicted to bagels with cream cheese recently, but I pretty much do a bagel with cream cheese every single day now. It's like my nighttime snack. Bagel with cream cheese, cup and a half Fairlife milk. The Fairlife milk is just a great equalizer. You can make any meal into a macro efficient meal with Fairlife. I noticed Reddit has disappeared from search results. They used to be top 5. Yeah, I'm not, and I think that the only reason that really started to happen was because people caught on, and then there was all kinds of ways that you could leverage, like, market for yourself, essentially, by manipulating the Reddit search results. But I still do very frequently. I'll Google something and throw Reddit behind it if I want to just see real people talk about it, because that's almost like a whole different application entirely. There is things that I would still Google, even though AI exists, which is just quick little things that I know Google can give me a one-word answer to. There's more nuanced questions that I would ask AI about because I want a more detailed answer and I don't want to do all the different steps of research to figure something out. Then there's like a third category of questions that I want to see somebody who has had this exact experience before and how they dealt with it, and those ones get pulled into Reddit for me. I do look things up on Reddit from time to time. We need some footage of you guys golfing or at the driving range, all skill levels. Yeah, we could do that. I don't really have much footage of myself golfing. As funny as this is to say, as my job title is literally content creator, I do not take a lot of pictures or videos of myself when I'm just out and about in my day-to-day life. But yeah, we could put some film together. We could let the tasty audience critique the golf swings sometime.
That would be some time. First time swinging, never been to a real golf course, never done any of that. So we'll have to record the first time for sure. We will.
Did they announce a stock buyback with the split? It seems like that could be a good time for buybacks. I don't know. I don't know if Netflix is doing a buyback. I assume you're circling back to Netflix there, Grumpy. But that does seem like it would be the time to do a buyback. Oh yeah, and I never even I got so derailed talking about splits. I never even acknowledged the original question that Jared asked about Netflix in the first place. Let me take a look at this. Yeah, immediately, yes, I like your idea, Jared. I don't know that we're necessarily going to see lower lows come in on this, especially with the split announcement going on. And I think that there is a good chance that in the few days leading up to that split announcement, we might see some increased bullish volume here. So yeah, I'm with that thesis. I forget exactly what you proposed, but I know you said something. I think you just said bullish right into the split on November 14th. And if that's what you said, I'm with that.
We're getting a little bit of a pop here on some of the quantum computing names.
Investigating windmills.
Maybe some of the downside isn't over. Maybe we have more room to run, but
yeah, I got my wager still stands, guys. I'm eating a Beyond Burger live on air if this thing makes new highs before the end of the year. For anybody who was not here when I made this wager,
you talking for quantum?
I have wagered that RGTI will not make a new all-time high by the end of this calendar year, and if it does, I am going to get an Impossible Whopper, and I will eat it live on air. The whole thing. That's part of the stipulation as well. I'm not just going to take a bite. I will eat the whole thing.
Little do we know, his fridge is stocked with Beyond Burgers right now. He eats those for fun.
The whole thing is just a giant conspiracy.
This man's been bought out by Beyond, man. I'm telling you.
Yeah, bro, I'm a crisis actor for Beyond.
You ain't slick. No, I mean I'm looking at RJTI here, IONQ. If we can get some decent positioning, I'm not against getting on a little bit more short delta. I'm not going to force anything, but when it's still within this range, I'm in agreement towards that all-time high and biased to the downside on these.
Put bacon on it? I feel like that defeats the purpose. It's the content we all need to see, though. Well, you can go buy some RGTI and try your best, but I just my thesis is strong about this company. I refuse to believe they can trade that far above Palantir levels above their market cap.
No, agreed. We are running out of time here, but we'll see how this NASDAQ position plays out. We'll let this run its course, see if we make a new low in the day or if that low has been put in. But I think that's going to start to wrap it up. Anything else top of mind before we start to head out, Gus?
No, nothing else. Just I'm hoping everything in the market except for wind can make higher highs in the next week. But we'll see what happens. These Fridays continually do this thing where I have a slightly bad taste in my mouth heading into the weekend. I think that we might sell off into the next week, and then it never happens. So we'll see if this week it changes that tune. I don't know.
100%.
Yeah, thanks everybody for being here. We love all of you.
Cool. Yeah, thanks for taking the time to hang out with us today. Again, be sure to stay tuned for more segments coming on next. Have a good weekend, and we'll catch you guys next time. Peace. Fake bacon.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Shelton. This is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Now, welcome to the Friday edition of what it is that we are trying to do. Happy Halloween. Welcome to the Halloween edition of what it is that we are trying to do. If you are one of those folks out there that loves to celebrate evil and all things evil, then, man, I hope you have a good time of it. I'm not going to be doing that, but nevertheless, that is what indeed makes a market. So welcome to the show. I'm glad that you are here. If you're over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Man, I don't know who's celebrating today. I don't even know who's commiserating today. It is indeed a pretty back and forth market. Of course, well, no, this is actually pretty simple. If you followed me yesterday, again, you should not be doing this. I've been so clear about this. I've been crystal clear about this. If you followed me yesterday into Apple and Amazon, you, sir or madam, are indeed commiserating today, but it's your own fault. Like, it's your own fault. I couldn't possibly be clearer on your instructions when I take a directional stance for any given earnings play. But if you did fade me and take the opposite of my trades and went ahead and went on the other side of the fence when it comes to my directional bias, you are celebrating today. You are celebrating in spades. So, Paul, bring us into the market. Let's talk about some of that celebration here. Yeah, so take a look at this. I mean, even the markets are celebrating a wee little bit. You got even S&P's up 8. You got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 80. You've got the boomers down 62. And you've got, boomers down 62. Russell 2000 unched on the day. And so, yeah, forget about all that. But, man, look at this. We got it's so bad. So look at this. It is so bad. Like, things have gotten... Like, we thought we reached the bottom with the Chipotle situation. Nah, man, we're just getting started. Like, we were just getting done with the warm-up sets. Like, the legs are loose, the joints feel good. Now it's time to really get to work and really start lighting some stacks of cash on fire. It's so bad for Apple and Amazon that we don't even have a mark price. They're not even giving us a mark price in the old drop-down menu on the positions tab. That's how you know that you've reached a state that you don't really want to be in. Like, you're in a spot with a given position or set of positions, which is the case for me, that is not necessarily super desirable. So for Apple and Amazon here, it's brutal, man. But let's go in here. Let's take a look. I see you guys in the chat, man. Look at you guys. I see you guys in the chat, man. Look at you guys. Wow, man. Brian Dowdy's in the house. Man, Wanderer's in the house. Man, look at it. Look at Juan Veloza in the house. Man, good stuff. Really, really good stuff. So let's go into Apple and Amazon. So there's your mark prices. So they're there. We just didn't see them because I think it was a collection of mishmash. And Tasty Trade was probably looking at my positions and thinking, all right, like, man, this is so bad. Like, we could run the calculations to figure out what the mark should be, but this is so bad. I don't know that we want to, spend the resources to give this guy a mark price when we all know it's going to be pretty close to zero anyway. And so if you look at Apple here, we've got this butterfly on. And we've got our vertical spread on. You look at Amazon, same thing, butterfly, vertical. Okay, now what are we going to do? Well, it's not good, guys. It's not good. Again, we played them both to the downside. I don't know why I did it. You can't beat them, join them. Have I shown any indication that I will ever be able to beat them? Have I given you guys any glimmers of hope from the standpoint of my being able to beat them on a consistent basis? Can I get a little one-off here and there? Everybody can do that. Like, can I get lucky once in a while? Everybody can do that. But can I actually beat them consistently? I have shown no indication that I can do that. I will have now been on the Tasty Network for 10 years in January. So I would say we gave it a good run. I think now it is time. You can't beat them. You join them. We are positive delta. We are bullish. We're playing everything to the upside because, again, we have shown no indication that we can do anything on our own merit. So for Apple, though, if you look at this guy, this butterfly is going to expire today. It's currently marking at 13 cents. I don't really want to close it for 13 cents. I don't think we've gotten to that point yet. Maybe in a couple of weeks. Check back with me. But I think we're going to leave this guy on. Now, the tricky part here is if Apple does indeed drop going into the close or whatever, there's a very, very high likelihood. There's a good chance that I'm going to not necessarily be at the ready to close out of this butterfly when the 270 put goes in the money. So what's going to happen if this does indeed transpire? Well, then I'm going to come into into the weekend being short some Apple stock. And so come time Monday, right, we're going to be short some Apple stock and we'll just deal with it at that point. There's a chance that I am able to see this going into the close, but I've got so many things that I have to do like after the show related to the show. I'm still working on the skinny for Monday. And so there's a lot of things on my plate in terms of, what happens when the show is over today. And so there's a very, very good chance that if Apple does indeed go down below 270, I'm going to miss it. So just be ready. We might be short some Apple going into Monday and then we'll deal with it at that time. But obviously if Apple stays up here, we're going to lose our 9 cents and then that's going to be that. Now, what about the short vertical spread? Right here. So you can see that you've got, Apple is at 271. Believe it or not, man, our short vertical spread, somehow, some way, it's hanging in there. I'm really hesitant to say that it's working because I think that's maybe being a bit disingenuous and maybe going a bit too far. But it's hanging in there. And so I don't think that we need to close this right now. I think we can go ahead and just leave this trade on. Like if I were to close it right now, you can see I'm getting out for, okay, so I would lose a little bit. I don't know what I sold the vertical spread for. Actually, wait, let's figure it out. Let me bring up my chains here really quick. Any Friday with some Allison chains is obviously a good Friday. Especially, again, if you're supersetting the Allison chains, you don't want to superset it with like Metallica or like AC/DC. Like those aren't bad moves, but you've got to mix it up. You need to have like antagonistic muscles. So I would superset some Allison chains with like some Kesha. Like that would be a perfect pairing in terms of really shocking the muscle and confusing it into growth. And so for the vertical spread, though, we did this guy for, we sold it for 380. Is that right? Yeah, we did. So actually, wow, that's crazy. So we did this guy for 380. It's currently marking at 375. Wow, we're actually up on the vertical spread. I don't know how that happened. That's got to be some kind of typo, I would imagine. Some kind of bad quote feed or something. But I'm going to sit tight now. There's no reason to close it. It is on track to work, which that's not commonly the case for us. And so we'll take it where we can get it. So for Apple here at 271, we're going to sit tight and we're going to do nothing. So Apple, we do nothing. The butterfly would do nothing, and I hope that I'm short some shares of Apple going into Monday. That would be great. That'd be better than the whole thing expiring worthless. I would love the idea of being short shares in Apple over the weekend, but is it that big of a deal? I don't think so. Most likely it's going to be fine. Of course, those are famous last words. And so that is, there's our Apple situation, so you can pour one out for that trade. But Amazon, but again, if you're not on the opposite of this, I don't know what more I can do, guys. I really don't. I'm trying. I am trying. I am giving you guys every day, I'm giving you guys my authentic thoughts. Every day, I'm giving you guys how I genuinely feel about these positions. I'm not making stuff up. I'm not like pulling one over your eyes. I'm not doing things just for whatever. Like I'm telling you guys how I genuinely feel about these positions and I'm giving it to you. And then you, sir or madam, need to be on the opposite side of that trade. If you're not at this point, I can't help you. I really can't. I can't help you. Amelia can't help you. Amelia, very excited, super excited about the simple fact that she gets to be a ballerina today. And so she's very, very pumped about that. But all right, we did Apple. Let's go to Amazon. So Amazon, let's see. Okay, so similar type of situation, other than the fact that we're getting crushed. So, so other than the fact that there actually is a glimmer of hope in Apple, there are no glimmers of anything for Amazon. Like this thing is done. It's over. Like, get them next time. The butterfly is not going to work. So the butterfly is not going to work. It's not going to come back. It's over. It's done with. It's all those things. We paid $3.47 for it. It's currently marking for a penny. I'm no Julia Spina, but that's not good. And so the butterfly is over and done with. It's going to expire. We don't have to worry about that. What about the vertical spread? Let me grab my, let's grab our Glacier Freeze here. What about the vertical spread that I sell, or that I have a 235, 245 short call spread on, and you've got the stock at, let me bring up Amazon. The stock's at 246. Okay, so what should we do? Well, in my opinion, we don't do anything. In my opinion, this is a great situation where it's like, hey, we chose the December cycle for the sole purposes of having more time if we needed it. And so for Apple, we're on the right track. We're in a decent spot. For Amazon, that's not necessarily the case, but it doesn't change the fact that we still have 49 days to go. 49, I mean, that's a long time, man. 49 days in the market is an eternity. I mean, there's probably going to be all kinds of Trump tweets and walkbacks and Taco Monday, Taco Tuesday, Taco Friday even. Like, it's all coming on down the chutes. And so it's like, man, we could very well find ourselves in a position where this guy's actually out of the money. And we actually have a chance to go ahead and maybe manage this guy for a small win or a scratch or even a smaller loser. I would imagine right now we're actually probably not doing too badly on the vertical spread. Obviously, the butterfly is gone. That stack of cash, like, it's all ashes now. There is no paper left. It's all ashes, I can assure you. But the vertical spread, if I go into this guy, you can see that I sold the vertical spread for 315. Oh, I can see it right here, actually. Oh, that's way easier. Yeah, because I'm grouping by the chains. That makes sense. So, man, this is super easy that I can now see the actual entry prices here on the drop down. That's very nice. I sold this for 315. You can see it's marking as 615. That's really not too bad. Now, let's stop here for a second. And by a second, I mean 8-9 minutes. We're down $3 on the vertical spread specifically. The maximum value of this vertical spread, this is really important. The maximum value of the vertical spread is $10. It's going to be the width of the spread. Could you make the case that, man, I feel good about the fact that I've only lost $3 on this trade? I don't think Amazon's coming back down. I love the conference call. I love Jeff Bezos. Like, I've got a poster of him in my bedroom. Like, I'm getting the same pharmaceuticals that he's getting. I mean, we're getting vitamin H, vitamin G, vitamin H. I mean, obviously you take them all together. A little vitamin S. Like, I'm getting all the same stuff that he's getting. And so I really like what the company is doing. I don't think it's ever coming back down. Could you make the case that you close out the trade right now, take your $3 loss and move on? Of course. I think that's totally fine. In fact, I think that's actually a really strategic way to think about this. If you want to do that from an Amazon directional bias, totally fine. Personally, I don't have any thoughts about the company one way or another. I mean, I use it just like everyone else does. But I really think that, when it comes time to define risk strategies, just by and large, doing nothing is just a really good strategy. Like, again, it's our default strategy for a reason. It's the default setting for a reason. So I'm going to sit tight and I'm not going to do anything with this short call spread. But I wanted to point out that if you saw this and you were like, man, I'm getting out of this trade right now, like, I really, really like this situation that I'm in with being able to kind of, mitigate the losses, and I'm significantly away from max loss value right now. That's a really, really positive thing. And so by all means, you could close it now. I would have no issue with that whatsoever. And so I wanted to point that out because I felt like that was at least a little bit relevant. And then other than that, all right, so we poured one out for Apple. We poured one out for Amazon. We have barely any left for ourselves. Again, going into the weekend, that's going to be a little bit tricky. But I'll see if Autumn will let me leave later and get some more banana daiquiri mix, because we're going to be all out here pretty soon. But if I look at the rest of the portfolio, man, like, I really thought by getting rid of Best Buy, which we shouldn't have done. Isn't Best Buy doing great? I saw you guys in the chat one day after the show recently, and you were like, Dr. Jim, don't look at Best Buy. At 82, wow, Best Buy is doing phenomenal. Wow, look at Best Buy, man, doing really, really well for itself. Man, the Geek Squad is just, man, they are really, really making things happen. Let me look at a chart of Best Buy. Is this a daily chart? Yeah, daily chart. Wow, so Best Buy was actually up to 80. Look at that. Hold on. Guys, look at that, man. That is crazy. So if you are like a From Theory to Practice OG and you've been watching the show for a long time, thank you so much. Like, I'm so appreciative of all of you guys, even if you're not an OG. Like, you've got the OGs and you've got the NGs. Right? Like, you've got the OGs and you got the new Gs. Like, I appreciate you guys. I appreciate all you guys. And so our assignment price on Best Buy was 85. And so the fact that this thing went right back up to 84.99, man, that's crazy stuff. That's super, super crazy stuff. But yeah, now even just over 82, that's not too bad. That's not too bad at all. So, wow, I can't believe that Best Buy is back. That's really, really wild. And so Best Buy, and then we got rid of Chipotle. I really kind of felt like, we were going to be able to thwart the P&L Open Bros, but it appears that we are not able to do so because of Starbucks. And so Starbucks obviously continuing to give us fits. But this is something that, I mean, I was pretty clear about that when we got into this position back in December. I was like, hey, we're going to go ahead and we're going to treat this guy as a longer term project. We're going to be in this trade for a while. And, I'm not necessarily going to be looking to get out if the stock does well, if the stock does poorly. I kind of want to show you guys kind of how to manage a trade, with a longer term time horizon. So that's what we've been doing here with Starbucks. Unfortunately, the stock is just not doing very well. And so Sometimes that happens though. Like sometimes, stocks don't necessarily cooperate. And so when that is the case, then, you've just got to go back to, hey, what have I signed up for? Like what have I signed up for with this position? What am I trying to accomplish? Do I understand the gimmies and the gotchas? Do I have a game plan for the gimmies and the gotchas? That's another aspect to this, by the way, right? You've got your gimmies, you got your gotchas, but do you have a game plan? Like, do you have a plan of attack for going after the gimmies and absorbing the gotchas that come along the way? Like that's 100% going to happen. There are no free gimmies. There are no gotcha-less gimmies. And so it's like, all right, do I understand, eyes wide open, what I'm signing up for? Here are the gimmies. Here are the gotchas. Okay, what is my game plan? Like, what am I actually going to do to go after the gimmies? What am I actually going to do to absorb the gotchas or mitigate the gotchas? Or just have some kind of contingency plan or plans for when things don't go right. Like this is such an important part of the process that I really think a lot of traders mistakenly overlook it. Like they overlook it and they don't give it enough due diligence, in my opinion. And so, all right, so we talked about Starbucks. I also want to, if we go to GDX, let's see. So GDX, we're at 21 days to go. The reason why I wanted to bring this up is because we are at 21 days to go. And I was thinking we're very close to a scratch on this trade now. We are only down about $1.25, $1.30 on the trade. Well, actually $1.26. You can see it right here. So I'm only down $1.26 on the trade. Given how difficult this trade has been, it really has not worked. It's really given us fits kind of, from the very, very beginning. I'm really thinking, let's go ahead and let's close out of this trade. So let's be done with GDX. So if we're done with GDX, then we're going to be able to redeploy that capital elsewhere. And so let's see here. Let's go ahead and left click. Let's close the position. There we go. Let's see here. All right. So there's GDX. Let's try to get this guy closed. Let's see. 978. No takers there. Let's do 982. All right, so we got out of GDX. Okay, beautiful. Okay, so we're out of GDX. Okay, very, very good. Paul, did my video freeze? Because it looks like it's up on my end. My video looks good on my end. Paul, is it frozen? Everything looks good on my end. I even see the video up.
Your screen's good. Your camera might be frozen.
Yeah, that's crazy because it's all up on my end. That's so weird. That's crazy. Okay. Anyway, well, you guys got the platform. We'll keep going. So, yeah, man, here we go. The video issues once again. It's unbelievable. But okay, so we've got GDX. We did GDX. That's good. We did Starbucks. That's good. We did Apple and Amazon. That's good. And I see you guys in the chat, of course. And so you guys are gonna be left with the sultry voice, which is crazy because my video is on my end, and so I don't even know what to believe anymore. And so let's see. Let me go to so I'm gonna go into the YouTube chat now. Let's go ahead and you guys will just have to rely on again the sultry voice and the platform. And so let's go ahead. Let's see where are we at here. I saw a couple good ones. Where was okay, so there we go. I see. Let's see here. Where are we at? Well, Juan Veloza is making me laugh in the middle. He says, "Hey, Dr. Jim, I had a dream last night that Meta was mooning, and we made money on the butterfly. I woke up, I checked the Tasty app, and it was marked at 0. We live to fight another day." That's pretty funny. Yeah, that's definitely some kind of dream because that's clearly not happening here in real life. As Meta's down another $15, which is pretty wild and pretty crazy, indeed. And so, man, Meta's really wow. That's crazy. Man, look at that. I mean, you've got the gap. I mean, this is the classic gap and crap strategy that we all are quite familiar with. And so just not good for Meta, man. Just not good at all. And so, yeah, pretty wild stuff. But let's see. Let's go ahead and where else are we at? Let me find. Can I find somebody else here in the middle? Well, I see Joel James says, "Dr. J, thanks for the Amazon trade. I put on the 245 shorts to the upside, so short puts. I faded you all the way and nailed it." That's what I'm saying, man. This is why we're here. Forget the video. Who cares about the video feed? It doesn't matter. This is why we're here, right? We are here to help you make money. Now, how do you make money? You make money by doing the opposite of what I do. You make money by doing the polar opposite of what I do 1,000,000% of the time. And so again, don't get lulled into sleep. Don't feel like, the confidence and the conviction, he might actually nail it this time. No, man, I'm not going to nail anything. Now, again, beware. There's going to be a 15 to 16 in a row heater coming up here pretty soon. But chances are, just on a daily basis, on a trade by trade basis, I think you guys are going to be fine with just the sight unseen fade. And so let's see, where are we at though? Let me go to, I'm going to go all the way back to the beginning. Where are we at? David Gallimore's in the house. What's going on? And for those of you that are new to the show, or maybe not on YouTube, what I'm doing right now is what I do right around the halfway mark of the show, almost every show, where I'm in the YouTube chat now and I'm entertaining questions and comments and stories and jokes. So if you want to interact with me, then you can interact with me. Oh, wait, our video just came back. Wow, look at that. Man, Paul, good job. Yeah, it was weird, Paul, because it was working on my end. And so I don't know why it dropped on y'all's end, but we're back. Man, so we went. So hold on, let's recap. Man, talk about markets moving and things changing. Like, we never lose the video and get it back. Like, wow. Like, I mean, you guys had the video and it was one thing, and then you're left with just the sultry voice. And you're like, all right, this is a pretty bad plan B. But now you're back to the video and the audio. You're like, yeah, let's go back to just the audio, actually. So this is actually, man, talk about markets moving and things changing. I mean, you got the NASDAQ up 115 now. You got the metals rallying. You got the videos back. Man, I don't even know. Only on the Tasty Network, man. That's all I can say. Only on the Tasty Network. Thank you, Paul. Thank you for doing that. That doesn't usually work, but it's always good to try, I suppose. So David Gallimore's in the house. Dr. Jim, today is the last full trading day in the U.S. I leave for an indefinite stay in the Philippines on Monday. I most likely will not watch your show 2 a.m. to 2:45 a.m. Yeah, I understand. You just don't want it bad enough, man. Like, I understand you're just not part of the core position. And so it's very sad for me to hear that you won't be able to get up in the middle of the night to watch the show. But no, of course I kid. You are part of the core position, David. And so thank you so much for all the support. And hey, man, watching live, watching in the archives, like, it's all amazing. Like, it all helps us in so many ways. And of course, I know we've emailed so many times back and forth. I'm always here to help however I can. And so please reach out. And I really hope that your travels go well. And I hope that, everything goes swimmingly over there in the Philippines. Best of luck with your new home there. So Theta Trader says, Dr. Jim, I have a BRKB 495 short put in November with 21 days to go. Shall I hold to expiration? All right, little Shooter McGavin in the house, or roll into the glorious future? I'll hang up and take my question off air. No, I'll give you an answer, or take my answer off air. I'll give you an answer right now. And so I think that, for you're at 21 days to go, right? I don't love hanging on to it inside of 21 days to go. Especially if you have a winner. So you have a winning trade on, it's working out. There's not much reason to hold it further, in my opinion, beyond this point. I really feel like you're trying to squeeze a little too much juice out of the orange if you do that. Like, you've already been able to commandeer a pretty significant amount of juice as it is. And so I would probably take the trade off and just move on. And if you like, if you want to be in some more Berkshire Hathaway, moving forward, then I would put on a different position at some fresh strikes. I mean, personally, the way I like to do it, because there's a lot of times there's names we like to trade and we just like the stock. We got a feel for it, whatever. And it may all just be complete, hogwash and, astrology or whatever. It's something that doesn't even matter and doesn't have any actual bearing on reality. But we think it does. Like, we 100% think it does. So apologies to all my astrology majors out there. But if you like trading a given stock, right? I understand. Like, we all have our favorites. So you get out of a trade, but you kind of want to get back in. I don't think there's any problem with that. The thing that I like to do is wait a couple of days. Just wait like a day or two, because then let the stock move, let some things change, and then maybe you kind of enter a new area that's a better spot to enter, even in the same strategy, the exact same strategy. So typically, if it's a stock that I like to trade, whether it's Berkshire Hathaway or McDonald's or whatever, then what I'll do is I'll take off the winning trade. I will either maybe trade that same stock that same day, but with a different strategy. So if you're using a short put and I want to be bullish, maybe I do a put ratio spread. Or if I'm doing a short put and I want to be bullish and volatility has dropped, maybe I'm doing an at the money call spread or something like that, right? Or I wait a couple of days and now maybe do a different strategy or the same strategy that I've been using for a while. And so that's how I look at it. Maybe that can help you a little bit, kind of, figure out where you want to go next. Wanderer's in the house. Wanderer, if I don't see massive floof, I'm going to be so mad. Yeah, it's not really. It's very muted today. It's very, I got the layers put in, and so it's intended to be controlled chaos. Like before, it was just chaos. Now it's kind of layered, controlled chaos. And so my apologies if that disappoints you. And so it kind of disappoints me too. And so we're in the same boat in that regard. But Wanderer says, I opened some Jade Lizards in CELH. I believe that is Celsius. That's the Errol Coleman jam. I believe. Yeah, Celsius. Check it out in the monthly. It's not too shabby. And all right, let's take a look at that. So in the monthly, so we go to, no, come on, Wanderer. I'm not going to fall for this. Look at this. You're trying to lead me right into a trap? Man, if I didn't have the video up, you may have been able to do so, because it's like we're only doing audio. It's just the sultry voice. It's like whatever. But now that I've got everything, I'm fully equipped. Wanderer, I can't do it. I can't do it. You've got earnings on November 5th. I've got to pass on this. Maybe we'll do a little something for earnings here coming up soon, which I guess would just be next week. But I'm not going to do it right now. So remind me next week, and we'll do some Celsius potentially next week. And so, but I appreciate you, my friend. Let's see. Joe YQ in the house. What's going on there, Joe YQ? I appreciate you. Oh, Wanderer says decent floof. Yeah, I would say it's a B-. It's a B- amount of floof. Wolf says, Dr. Jim, happy Friday. For some closure, you and Autumn need to grab a large chips and guac from Chipotle this weekend. What's another $8.50 to the cause? Yeah, that's the problem, man. Like, that's the problem. The prices have just they've gotten out of control everywhere. The problem with Chipotle is you got to have a decent product to back up those prices, and I don't even know if they've got a B- product. I think they're kind of in the C range. I think they're kind of a solid C to maybe C+ on a good day. And so that's tricky. Like at a certain point, you got to bring the bacon home, right? You got to do a little something. They don't even sell bacon at Chipotle. What is Chipotle doing today? Down another $1.23. Look at this stock, man. That's crazy. Man, this thing is really, that's pretty wild stuff. And so Chipotle down to $1.23. Wow, that's really, really wild. And so let's see, Brian Dowdy, hello, happy Halloween. Thank you for Apple and Amazon. You are welcome, my friend. Again, I know Brian Dowdy takes the opposite of my trades. And so we're in a good spot. Let's see. Dana says that does it. I am trading in my iPhone for a Nokia flip phone. I have a wonderful weekend, Dr. Jim. Yeah. So Nokia is up today, I imagine. So let's see here. Nokia. Oh no, it's down 27 cents. Okay. So, I know Nokia has been kind of in play lately, and, it's been up and down and doing all kinds of crazy stuff. And so, but that's pretty funny. The Nokia flip phones, man, you're taking me back. You're taking me back to like the BlackBerry days, right? Like you are 100% taking me back to, wow. Yeah. Talking about yesteryear. That's really something. Let's see. Wanderer gives it a 7 out of 10. Yeah, I don't know if I would give it that much, but I appreciate you. Let's see. Old Two-Face says, hey, Dr. Jim, just wanted to thank you for trading Apple and Amazon to the downside. Really helped my own trades. Man, you are welcome. You are so welcome, my friend. Again, I'm here for you guys. Don't you guys ever forget that. If we drop a video, it doesn't change. If we drop the audio, it doesn't change. If Autumn doesn't pay the internet, it doesn't change. I am here for you guys. I'm doing all that I can possibly do. So again, take the opposite of all my trades. When they are directional, take the opposite. Now, when we're strategic, we're selling premium, like we're kind of dressing it up, around a lot of normal distributions and leptocurric distributions and all this other stuff. Maybe we've got a little value there, and some merit on our own regard. But when we're taking a directional stance, I don't know if I can make it any clearer. I really don't know that I could. Brian Dowdy says, I feel closer to financial freedom. You should, because you are. Let's see. Lobo Doe says, Dr. Jim, scary decorations keep evil spirits from entering your home. Yeah, I think it's the exact opposite of that, actually. So I'm going to fade that comment 1,000,000%. Armenian Muscle is, wait. Isn't Armenian Muscle Lobo Does? And Lobo Does and Armenian Muscle are in the chat as two different people? Wait a minute. No, Armenian Muscle was Lobo Does. Like the avatar for Armenian Muscle was the avatar for Lobo Does before. So this is interesting. I appreciate you coming in as two different people, though, because YouTube is going to think these are two independent comments, and then it's going to pump this out to more people because of that. So thank you, my friend. But let's see. People actually celebrate Halloween. What exactly are they celebrating? That's exactly my point. Nothing good, I would imagine. And so Ordenu says, the doctor is in the house. As always, Dr. Jim, teach us what to do and not what to do. Yes, I'm going to So it's not even like we have progressed way beyond a do as I say, not as I do type of thing. We have progressed to a do as I say and do the opposite of what I do. So it's not like don't do as I do, like to completely ignore it and don't pay attention. No, you want to pay close attention because you need to go ahead and manufacture the opposite trade. So pay very close attention to what strikes I choose, what side of the market I might be on, so that you yourself can take 6 to 9 to maybe 12 to 18 months off of your pathway to financial freedom. And so again, I'm here for you guys. Don't you guys ever forget that. Ashfin in the house. Time for the good doctor. Let's go. What's going on there, Ashfin? I appreciate you, my friend. Very, very much. Let's see. Old Two-Face says, in all seriousness, oh, man, here we go. Man, you guys are getting me. You got to make me all emotional now. Look at you guys. Look at Old Two-Face. In all seriousness, you're the reason I got into options and active trading. I can't thank you enough. Man, I appreciate you. Wow, thank you so much. That makes me feel amazing there, Old Two-Face. I appreciate you. And of course, I'm going to send you the cash that we agreed upon for you putting that comment in the stream at this very time. So thank you for not forgetting that. I will send you that cash. I mean, I wouldn't wait by the mailbox necessarily, but it's on the way. But thank you, my friend. I really, really do appreciate you. And that really, that means the world to me. It means the world to me that I've been able to play such a part in your learning options and active trading. And that's really cool, man. So thank you so much for sharing that with me. Ranch says, did someone say IonQ? That would make me, or IonQ Rocket, that would make me happy. IonQ. Yeah, you guys have brought this up a couple of times. I don't remember. Okay, so IonQ. Oh, they've got, November 5th looks like a big day. November 5th. What's going on next week? Yeah, I haven't traded IonQ before. I don't think they're, my friend, Ranch. But let's take a look at a watch list. Yeah, let's pull up Tom's watch list. I mean, it's whose watch list? But let's pull it up. It's got some good names on there. And so if we go here and let's see. Yeah, okay. So we've got, I mean, if you look at next week, there's still some things happening, right? You've got Shopify. You got a little Shopify on November 4th. That's going to be what, Tuesday? That's November 4th before the bell. Wow. So we could do that on Monday. That's fun. We got Uber on November 4th before the bell. So there's 2 that we could do on Monday. You guys need to remind me of these and we'll try to get to these. You've got AMD. Well, look at AMD, man. They have just been Johnny Blaze in the last couple months. I mean, AMD is, I remember when AMD was like 80 or 90 and I thought that was high. Now it's 250. And so, man, that's pretty crazy stuff. They're November 4th after the bell. And then you've got, you've got Beyond Meat. Seriously, they're still in business? That is unbelievable. $1.58. Look at this thing. Look at this thing. Beyond Meat, $1.58. They have earnings on November 4th. The last earnings, I would presume. And so, yeah, I'm not trading Beyond Meat, but I'll let you all kind of play around with that and let me know how it goes. But Beyond Meat, $1.59. Then you've got AD&T, whatever they are. You got McDonald's, right? Speaking of Beyond Meat, I mean, they've been putting some fake stuff in there for at least 4 decades. McDonald's is on November 5th before the bell. And so, yeah, we got a lot to do next week. And then, of course, some of these other stocks, IonQ, and then Celsius, I guess, is also on November 5th. So we may have a busy week next week from an earnings standpoint. That is if I ever trade earnings again. I'm not sure. I got to think about it over the weekend because there's only so many stacks of cash. Like, you can only burn so many. Like, you guys may think I have an endless supply, but I actually don't. And it's like, not only that, but the cleanup. It's like the ashes and you got like the black marks everywhere. It's like, man, I don't really want to have to mess with this just over and over again. And so let's see. But Margin Walker, what's up, Dr. Jim? Appreciate all that you do. I learn a bunch every time I'm here. Cheers, bro. Thank you, my friend. Thank you so very much. Armenian also says, fading you is a guaranteed winning trade. And I'm not joking at all. I really hope that you aren't. Again, it's not like I started saying this today or I started saying this week. Guys, I've been so consistent about this. I've been so consistent about this from day one. You can check the tapes. Like, go all the way back, just like my Colts, right? Just like my love for Daniel Jones. Check the tapes, man. Check the tapes. It's been there from day one, right? And so same thing, be on the opposite of my trades. I'm trying to help you guys out. I'm trying to make you guys some money. And that's how we do it. And so let's see, Ranch, howdy, Dr. Jim, what's up? The Preston in the house. Dr. Jim, it's a calf and forearm day. That's what I'm saying. It feels like a calf and forearm day. Today is one of those days where it's like, man, what am I training today? Serratus? I need a little serratus work today. Maybe we'll mix in some calves and some forearms, like superset style, and that should be fun. But the president says, let's go. What are your thoughts on SWK? You rock, my man. Man, I appreciate you, my friend. SWK. Let me think. SWK. Stanley Black & Decker. So is that like the Black & Decker, like the power tool line, I would imagine? That would be my guess. If it's something else, then I'm completely lost. But do they have earnings coming up? Let me see if they've got earnings coming up. If I go to, yeah, they've got earnings coming up next week. So I'm going to pass on Black & Decker because they have earnings coming up next week. And so I'm going to sit tight and I'm going to do nothing on this simply because they have earnings coming up next week. And as you guys know, I don't typically like to do trades where there are earnings coming up in a couple of weeks. To me, or even a couple of days, I'd rather wait until the actual release of the earnings. I think you get a better, you're able to situate things a bit more accurately. You're able to more finely tune kind of the strike selection and things of that nature. So I'm going to wait on Black & Decker. I may not even trade it at all because I didn't even know it existed until 30 seconds ago. And so, but I appreciate you there, the Preston. Let's see. Brian Dowdy, S&P selling off this whole day, Dr. J. I know, that's crazy. They've been weak the whole day, and now they've kind of got a little bit of a bid underneath them the last little bit here. I feel like a lot of the Fridays. Well, there was that one Friday, a couple Fridays ago, when they dropped 1,100 points. The NASDAQ did. So I guess you have to leave that Friday out of it. But I feel like there's been a lot of Fridays that have been strong going into the close, strong going into the weekend. Maybe that's just me kind of misremembering and just kind of making things up. It certainly is something that will happen from time to time. And so, but that's how my memory kind of is recollecting previous Fridays of just the recent past. But let's see. Sergio, let's go, Dr. Jim. What's going on there, Sergio? Thank you, my friend. Let's see. Theta Trader, it's fine. I sold BRK shares at a profit and converted to the 495 put at the money. I cut my delta in half, so even if I take assignment, I'm up 1,000 compared to holding static shares. There you go. It's just a great strategy, right? I mean, this is what makes having some long share or even index fund exposure alongside an active approach with options and derivatives, even if you're using futures too, of course. This is the best solution. This is the, I hate to use the word optimal because I don't think optimal exists in the marketplace. I think it's always gimmies and gotchas. It's very rare that you find something that is truly a point of optimality because there's too many other things happening. And there's too many things that you have to take into account that only apply to you personally. Experience level, account size, schedule, return projections. Like, what are you even trying to get out of this? Like all those kinds of things. So optimal for one will not be optimal for the other. So I really don't like using that word. But I will say that a marriage between kind of some passively invested long assets and some actively managed assets really makes a ton of sense. And I've been saying that since day one. I've been saying that from the very, very, very beginning. And so I think that's going to be a really, really good combination. And so what I like what you did here, though, Theta Trader, is you had the static shares. You obviously liked the company. You want to play it to the upside, whatever. That worked out. And then you converted back into a short put, which is like, okay, I'm still going to be able to share in the upside in the stock, but I am cutting my directional bias in half, right? Because obviously an at the money short put is going to be about 50 delta. So I'm cutting my directional bias in half. I'm still playing the upside, but now I've improved my break-even point. Now I'm giving myself multiple ways to make money. I won't make as much money if the stock keeps running higher, but now I'm giving myself more ways to make some money. That's what's great. That's what's great about kind of having, the combination of some passively invested long assets and also a more active approach. And you didn't even necessarily say that the BRK position was intended to be a more of a passively long investment. Maybe it is, or maybe it isn't. But I know that, for so many people that are watching the show right now, I mean, there's 500 people watching the show. I know a good chunk of you have a lot of assets in a passively long type of retirement thing, index funds, whatever else. I think that's fine. I think that's amazing. I think that a lot of people, though, you shouldn't stop there. Like, I wouldn't stop there. I would have some active approach to what you're doing as well. Now, you can decide how you divvy that up. That's totally up to you. It could be, I've seen it done a number of ways. I mean, you could obviously go 50-50. You could go 80% passively long, 20% active manage, 90% passively long, 10% active manage, 60-40. I mean, whatever. The options, pun intended, are truly endless. And so that's what I love about the flexibility of the markets and the flexibility that options and futures give you that static long shares and index funds just really don't give you. And so I know you didn't necessarily ask or comment about anything I just said there, Theta Trader, but it did kind of get me going off on that tangent that, hey, that might even be a worthwhile tangent, which most of the time I can't say that about most of the tangents that we actually entertain. So that's an uptick for sure. Juan Veloza says, hey, Dr. Jim, I had a dream. Oh, the meta dream. Yeah, the meta dream. Yeah. That's pretty funny stuff. Brian Dowdy, also known as Half Z17, says, yeah, how is our realized P&L now? Oof, we need to finish green this year, Dr. J. Yeah, I mean, we're obviously getting beaten up today, pretty bad. I mean, you guys can see. I mean, obviously, there's your Apple and Amazon, right? I mean, there's the aftermath, the collateral damage, but we're still hanging in there. We're hanging in there, and again, I mean, the reason why I don't show this is because I don't want this to be the focus. And I'm making a ton of concessions on the show because I'm not trading in the mornings. I'm not trading around economic numbers when I think there's a ton of opportunity. But it's more important to me that you guys see the mechanics. You guys see the things that I think you should be doing pretty much all the time. But for me, I know when I'm learning something new, or I'm learning whatever skill or whatever thing I'm trying to learn, it's really nice to be able to kind of see all the thoughts and ideas from whoever might be presenting that information. And so that's what I'm trying to provide for you guys. And so when I'm doing well, I wouldn't take that, let's not take a ton of victory laps. I mean, I'm going to take at least one or two. You bet your bottom biscuit on that one. But I wouldn't necessarily just keep circling the bases, right? But then when I'm doing poorly too, like, don't rake me over the coals, right? I mean, the P&L Open Bros, like, they already take a lot out of me, man. They already take a whole lot out of me. And so we're hanging in there. Again, it could be better. It could be worse. I'll take it. And so let's see. Rand says, so what's for lunch today, Doc? Chipotle or bonefish? Definitely not Chipotle. Bonefish for lunch, though. That's a power move, man. Like, bonefish is obviously a romantic dinner type of thing. Doing that for lunch, that's really kind of upscale, man. Like, you're really pushing the envelope of some bougie stuff there. I like that. I like that a lot. Let's see. John Covington in the house. Fade for the ween. Fade for the ween. Oh, yeah. Fade me for the win. Yes, 1,000,000%. Armenian Muscle says, yikes, I agree. Whatever that's in reference to, I agree across the board. Sergio says, Vinny's weekend started a few hours ago, Dr. Jim. Now price for Apple. I don't know what that means. Vinny's weekend started a few hours ago. I can't follow that one there, Sergio. That's probably on me. Away from the numbers, says, hey, Dr. Jim, I had to fade you, executed my first calendar spread on Amazon. It worked at Treat. It worked at Treat, or was that trick? Oh, I don't know. But all I read from your comment is that you faded me, so I know that you're green. That's all you had to say. If you say I faded you, I know that you're green. Now, you may be green a little, you may be green a lot, but you're green. Like, we know that you're green, right? 85% confidence interval that you are green if you take the opposite of me. So nice job, my friend. Very, very nice job. Dan Ducarn, Dr. Jim, I appreciate you, man. I appreciate you. Appreciate me very, very much. Sam L, what's going on there, Sam L? Since the doc sold Best Buy, it's been straight up ever since, all the way to 85. That's hilarious. A pure revenge rally. No worries, though. The one who shall not be named definitely won't step up. It can't even fade the doc. I know what you're talking about. Yeah, we're moving on. We're moving on. But I appreciate you, my friend. Yeah, the Best Buy thing is, that's really, really funny. It's so funny. Like, watch now. I'm not gonna give it the clout to not be named on the show. It doesn't deserve that. So watch Chipotle rally to 45 now. Watch Chipotle going into the end of the year. Like, watch this thing just get on its horse, right? Just powered by those massively sized burritos, just powered by that really, really quite tasty guac. And obviously just powered and fueled by the 5-day-old chips. This thing's going to go to 47 by the end of the year. It's going to be absolutely hilarious. I mean, I won't necessarily be laughing, but it wouldn't surprise me at all. So Joel James, he says, yeah, thanks for the Amazon trade. Yes, we saw that earlier. You're welcome, my friend. Ranch is laughing. John Covington still mourning the CMG with the black tee. Yes, with my black tee today. This is my number one t-shirt. So I wear it 3, 4, 5 days a week. And I only wear it one of those days on air, but I'm going to wear this probably all weekend. I mean, you guys know how it is. Once you get your favorite t-shirt, I mean, you're getting 72 hours out of that thing for sure. Like 1,000,000%. Rats Media, yo, Dr. Jim, those other guys were going to eat Beyond Burgers. No, they weren't. Shut your mouth. I'm not. I'm eating real beef. I have gout today for it. My toe hurts really bad. Oh, I'm sorry to hear that, man. Maybe you should do some of that fake stuff. Maybe you need some of that lab-grown stuff. Like, I don't know how it works. I've honestly never had the lab-grown stuff. It doesn't feel right to me on many, many, many different levels. And I'm like, I don't know if I really want. Do I really want Bill Gates to be the guy cooking up my meat? I don't think so. Like, again, you do you, boo, like 100%. Like, that's what makes a market. I don't know, man. That kind of gives me the heebie-jeebies a little bit. And so I'm like, I think I'd rather go with Colonel Sanders. Like, give me some Colonel Sanders. Give me Ronald McDonald. Like, I know that stuff's going to send me, into the ground pretty quickly too. But I still think it's a better choice than having, Bill Gates be the mastermind of what I'm putting into my body from a food standpoint, or maybe from an anything standpoint. And so Ranch says somehow that makes me feel better. Armenian says RIP. Yes, you're talking about the Apple and Amazon positions. Let's see. Sam L says, Doc, it definitely looks like the robots aren't taking over this year or next year either. I guess we've got at least 2 more earnings seasons before AI replaces the fade doc strategy. Well, AI is going to pick up on it, though, because obviously it's hearing everything that we're saying, and it's just waiting in the water, right, like a crocodile. It's just sitting there, like eyes above the water line, and just waiting to strike. Obviously, it's just gathering information. I mean, you think that AI isn't fading my earnings trades now? Of course it is. AI is stockpiling all kinds of liquid capital to make its move, whether it's next year, whether it's, the following year, whether it's this Christmas. Like, I don't know, but it's certainly going to strike. I mean, I've seen iRobot. Have you not seen iRobot? Like, obviously, it's just waiting to strike. And, I mean, it can't load the dishwasher, but it's going to take all of us down, every single one of us. And so Armenian says, you're a terrible trader. It's okay, bro. I agree. I'm not even sure if I'm terrible. I think I'm actually worse than that. Like, I think you're giving me a little bit too much credit. And so thank you, my friend. Thank you for being euphemistic about it. But let's see. Rets Media, baby, because I can confirm it to you or something. But anyway, go Apple, go. There you go. Old Two-Face. Oh, no. The crash is imminent. Yeah, apparently not. We're rallying back, steamrolling into the weekend. Armenian Muscle, you can't beat them. Join them. Time to take the other side. I think it might be time to unleash the George Costanza strategy. But hey, you've got to tune in next week to find out. Like, you've got to tune in next week to find out. I may have a video. I may not have a video. You have to tune in next week, and you will learn all these things and more come time Monday of next week. So I'm done. I'm out of time. I got to roll. Guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, train them heavy, and stay grateful. See you guys on Monday.
It doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering and Trade. I'm your host, Jamal Chandler, and I got the man himself, Errol Coleman, a.k.a. Mr. TikTok. What's up, bro?
What's going on, Jamal? What's going on, brother? It's Friday. It's been a good week. It's a little sunnier today, but it has been getting a little chillier. It is Halloween. You and the kids doing anything today?
Nah, man. And it's only Singler kid. He's already out, man.
Even getting the bowl together with candy, even that.
So he had school, but they only had a half day.
Yeah.
And he hit me up. Like, actually, I was in the middle of OTCL, and he texted me. He's like, just so you know, I'm going to be out the rest of the day. I was like, okay, all right, cool. Yeah. And I was like, well, what about like, aren't you going to come home and get whatever you're going to throw on? He's like, nah, I'm good. I already got it. Like, I'm out.
Okay.
All right, cool.
All right,
so.
cool. Yeah,
the only thing we're telling him is like, I mean, it's Halloween. It's a Friday Halloween, you know. Yeah. Things get a little wild. He's on his bike, so we're like, dude, just be careful.
Yeah.
Like rolling around, but he's kicking it, man. So
cool.
We have like, I think we got invited to like maybe a Halloween party. I don't know if we're gonna go or not. We'll see. Me and the wife, but that's about it, man.
One of those judgment calls with you and the wife. It's like, we feeling it? Yeah, nah. Kind of one of those things last moment.
It could be one of those. We'll see. We'll see. I mean, it's been a long day here. It's been a long week, like a good long week, like you said.
Yeah.
So I don't know. I mean, I'm down to do something. But what about you, man?
No, it'll be a good weekend. Honestly, I don't have much planned. I know a friend was gonna fly in. They're gonna be in and out pretty quickly, so I don't know if we'll get the opportunity to catch up. But other than that, nothing too much planned. I'm just looking forward to the weekend.
I mean, do you typically do anything on like a Halloween?
Honestly, not real. I mean, not this year at least. I mean, I have in the past, did last year, hung out with some more friends. I mean, I'm kind of in a new city now. I haven't done too much connecting out here. So I think it's one of those things. I have more peers rather than like very close friends, if I'm being honest so far, just because I've been focused on stuff in the studio right now. So in that regard, I think, me and my girlfriend, we might just go out, enjoy, maybe get some hot chocolate, do something like that. Maybe a pumpkin spice latte, something like that, something festive.
You say a pumpkin spice latte.
Festive.
I mean, I asked because it's like, so when I was coming up, I didn't really do, I mean, outside of like kid stuff, like I'm talking like adult stuff, right? Like I didn't really go out on Halloween like that. And then I went to Wisconsin for grad school. And bro, I mean, again, I was at 22. From like 22 to 30, I was in Wisconsin for grad school. I went to Wisconsin for grad school, and bro, I didn't realize like how people can get down. Like Halloween, there was an event.
Oh no,
like,
trust.
Straight up event.
I believe it.
And I did that for years. And I'm just wondering, like now, I mean, obviously, like, it's a night you can go out, kick it, have a good time. Like a lot of people, you don't even have to like. I mean, I'm just curious. That's why I was wondering what you would be doing, because like I feel like a night like if this were me.
No, it usually is though. It usually is. That's what I'm saying.
Friday night, Halloween. What?
I'm saying it usually is, and that's why this year is a little bit more unique in the regard of a lot of things are new location, all of that. So it usually is good vibes yearly.
Yeah, usually
no doubt.
It usually is. How's the trading week been?
It's been a little slower on my end. Today was one of the first days I actually got on, I'm Mr. NASDAQ over here, but I got on a NASDAQ position for the first time this week. I have a short on. My average entry is 25,980, which is pretty much where we're sitting right now. I'm just looking to target the day's lows or the previous day's lows. I got a stop loss in there too, so we're going to let this one ride for the next, we have about an hour left of market open. We're going to let this ride for the next hour. If we take out the day low, that'll be awesome. If not, that was the only NASDAQ trade. It was really slow, choppy. We're at all-time highs, and on top of that, we had FOMC on Wednesday. So I was being patient, letting the market digest all that uncertainty. And yeah, first position of the week on a Friday on NASDAQ at least. So it's been slower on my end, long story short.
Yeah, I mean, it's definitely kind of been some of that. I mean, it was a busy week. I mean, you can see like just a little bit ago, you can see all the positions I have.
Yeah.
But it was a busy week for me.
In terms of your position, what was standing out the most? I know you got a lot on there, but like, what's catching your eyes the most?
I mean, I played those a lot of those 5 Mag 7 names that had earnings this week. I definitely kind of had a position in most of those throughout the week. I even did more afterwards. Like Meta fell. That one didn't work out for me, but I'm still like I actually reinitiated some calendar call spreads further out. D-Snove. It's starting to feel like a lot of my book is a D-Snove calendar call spread. Like I have a lot of those on. I kind of like playing those. Let's see. Actually, there might be a couple of things I might need to close. I'm not exactly sure. I thought I had something a little while
It is
ago.
21 days for some position. I forget what cycle we're in, but I know I had to make the decision to either roll or manage a couple today.
True, that it was that week too, right? It was like a lot of roll week. I actually did a bunch of that over the last couple of days.
Okay.
There's some things that, man, it's crazy, man. I think I've told you this before. Like, one of the things that I think I messed up a lot of times as a trader, I wasn't always that patient. And I'm trying to be better at being that. Like, case in point, this Oracle position, this strangle. Wait, hold up.
Oracle's been a ride, I will say.
It has been a ride
It's been
for
a
sure.
ride.
And I've had a strangle in here. No earnings coming up in Oracle. It doesn't have earnings till D's or something. I had the 253.10, I think. I just rolled this the other day, the 295. And I think this is kind of starting to work a little bit for me, this strangle. It is a 21-dayer, but I'm going to hold. I'm going to break the rule on this one and see if it can bounce back up. If it can bounce back up to like another $10,
yeah,
I think I can actually take this off. I know the IV is 50, but I think most of that is applying to the earnings area. If I had to guess, it's not so much. It's not. I guess it is still actually. Now that I look at it, it's actually 49 IVR. I mean, 49 IV, 50 IVR in the 21-day. I think I just want a little bit more out of this thing. Like it's $900. I feel like I could close this for like $600 by next week sometime. Get another $300 out of this. That would be nice.
Okay.
Same thing with Micron. Like this is another tough one. A similar deal. Like you said, has been a ride. If this can pull back a little bit, I know what I'm asking for is kind of weird though, because this would have to pull back. Oracle will probably pull back too, but I don't know. Oracle's been kind of counter this week. It's kind of fallen most of the week. So
that's what I'm saying. I mean, it's been flipping on me at least.
I'm trying to be a little patient on those. This GDXJ is another, this URA. These are mostly my shorts. I guess what I'm trying to say is I'm trying to be a little more patient on some of my shorts, really. So that's really why a lot of these positions are probably stuff that I don't necessarily have to close yet. I want to wait a little bit, maybe by the middle of next week. Maybe if I'm lucky, I can close some of them out. But it's been a good week overall, man. I mean, I would say like some of those, not all the earnings calendar call spreads work. The Google one worked to the upside. Meta and Microsoft not so much, but I think I've kind of, like I said, I kind of repositioned some of them and went out to decent Nove and because Meta and Microsoft got waxed, bro. Like, yeah. I mean, so I'm just going to try to play those back to the upside and see what happens here. But yeah, I mean, it's the one biggest thing I did is I actually earlier in the week, which is crazy, I closed out. I mean, it's wild that I'm trading strangles in nat gas because I used to be super scared of nat gas, but hey, if IV is high, I'm going to play it. And earlier in the week, I closed out a strangle in here. It was like the 310, 460, I think, which I'm glad I did because it's jumped since then. But now I added another one. I'm short to 330, 510 now in the DECE options expiration, which is the Jan future cycle. So, I'm just trying to find good areas to put on some trades, and that's kind of what I'm sticking with right now. I haven't really changed much, man.
I know you got I peep RJTI in there, IO&Q. Did you have any thoughts on the quantum computing space right now? I know they've pulled back off their highs. They've been consolidating a little bit. Even been getting a couple pops to put on more short delta, which I've been debating, kind of thinking about. But I noticed you had two of those in that portfolio there.
Yeah, both of them I actually put last week when the stocks were, like in the last week or so when the stocks were getting hammered. Yeah. I kind of short put in there and I had to take some pain a little bit, but they've been bouncing back. So I actually rolled them out to DECE, I think both of them. Yeah, I rolled both of them out to DECE because they were already a little bit near the money or in the money, and I rolled out to DECE, and I'm going to wait and hold on them. I know I got earnings in some of these. We'll see. Hopefully they can just kind of bounce ahead of time because, like you said, these things move around quite a bit.
They do.
So I'm just hoping there's more of a bounce. I can close it out, and I don't even have to deal with earnings, hopefully. No. Although now I realize that this thing has earnings literally next week.
What is that, after the bell, the 5th? Okay.
Yeah, and then this one, no, the week after. Next Friday is the 7th, right? Yeah.
2 weeks from now, something like that.
I mean, I think next week is more of the same. A lot of earnings, but no real macro stuff. Like, I don't think we're going to get the jobs report.
We probably won't get the jobs report, but honestly, I'm kind of looking forward to getting out of this FOMC week. I mean, the gap up from last week into all-time highs was just so crazy to me. And then just having to wait for that that was just wild. And then we held the gap all week, so just kind of grinding higher into all-time highs. So I'm excited the economic events will be out the way for a little bit. I know we got earnings, maybe shake some things up a little bit, but it's been a slower week. Maybe that's just my personal projection onto the market right there, Jamal.
Nah, it's true. Yeah. Did you ever watch Ridiculousness?
Yeah. I would say I was never like one of the watching it every time they're airing a new show, but it was one of those that I think was so popular that I couldn't not run into their content. You know what I mean? Give me a quick moment there, Jamal. I think I might have lost you.
You know what I mean? I don't need to be upgraded to pro. I see all the jokes. I see all the jokes in the chat.
He said Jamal ran out at his time limit for the day. He's over on his daily limit. Needs to be refreshed. Change your VPN, get it refreshed.
Her brother just dropped for a second, and you got all kind of jokes. You know what I mean? Like they got all kind of jokes. It wouldn't. I don't even remember what I was saying, but yeah, it's been a fascinating week, man. I mean, these last couple of weeks, dude, like. You talk about, you mentioned those quantum computing stocks. I mean, I still think those are kind of interesting. I feel like the rare earths have dropped off after that meeting in China. It seemed like those kind of dropped off. I don't know what we're going to get back out of those. And then the AI energy names, like the nuclear names, those kind of still seem to be in play. So yeah, it's been fascinating.
No, I mean, again, we still got a lot of plays on the board. I always complain about VIX every single week. But if you do your research, I mean, there are some plays out there that you can get a hold of. So I'm going to continue to keep an eye on some of the quantum names for a little bit.
You mentioned VIX. This is kind of interesting today. I really don't have an answer for it. The fact that VIX is up, 65 cents or so, usually into the weekend, especially if the market's slightly positive, you usually see the opposite effect. But today it's been kind of slightly up. And again, normally I would say, oh, it's because XYZ is on the horizon or something, but that's not the case.
Yeah, no, I mean, the market's down a little bit on the day. It really hasn't made any, not too many directional decisions, but I'll take whatever VIX gives us.
Wow, you got some VIX on right now?
No, I have no VIX on, but I mean, if I did have a position on in VIX, I'd be looking to get long just based off my personal bias to the fact that I would like the market to pull back. Tony made a pretty interesting point, right, earlier today when you guys were on the market measure with Sahil. He had brought up the fact that, if we pull back even like 10% right now, 20%, we're going to be at around the highs from 2022, 2023, 2024. And that really resonated with me. I'm like, you know what, you're right. Like, even if we do get, there's a lot of talks about a bubble and this, that, and the other. And, even if we do get that pullback, it's like what, back to some 2023 levels, back to some 2024 levels. So what constitutes as a significant pullback, considering those factors? But that's what it reminds me of when you bring that up.
I mean, kinda, I guess. I don't know. 10% pullback is 600 bones. I mean, that's 6,100 and change. That's June.
Yeah, June, right? Yeah,
June.
That's crazy. That's crazy. So again,
Yeah.
though, so even just based off of the whenever we get any type of minimal pullback in the market, it does feel like all hell's breaking loose. You feel the vibes on social media. I mean, you already, you see the tweets from Dr. Jim, like if this is the last day, like, you're kind of like, oh snap, we're pulling back a little bit here, and then before you know it, we're at all-time highs. And when we zoom out, it really offers more perspective on we really haven't gone anywhere to the downside.
Yeah, he cracks me up with that, man. He's like, if we pull back, guys, if this is the last,
if this is the last time, just know. Just know I love you all. Like every time, like clockwork. Yeah, like clockwork.
Yeah, that's it. Yeah, he's funny, man. Yeah, I mean that you figure like 680 points back is probably like this high of February, which was 61.47. It's somewhere in there, right? Or somewhere in between the huge June move. Well, let's not forget how crazy June was, May and June.
Let me ask you, Jamal. Let's say, because look, these pullbacks come when we don't necessarily expect it. We get a pullback towards June. How are you feeling? How's your emotional state personally? like how are you feeling if we get down there, right? Like June wasn't too long ago, but I don't know, I might feel some type of way.
How am I feeling? I mean, well, it depends.
I mean, what do you think happens? What do you think Jerome Powell, interest rates, like for us to get down to those levels, what would you think that just happened? Where did we take a turn?
I don't know. That's a hard exercise to figure out, like, why would we drop? Because honestly, I can't see any reason currently as to why we would drop. I'm sure a lot of people would say, well, AI is a fad, and that's why we drop. I mean, again, I don't know if I don't think it's a fad because there's just so much money that's there's earnings, right? Like we just went through all of these different earnings that, the Googles, the Metas, the Amazons that talked about all of that stuff. And I don't know if that's the reason. I think the reason, well, it could be related to that, right? Like the market might be a little bit overinflated on expectations for future earnings in AI. I think maybe that's the one thing that causes us to drop at some point, besides some other unknown geopolitical or whatever risk.
Yeah.
But to answer your question, like if we got to 6,100, I'd be like, okay, awesome. Like depends on the fashion in which it happened. Like if it happens,
some context.
If it happens like it did here. Like it did here in April. Like if it happens in that way, that's a rough time. Again, I think I kept talking about this in April. I was a little proud of myself because it was one of the few times where I had a little bit more discipline. I actually had capital to trade in the days where it was scary to trade, and I've learned that that's a valuable thing. I mean, because once upon a time, for me, once upon a time. We're chugging along in February, right?
Right.
And the market does this. I'm all in with all of my money right here. That's how I used to do.
Okay.
And then we get this shit, and then I'm like, damn.
Right.
Like I got in too early, right?
Right.
And so I think what I've tried to learn to do now is just sell a put spread or two, and then just wait and then hope I'm wrong. Right. And then we get here and I might sell another put spread or two and be like, I just hope I'm wrong. And if it bounces, I'm pleasantly surprised. If we go lower and like, oh, okay, I was wrong. And so I just try to be better about it. But I mean, when you take this whole move in totality, dude, it's hard to be that kind of disciplined because we had no idea what was going on right here. And we had no idea what was going on right here. And then we thought it was over right here. And then we had no idea what was going on right here. Yeah. So, I think, what we talk about day in and day out about being small, like that's what helps you not get too carried away and get blown up in these situations. Right now, I've tried to, like a lot of the positions you see, let's see, for me, you see more than half my positions are collecting right now. Right. And the other stuff for anything that's long is probably a calendar call spread, or oil is just straight up future long. Most of this other stuff is either calendar call spread or zebras. ETH's a zebra. The stuff that's in the money are zebras, I think, except for Newmont. So, I feel like I have a decent mixture. And then there's some other stuff besides just collecting. Like it's not just straight short puts or whatever. Some of it's a strangle. Some of it's like Micron's a strangle. That's more on the upside. And as it moved to the upside, I didn't readjust. I just left it. And I'm like, I'm just going to kind of be short this call because I need that. in this market. I need a short call that I'm getting beat up on, so that if we do fall, I mean, I have a lot of upside stuff. If we do fall, I have that short call to rely on. Like I've tried to like position things like that, so that no matter what happens, if we go up big, I got stuff that I can take off and I'm winning on that. If we go down big, I wouldn't say big, but if we go down, I have stuff that I can take money off of and win on that. If we just sit, I got stuff that can take money on that.
That's something I'm trying to be a little bit more mindful of, so that I can exercise those so I can exercise some of those options whenever the market is, ripping to the upside or moving, pulling back a little bit, or even sitting sideways. So
yeah,
nice
I used to
takeaway.
want to have like a bunch of stuff on, and like as soon as we got the move, I want to have everything kind of closed. And now I'm getting, I've over the last several years, it's just trying to be more comfortable with probably running mostly a short portfolio that I have a few longs on, because I do, trust me, I like to have longs on things that move. I generally have an upside bias until proven otherwise. And I just try to have a bunch of different positions on, so that just about every day I come in, there's probably going to be something that maybe I can close, or maybe I'm losing on and I just roll it further out. Like there's always a little something. But I'll be honest with you, it's gotten to the point now where I'm probably only doing 3 to 5 trades a day, not as many.
Yeah.
Like maybe 3 to 5 trades a day, because a lot of stuff I have on, I'm trying to be patient with and not be so quick to close.
I hear you. In regards of closing those positions, have you found yourself rolling those a little bit more in this time period of volatility that we've been experiencing, or have you noticed yourself closing positions and redeploying that capital into a new position? Personally,
a little bit of both.
Okay.
Like this week, again, a lot of them in the last couple of days, you see most of the stuff 49 days. A lot of these were just rolled the other day. IonQ, like I mentioned, RGTI, like those are shorts that were basically not ready. It wasn't. I still think they have volatility to them. I still think I could keep them and make more money. I mentioned a little while ago, Oracle and Micron are the same way, but those are strangles, and I'm not about to put on a strangle in an earnings cycle. I just don't want to do that, because the vol's not going to come in for a while. This vol is actually going to come in sooner than later. Again, if I get a $10 move to the upside in Oracle next week, this strangle that is currently $900, I think will be $600 for sure. And then I'll close it, I'm out. And so again, that's the one I'm trying to be patient on. I can already see I wasn't making money on this at the beginning of the week. Now I'm starting to make money on it. And it seems like it's starting to calm down. I think I'll be able to take this off by next week, Wednesday, for an additional $300 gain. Boom, we out, baby. We going to the casino. We going gambling.
Hey, let me know.
I mean, I'll be able to do that.
Well, I'm not
with those.
I'm not doing anything Halloween weekend, so let me know. But I'd seen gold mentioned a couple of times. You got any thoughts on gold before we end?
At this point, the last thing I'll say on that is basically gold is a new trade at this point. Okay. I don't have any bias one way or another, whether long or short, and I think that's because that's what gold is telling me. It doesn't really have a bias at this point now. I'm still short I'm still short vol and GDX and GDXJ, I think, and those are pretty much the only positions I have on. No real directional play. That's just what it is now.
I feel you. I hear you.
Dude, thanks for coming on, man. Good to see you as always.
Always, brother. Thanks for having me.
Have a great weekend. Folks, you guys have a great weekend. Thanks for watching the show. And as always, be smart, be patient, trade them small, trade them often. See ya.
Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. crypto. We got it. We get it.
Hey everybody, happy Halloween. This get-up is usually reserved for big down days, but those don't happen anymore. This is just a costume to celebrate my favorite holiday of the year. It has been, ironically, a really boring week, price-wise. I was just looking, we're basically ending where we ended last Friday. For all the mayhem, the week-long Asia trip, the framework of a China deal, soybeans, rare earth, Meta, Microsoft, Google, Apple, Amazon. Net change zero, nothing. And it's all green, NQ, RTY, YM, ES. About half my shorts are down right now. It was a lot better about 90 minutes ago. The RTYs, which what I'm watching most closely, we broke the trend line for the first time ever, right at the opening bell. And then it went zipping higher, and it fell. And about 90 minutes ago, it punctured it again, and it started rising again. So they're defending that trend line fiercely. I'm staying fully in position, though. It's not going to be the glorious washout that I was hoping at the end of today, but I've gone from like 40% committed to about 150% committed over the course of this week. I've gone from 13 positions to 30. So a lot riskier going into next week, but a lot is going on next week too. Earnings season's basically done. The federal government remains shut down. I haven't noticed. I don't know if you have. My only relationship with them continues to be to send them huge amounts of money and get nothing in return. So that's my gig. Might as well stay shut down as far as I'm concerned. And what else? Yeah, there's no data. No government data out there. I don't know what's going to happen when they finally open. Like, what do they stay shut down for 3 months? Will everything be 3 months delayed? Will it be like in one giant waterfall of catch-up data? I don't know. This is weird times we're living in. I've got some charts loaded, though. I know that. So we can thumb through those and see what has gone on during this paradoxically dull week. Here's the spider. Monday, Tuesday, Wednesday, Thursday, Friday. As you can see, the present price level here is pretty much where we opened on Monday. So I'll correct myself. Monday morning to Friday close, it's net nothing. There was a big leap over the weekend, of course, because of the China framework, because we've all been very concerned about soybeans. But yeah, net from Monday morning to now, an absolute nothing burger. The diamonds, DIA, same deal. 5 days, nothing at all. Lifetime highs on an intra-week basis. But tremendous amounts of smoke and absolutely no fire to be seen. And the small caps, which, as I said, I'm the most obsessed with, is back up here. So here's the trend line anchored to April 7. And we zoom forward and we pierced it for the first time today. And we've got this line here too, which, as I've mentioned, what that represents is the kind of the third time that the small caps have been at that area. First was November 2021, then it was December 2024, and then it was this week. And the past 2 times, of course, it peeled away and down from that. And the jury is definitely out. What's going to happen next with this one? Is this a meaningful breakout? It sure isn't acting like that. It's just sputtering. The peak remains back here. Or is it going to break down? And the reason this trend line is so important is because the breakdown of any trend line is worth noting, but the fact it's below that, half-decade long line is worth noting too. It negates the breakout. But yeah, it is bothersome because I'm watching over here the RTY futures, and we have rallied pretty much nonstop from 1:30. I'm having to translate because it's 10:30 my time, but 1:30 EST to this very moment. So we're approaching the highs of the day right now. So that, yeah, like I said, that trend line is being viciously defended. Overseas, this is going better. EEM remains my biggest short. It's down a little, about 0.3%. It peaked on Wednesday and is inched down now that the hope and excitement surrounding this Asia trip are in the rearview mirror. And speaking of China, FXI is down harder, 1.22%. Now, the recent peak on this was actually way back on October 2nd. And here we're approaching the last day of the month, and we're well lower than that. So it's definitely down for the month. And over the past couple of days, this was Wednesday's peak. That was sort of peak excitement and optimism, down and then down like so. So this is very different looking than, say, the spider, because we're actually in the neighborhood of this plunge a couple of Fridays ago, whereas the spider, it's long past. What else? Well, individually, I mean, I'll just show one Chinese stock. That's Alibaba, BABA, and very much the same deal. The peak right here was back on the 2nd. It's right near the beginning of the month. And here we are right now. So Wednesday, Thursday, Friday. So it's also interesting, you know, to date, it's been like 90-day extension, 90-day extension, 90-day extension. This time it's like a whole year, which is good because that'll just put it off the docket for a while. Because every time they have this 90-day thing, as you approach it, there's all this sort of tension, but also all this optimism and hope. As it is now, it's just sort of irrelevant for a year. They always kick the can down the road, but this time they put on their steel-tipped boots and really gave it a good whack. Now, the two big earnings last night were, of course, Amazon and Apple. And so the day prior, I was 3 for 3. Yesterday, I was 0 for 2. I thought, and who knows where they're closed, but I thought that post-earnings, Apple would go up. Okay, well, let's be fair. Apple is up. Okay, so that was right. Amazon, though, I thought was vulnerable to sinking, but it shot way higher. So here's Apple. It is up a little, 0.22%. It opened pretty much at its lifetime peak, and it's been selling off slowly all day long, but still, you know, a net gain. But a boring chart. And then Amazon was a real shocker. As we back up here, you can see what had the markings of a very nice topping pattern has been completely negated. And this shows the value of respecting complete patterns instead of patterns that are almost complete, because they can pull this on you. As I said yesterday, I had no position in either direction for either of these, any of those 5 actually. But yeah, this is the sort of thing that could ruin a bear's day. If you're like, oh, I bet it finally completes this pattern. Well, that's a pretty wide speculation. And it did just the opposite. It blasted higher to, I think, lifetime highs, like so. So that was a very strong, as with Apple, you know, it has been selling off for the day. It opened extremely strong, and we've burned off quite a few bucks since then. But net is still a very good day, double-digit percentage return for this mega cap. What else? Well, the cubes, just very generally speaking, they're up. Apple and Amazon being up help. They're up 0.81%. Wednesday remains the lifetime high. Wednesday also remains the closest we've gotten to the underbelly of that broken trend line. The bears don't really have much of a chance unless we can get below this line. That would completely negate this breakout. As it is now, we're just kind of hanging out here in the ionosphere, way up high. And SMH, always important, semiconductor index. This peaked lifetime high on Wednesday, blasted above the wedge, slipped below it and back into it on Thursday, and has remained completely inside the wedge today. So at the moment it's up a little bit, but Thursday and Fridays you can see just kind of hanging out back within the confines of the wedge. And as I said, with the cubes, the bears really don't have any meaningful hope of gains of any note unless we can break below this horizontal, which is going to take some doing. Within the semiconductor world, AMD, lifetime high remains on Wednesday. We're still way up here. And even if this bull market remains intact, there's plenty of downside without busting the bullish breakout. So I'm still short a lot of the stuff, AMD, MU, SMH. Here's MU, speaking of. The peak on this one was on Wednesday. These are all exceptionally highly valued from a fundamental perspective. Not that it really matters. I mean, I was mentioning yesterday, Tesla's at like a PE of 300 plus, and no one seems to care. As far as precious metals, gold is really mellow today. The front month is down 0.18%. We have spent the whole week just kind of hanging out in this consolidation zone. Everyone's wondering whether it's going to A, push off this little dish right here and then resume its bull market, or B, break down further. I'm hoping for the latter, not because I'm positioned in any precious metal, but because I would like for palladium to get it cheap again. Who knows if it'll happen or not. Palladium itself did seal this gap. I'm leaving that just as a sort of a historical footnote there. So on Tuesday, it opened below the gap, so that's sealed up. My desire is for it to get down to this gap, which is around 115-ish, and find a happy home above all that massive support beneath it, which I think provide a wonderful foundation for a longer bull run. So, as I've said before, it probably doesn't matter. I mean, if I think this thing is going to be vastly higher in a couple of years, why not just buy now? Well, I'm being thrifty, I guess, a little more risk averse. This hole right here concerns me because it blasted through that very, very quickly. And when you have price action that fast, it's just as easily goes down as goes up. There's nothing to support it if we do break below that, in my estimation. Crude oil is also pretty blasé. It's up about 0.5%. Long term, still think this is vulnerable to a failure at that green line, but as it is now, it seems to have found a very happy home hanging out right where it is. Although I will say XLB Materials, which is an ETF short idea offered about a week ago, that's worked out nicely, particularly on Wednesday. You can see how this has tumbled sharply lower and is now, it's kind of completed this pattern right here, but this is a very vacillating creature, and so I'm not going to pursue it. But at least that trade worked out nicely over the past week. What else? Oh, just a few. Like I said, I got a ton of shorts. I got 30 different shorts. A few I like in particular. Cognix still looks really good. CGNX. Also Global Payment Network, GPN. Even on a day like today, down another 1.4%. So that's working out. Carvana had a terrific slip yesterday. It's basically unchanged right now, but it did pierce a little bit lower today, but I'm holding on to this one for the longer term as well. IBM, even with very strong tech and Amazon and Apple, IBM is down. I shorted it on this day with a shooting star. And one last one, actually a couple more, Roblox. This continues to do nicely. It's up for the day, but it opened very strong and has been losing that strength all day long. So big red bar there because the present price is lower than the open. And I'm not in it, but I will say Meta continues to get hit pretty hard. Bearish engulfing pattern on this one, and the prospect of much lower prices to come there. So just to wrap things up with my hang up on the small caps. On the one hand, small caps have fractured the trend line, but they're presently and almost certainly will close above it. And they have not broken this horizontal, which is the really important one. So until that happens, this thing is still in bull mode. All right. Well, happy Halloween. Happy trick-or-treating to those who celebrate. And have a good weekend. I'll see you in November. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now. exclusive to new Tasty Trade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we are back, my friend, and it's time for the last call. Thank you for allowing me to come on with you guys. Thank you so much for making this kind of a scary Halloween there. I don't know if you got scared yourself. I know the market was trying to put a little bit of a scare in all of us. Even the S&Ps opened near their highs. They were up around $45 for most of the night last night, where they are right now. But as you can see, we had quite a range here, down to 68, just under 50, which is about 40 handles lower than this. And we got all the way up to 69.18, which is about 25 handles higher than where we are. And a steady day of rotating markets. The Russell was weak early on. It strengthened up with the rest of the four indices. The Dow was actually red on the day. NASDAQ was a leader by 1.5%. It's only up about almost 1% now. One thing that everybody wrote to me today was volatility. Talked about volatility this morning.
Yes.
Staying bid all day long into the weekend. I did not think volatility would come down. I certainly didn't think it would flirt with 1965 today, because I didn't think the market would turn around as much as it did today. But it certainly felt like volatility was going to stay bid with the amount of capitulation and tweets and earnings. And the earnings have been pretty good. I mean, if we had a time to go down, it was yesterday, right? I mean, what did you think of today?
It's a very interesting thing happening in these markets, and of course, always a pleasure to be doing this with you, because the wealth of experience summarizes basically the many thoughts happening in my head in such a very efficient way. I'm looking at these markets and I'm going, wait a second. If you look at a ticker and you go, S&P is up 0.3%, and it's kind of been there all day. And NASDAQ is up almost 1%, and it's been there all day. And you go, okay, it's a normal day. What's VIX doing? And then you go look at the VIX and you go, wait, one of these is not like the other.
Right.
And there's this interesting thing that then happens because when you go to the NASDAQ chart, you start to see the price action is a bit of a tricky thing because we're up, but we're up because we had a gap open. If you look at the intraday candle, it's down a little.
Sure.
So we're up relative to yesterday's close, and I mean, frankly, if you look at Amazon shares, you know why. They reported overnight, obviously. Amazon looks incredible. It's a huge, massive rally. But what else is going on? It's like the old Eddie Murphy stand-up. What have you done for me lately? And this is really it. I mean, we had some nice earnings. Apple was expected to do well. They had some early reporting that iPhone 17's sales were going well. That's what we saw ultimately in the earnings. I mean, nobody was surprised. That was basically baked in. Amazon obviously had a massive beat, almost kind of the mirror image of the Meta miss a day earlier. Meta had a massive miss. Amazon had a massive jump. So where are we on the Mag 7s? Meh. And that's what you see with NASDAQ here. And so it's kind of curious because all of the potential kind of boogeymen that were out there this week, we had the Trump-Xi meeting, the Fed, really the first kind of batch of big tech names. You had all the opportunity, and the market clearly came in Monday and said, we're priced for perfection, and everything is going to be fine, everything is going to be cool, worry about nothing. And then you started to see that kind of, and I think we're seeing it here, this kind of slow, okay, if we're priced for perfection, what else are you going to give me that's going to be any more right? And is everything now stacked on the side of any news headline, anything that happens is now asymmetrically wrong? And then the Fed pulled the rug, and we can't get anywhere on these earnings today. We're just kind of idling. And vol is up, and you start to go, wait, what are you doing here? What's going on?
Well, I mean, I think you got to give a little credit to Netflix too. Netflix up $32. You got a 10-for-1 split coming. We talked about on the show how typically when they go through a split like this, they always go higher, and it opened at 105. It's 121. They don't always go higher. That just seems to be the way that it does happen over time. And it was a nice little scoop there, even after opening high. You mentioned Amazon 34. Coin is up $20. Reddit is up $15. MSTR up $13. Tesla up big. Robinhood, after selling off yesterday, comes all the way back. It's got earnings next week to 147. I think Robinhood comes back on the heels of Bitcoin making a little bit of a play too. Bitcoin up to 110 and change, still languishing.
Yeah.
But up today. Bonds become a non-event, right? Just trading around.
Very interesting what's happening at the long end of the bonds here, because obviously the Fed came out this week and threw a grenade at everybody and said, it was interesting. I love it when Powell gets feisty. When he got up there, it was like, okay, so I know I come up here every time that we do this, and I tell you the next meeting is not preordained, and we're going to look at the this and the that, and everybody be cool. We'll let you know when it's time. He's like, I know I do that every time. I am saying something more than that here. Please believe me. December is not a foregone conclusion. Far from it. And everybody went, wait, what? And you had a massive sell-off in the bonds. I mean, the dollar's been running.
Dollar's been strong, right? I mean,
dollar's been running across the board. And you had the long end hold up much better than the front end. And you get this sense looking at ZB that there's a very different thing that's happening in ZB versus, let's say, ZT, ZN. So the 2-year, even the 10-year. You get the sense that maybe the long end up move that we've been watching for months now really since basically mid-May, that's holding up much better and has room to continue. Whereas you look at some of the closer maturities, it's much weaker. And we've talked about this over the past couple of weeks, this idea that the Fed doesn't really want to cut as much as the markets want them to cut. And what that may mean as we look forward is the cuts get pushed along the maturity curve. So the long end stays up.
We have the highest interest rates of our allies.
We certainly went later. Our inflation situation was different. Inflation fell apart much faster in Europe, for example. And so the ECB went faster. And you got to give a lot of credit to the American economy, which has rebounded much stronger than Europe has. China has been stuck in deflation mode for basically 10 consecutive quarters. I mean, that's horrible. That's an economy without the demand of any kind at all. So it's not surprising that we went late. We had more inflation because our economy was just more dynamic and stronger coming out of the lockdowns and everything like that.
Just to switch the gears just a little bit here, talk about some volume that's going on here. Even the S&Ps with good volume, 1.4 million cars trading. Tesla, my Taiwanese sources tell me over 3 million options have traded today. The same thing with Nvidia. If you look at that, Nvidia up $1.45. But the biggest one of them all, probably on a percentage basis of normal volume, is Amazon with over 3 million by the time, about 3 million options by the time we close here too. SPX 3.7 million. So people are interested in the market. I mean, is the point I'm trying to make out. There are two stocks that are odd when you see everything up, a half a percentage point or more. Two stocks that I think are a little bit odd that are not up today. AVGO is one of them, up about $5. It's been a market leader, as you can see here, going from, April lows of 150 to 370. And the other one, I guess, would be Microsoft. Now, you could say they're both taking a little bit of a breather, but Microsoft's had a little bit more of a 4 or 5 day sell-off here, but it too has gone from, 350 to 550, basically sitting at 5.
It's kind of at the bottom of its 6-month-ish range. And that was kind of an interesting one because they sold it off right as the earnings came out. And I couldn't, for the life of me, find anything wrong with those earnings. I was digging through them. I was looking at the top line numbers and this and that. And it wasn't clear how they just sold it off immediately. It's not like they went and dug up something in the financials and then came back an hour later or a few hours later and said, you know what, on reflection, this actually sucks. No, they sold it off immediately. The numbers came out. They were good numbers. They got sold instantly. And it's been kind of on the back foot ever since. It's a bit confounding, I thought. Obviously, it didn't have the Meta move, but Meta actually missed and came out with some pretty out there numbers, especially on EPS. So
and Meta back down near its lows where it opened, actually below the lows where it opened yesterday.
Yeah, just getting shellacked here. That one made sense. Okay, I mean, you missed by a mile on the top line number. Fine. Okay, yeah, they're going to sell, but
you pay the price of 100 points. I mean, that's a decent sized move.
Yeah. I mean, I think it's an interesting thing today because I think in our collective kind of mind, Amazon is a tech company, but actually it sort of falls into consumer discretionary as far as like S&P sectors. So when you look down the list, tech doesn't look that strong today, and it's because Amazon isn't in it necessarily, sort of when you break down sectors, but you look at consumer discretionary up almost 3%, 2.7, 2.8, and you go, wait, what's going on? But then, of course, Amazon is in there, and it's up almost 11%. It's an interesting there's some interesting connective tissue between that thematically and what the Fed said, because Powell's whole "it's not a foregone conclusion" song and dance was, look, we don't have economic data that's the most current, but also if we look at, obviously there's a sea of other private sector data out there, it looks like the economy is actually heating up. And when you look at that, you go, okay, so who's doing that? Where is that coming from? Well, goods inflation, as we saw from that special dispensation CPI report that we got last week, it's edging up and it's at the highest in a while. And so, a few years. And so you look at that and you go, okay, so if, and you can point to the tariffs, you can point to strong consumer demand, there's a whole host of things. But if the Fed is saying, look, we think the economy is heating up, don't get all hopped up about rate cuts, and the market doesn't like it, you get the sense when you look at these kinds of numbers from Amazon, it's like, yeah, it is heating up. No, they're not going to get the kind of cuts that they want. So when you come back next week, are you back into some sort of good is bad world where what the market wants is cuts? And if it gets news that the economy is getting hotter and maybe inflation is getting a little bit perkier, that they're just not going to get it. And then you end up with a soggy market that goes, wait, but I really want those cuts, and sentiment starts to get a little weak-kneed.
Can I switch gears on you one because I made a bad call this morning. Oh, not a bad call, but I got it wrong in soybeans so far. I thought today would be a buy the rumor, sell the news. Soybeans opened pretty much unchanged, went a little bit lower. They've rallied back by about half a percentage point. I actually think it's all a buy the rumor, sell the news type event. What do you think of it? Because we all trade differently, and I would love to hear your perspective.
Sure. So for me, especially when you look at the commodities, the price action signal is really, really, really important. And so I try not to guess. With equities, I think there's a little bit more guessing that you're allowed to do, especially if, like me, you've kind of been looking at this rally and going, I don't know, it's getting a little long in the tooth. By no means am I looking for some sort of 08 style collapse or anything like this, but it looks like it's a little frothy. And so when you're attempting to go into the equity market with that kind of a perspective, if you don't wait for a little bit of the price action, but then be relatively quick to go and be small and risk defined and all these things, you're going to miss it. In commodities, it's more of a two-way market. It's less of a biased market. So you can actually let it kind of show you a little before you go. And so in something like soybeans, I hear what you're saying. I just wouldn't be fighting it until it showed you something. And so far, we have these consecutive.
When it opens a little bit lower, I mean, that's right. That was the show me moment for me.
Well, right. So you look at that and you go, okay, well, is this the one? And apparently not. But when you get these kind of moves, I mean, how many consecutive days are we looking at after this gap higher here? I mean, what 1, 2, 3, 4. This is the fifth. Right? So we haven't really had a meaningful kind of a break that would really tell you, okay, it's on. But to your point, we're also just testing the highs. We're not really breaking through them yet. So you may yet get your topping here. It does look a little bit heavy, but I don't like, especially if you look at shorter term, like a 4-hour chart, an 8-hour chart, the intraday price dynamics do look like it's getting a little friction up here around 11:20-ish. But I would want a more convincing kind of show me a 4-hour or an 8-hour bar that clearly kind of breaks with the higher highs, higher lows dynamic. And against that, set up some sort of a risk reward setup that makes sense.
You have any inkling on Palantir, another one of the movers of the market for sure? I've been putting the market on its back too. It was actually Tony Batista's pick of the year at the beginning of the year. We did a little cameo. What stock would you buy if you had to buy one stock this year? I got lucky and said Palantir. Although a lot of stocks
It's a
have
good
doubled.
choice.
What's that?
It's a good choice.
Yeah, well, a lot of stocks have gone up 100% this year, so it doesn't really matter. I mean, you almost you almost, if you picked any of the Starlings, could have gotten just as good, if not better. But you got Palantir up $6 and change. It has earnings coming on Monday after the market closes. IV rank of 36 is good, not great. And do you have any position in Palantir? Any inkling on Palantir?
I don't have a position in it. It's one of those things where if there were a sell-off, if we have gotten a little bit overheated, sort of market wide. I mean, I think you just said it. A bunch of names went up a lot this year, right?
Yeah, sure.
In fact, ever since the lows in April, it's just been a banner year for all kinds of things.
Sure.
Because it's been generally risk on. I like Palantir, the company. I like how they fit into this multipolar world narrative that's emerging, where globalization is getting dialed down and countries are backing up. The U.S. and China are clearly not done with whatever friction this is, and we're going to figure out whatever new balance relationships are going to happen there. Countries are sort of starting to fall into this silo or that. Gold is obviously rallying a bunch, and
please talk to me about gold. It's down $4.80 right now today, but it's had a good $50-$60 range.
Yeah, so I think in my mind the crazy rally in gold is very kind of parallel to why you might want to own a Palantir. Because if you look at how gold has been going up, it's not been going up because the dollar's been falling. The dollar hasn't fallen since July. It set a low in July. It's not made a new one yet since then. It's not because there's some sort of a debasement trade. I mean, that's just wrong. The bonds have been going up for months. If there was a debasement trade and a loss of confidence in U.S. dollar-based assets, we wouldn't have had the past 6 months of the dollar stabilizing and bonds going up. It's just not what's going on. So why is gold rallying when yields aren't giving you the friendly story? The bonds are not giving you the friendly story. The dollar isn't giving you the friendly story. What's going on? In my mind, it's this U.S.-China friction where people go, you know what? If I'm a third country, like a Turkey or a Brazil, if these two are going to separate and I have to do business with them separately, I need to go between. If all of a sudden the U.S. weaponizes the dollar on China, or China weaponizes rare earths on the U.S. again, because this dance is going to continue, I need to go between. And that's why gold is going up. Because if you're going to do commerce in both of these spheres, you need a neutral asset. And so, in my mind, that's why you'd want to own a Palantir, because Fortress America is a story that's going to continue for a long, long time, it looks like. So while I would look at something like a NASDAQ and go, okay, maybe I want to be a little bit short when I get the signal, S&P, I'm already a little bit short after the Fed, just looking for some calming of the speculative froth. If you get a pullback, Palantir would be on my shopping list. If you got a nice discount market wide and there was a kind of correlation one correction, okay, yeah, that would be one that I think is an interesting story for a long time. Gold, I think, was very interesting. It's carved out a nice range. It seems to have stabilized, interestingly, after the Trump-Xi meeting. And that maybe is a little bit of a referendum on the meeting having not produced anything great. Not bad, just not new. They didn't really do anything other than back off from whatever spat they started at the beginning of the month. There was no sort of great coming together and unraveling of tensions in a structural way. So the market's got what they want, but that's it. And so
see gold going a little sideways. That's what I'm looking for. You know, this 4,000 round number, maybe oscillate back. Well, you got good volatility in there at 48. you got good volatility in the market too. Even the S&P is up 25 after being up 40 just about 5 or 10 minutes ago. Volatility 1915 on the futures is about mid-price for the day. But it seems like you before we started, you're like, wow, this is a funky market.
Yeah.
I think what you're kind of alluding to here is it doesn't have the velocity of the upside.
Right.
And obviously we're at or near all-time highs. I mean, we're just off of 6,900. I don't know. Where did we start the week? Did we start the week at 69?
We started the week with a big upside gap because of all those Malaysia talks that Besant was having with Chinese officials, and we basically came into the weekly open with this idea that the Trump-Xi meeting is basically going to be a rubber stamping of a coming together on relieving these tensions. So the market's gapped basically going into the week. We're barely moved on a lot of this stuff ultimately on net. And if you look at the weekly bars on the S&P, on the NASDAQ, especially on the NASDAQ, you get this weird thing where you have this big upward wick on the weekly candle, but ultimately you haven't really gone anywhere.
Mm-hmm. Yeah, we're basically where we opened on Monday, but a lot of movement in between there. And that's what volatility is. That's what volatility
very choppy.
Yeah, and I think that's the way it's going to be. Like I said early this morning, and I did not think that the E-mini S&Ps, after being up 50, were going to be almost unchanged. I did not feel that, but I did feel that volatility would stay bid all day, and you would not get paid for your short premium going into today. But what that does bring is it brings a two-sided market. We had that on Thursday. Nick did a great job on Thursday trading that. Today was another day where you had a good opportunity to trade both sides of the market here. And I think you're going to get, I mean, listen, we're just off of all-time highs. You know, a couple hundred handles down, a couple hundred handles up. I mean, that's to be expected. I mean, E-mini S&Ps, the daily expected move today was in the 30s, 32 or so when we started. The prior week was about 18. So, you know, that's just how much volatility has moved. And now over the next 5 days or so, you're looking at around, let's see, next Friday would be what, the 7th? You're looking at almost 100 handle move in the E-mini S&Ps over the 5 days. You're looking at about 30 some odd points per day, which is, you know, about 40% higher than what we had with volatility at 1910 or so on the VIX futures. It's not like it went from 18 to 25. It's just 19. So you can see how much volatility moves, or how little volatility has to move to get a much greater or wider opportunity in the market. You were going to say something? I apologize.
No, yeah. I mean, I think you're absolutely right. It feels like a kind of transition week where we started the week going, okay, there's basically 3 things that we're looking at this week. I mean, especially in the absence of economic data. There's the Trump-Xi, will they diffuse this thing? There's tech earnings, and then there's this Fed thing. And the markets obviously came in with a big tailwind. They gapped higher. Besant told them, don't worry about the Trump-Xi thing. It's going to be fine. We've already figured everything out. They just have to come in here and do the photo op. Everything else is already good. So the market's like, oh, okay, now we have 2 things, tech earnings and the Fed. And the tech earnings went okay. I mean, Meta, yes, big miss, but Amazon, great. Alphabet, great. Microsoft, I still can't figure out why it sold off. Numbers were fine. So that was okay. And then they needed one thing, it seems like, because they were near record highs. They were very, very complacent. Everything was looking like it was going to be roses. And then the Fed just gave them that one thing. And now all of a sudden it's like, well, if we're already at record highs and the world is already priced in to be as rosy as can be, what else rosy are you going to add into this mix?
Well, I'm going to leave you
become vulnerable.
Yep, I'm going to leave you with bulls and bears make money, pigs get slaughtered. So keep your powder dry. You're going to have some I believe you're going to have some two-sided action. I agree. Some wild swings. That's not my opinion. That's what Volatility is doing. And you did just put that art card up there right now. If you are anywhere near the San Diego area, go to the Music Box on Sunday. That's November 2nd. See the kids, Mike, Nick, Katie. Enjoy the Whiteboard Tour. Portfolio management and trading. Check it out. Go to tastylive.com/events. It's the last time they'll be out in California this year. So please check them out. And if you see Tony from Mexico there, take a picture with him and send it to me, @tastylive. I might even send you some swag. So there you go. Ilya,
San Diego style burrito too. I know we here in San Francisco say ours is the best, but theirs is pretty good too.
That's a deal. I'll find out. I'll ask my son. Thank you so much for coming on the show. Do appreciate it. Even the S&Ps finish up 15. Nothing to see here, but some big intraday movements in a lot of stocks. We'll be back in 90 seconds. No, we'll be back on Sunday. Peace.
Good morning, welcome to Trade Live with IG. It is myself and the scariest man we could find for Happy Halloween, Scotty Bird. You got to tell that story.
Yeah, just to illustrate the puerile and childish nature of a trading floor.